Come on, YouTube. All right. Should be any second here. Okay, is this thing up? Is it showing here? Okay, yeah, showing on YouTube now. Okay, there we go. And that was a long lag. All right. What's going on, family? Peace, power, and profit. It is your brother African Emporium coming before you, financial warriors, today to share a little bit of today's action. We are in the midst of a marketplace today that is definitely trailing on its gains from yesterday. A series of different news events that came out today that, in my opinion, obviously just took a little bit of the euphoria out of the marketplace in terms of investor sentiment. But for the most part, as I've been saying over the past few weeks, Wall Street is still not missing any meals. So evidently, today's pullback in the S&P 500, the Dow, and the Nasdaq, even the oil market, is just more a clear sign that there's just some people taking profit, basically. Right? They're taking a little profit off the table today. Right? No other way to put it. So you got the S&P down roughly about 2.7%. You have the Dow down itself roughly around about 2.72%. The Nasdaq down about 1.79%. And as always, sticking to the theme of how they're pumping up the tech sector, the Nasdaq in terms of the QQQs, they're always down less than the broader market in terms of the Dow and the S&P 500. Obviously, that has a lot to do with Apple, Amazon, a lot of those companies like that, right? Netflix and Nvidia, they just still ramping or holding their gains at a point where they're not really feeling the heat, right? They're not really feeling that heat of the market pullbacks. With that also being said, we have Tesla, which is still up to date after receiving another upgrade an upgrade yesterday from Goldman Sachs. They're late to the party, coming from a week or so ago when the stock just jumped up and ran basically for $400 up to like near 800, dang near it seemed like. And they gave it a favorable upgrade yesterday, late to the party, to try to juice it one more time. Turned out that it didn't happen. It did not happen. And weirdly so, Goldman Sachs officer released their earnings today. Another one of these, y'all know what it is. Right? One of these these thieves, right? These thief institutions, and they bombed on their earnings pretty much. They did horrible, but yet still doesn't stop these guys from still going out there, putting forth this, this baloney face narrative that markets are primed for buying at these price points up here. Again, knowing that there's still a lot of economic uncertainty still surrounding the globe as a whole. So global production value has pretty much came to a screeching snail pace movement value. Not this 100% halt in most cases, but in some places it has. But just overall global GDP is down substantially. So much so that the IMF came out and issued what they seem to be a very grim reality in terms of where we're looking at from a global recession, right? A global recession. Right? It's not just relegated back to America only. It's not like, this country is just a standard for everything, which it holds a lot of that precedence in some cases, be it earned or unearned. But the data is starting to show that we're definitely in a place where the markets are, in a very weak place, right? And I see markets meaning the global markets as a whole. It's in a very weak place. Hey, what's going on, brother Matt? Peace, power, and profit to you, fam. All right. And so basically today, again, we're gonna do a little, little scouting a little bit, talk about the market, keep it strictly on the day trade side of things, or investing side of things, or the data, the metrics, all the stuff that's surrounding where we are today. We did have some key data points that came out today in the overall market. Obviously, one of them being the manufacturing number, core sales, retail sales as well, which also showed gave us a very in-depth look at terms of where we are as far as consumers and the ability for us to get goods and things out with everybody sitting down, right, shut down. So what factories are up and running right now to that level, unless they've been commandeered by the Defense Act and the president, right? So again, just basing on the some of the earlier data that came out today. All right, you had it on the biggest ever monthly drop in retail sales in the month of March. Right, go figure. Right, no one was buying things to that level. I would say luxury items. Entire month of March. Right, you had your consumer staple products like your Procter and Gamble, Kraft Heinz. People using stores like Walmart, Target, whatever. So those little smaller items that make up that store, some of those items got bought up off the toilet paper. So that helped a little bit, but for the most part, buying clothing and things of that nature, iPhone, whatever, forget about it. Right. So those numbers fell substantially this month, well, last month, obviously, based upon the lockdown. So it's pretty much saying a set of the data that didn't even include the full impact of the lockdown that has been imposed across the country in stages. So retail sales fell about 8.7%. Right. Retail sales fell about 8.7%. Right. Autos and discretionary items hit particularly hard, right? What hit, obviously, that cars, no one was buying vehicles, no one was buying, motorcycles and jet skis, none of that stuff was happening, right? And if they would, they're going to be buying it on credit anyway. So wasn't like they were just going out there spending real raw data, raw money, right? So core sales, which excludes auto sales, fell slightly better than expected by 4.5%. Right. So core sales are obviously dealing with a lot of the things that, again, you need to have, for your day-to-day existence, so to speak. Right. Not so much the luxury items, things like that. Again, autos, whatever you can say is somewhat of a luxury item if you need to get to work. But for the most part, it's a large expenditure, right? It's a large debt note that people are just not willing to take on right now unless you have it like that. They will find favor in finding opportunities to buy vehicles or homes or wherever, because the interest rates are so low. But again, that goes strictly for that person who was saving for a rainy day, right? And this rainy day where everybody is kind of fearful, that person now can be a little bit greedy and benefit off these low interest rates. These these auto salesmen who are just desperate to turn a profit, slashing prices and stuff like that. So again, right now is the time. If you do have the bag, you can benefit. All right. So just putting that little stat for today. So retail sales definitely fell horribly this past month, coming out of the month of February into March, roughly about 8.7%. And core items obviously fell about 4.5%, better than expected. Right. So there was equally bad news for the nation's factories as well. Again, we talk about whatever little factories we do have left in this country. So industrial output fell by 5.4% in the month of March. And that number far exceeds even the worst monthly falls during the 2008 and 2009 recession. Right. So let that marinate. Right. Let that marinate. Matter of fact, let me post that data point in the back chat. Right. What's going on, family? You guys coming in a little bit. Appreciate you stopping by, hanging out with your brother today. Always humbled and honored by it. So peace, power, and profit to you, Mr. Wingo. Thank you for coming through. Anybody else that may be listening in the back chat necessarily can't type whatever, I definitely appreciate you coming through today as well. Right. And so that's that number on the manufacturing, right? Manufacturing index that pretty much showed us that whatever, again, little factors we did still have, they're suffering, right? Again, auto factories, whatever whatever textiles we may have out there, things of that nature. But again, what's more important in that whole point is that, again, it far exceeded even worse monthly falls during that 2008, 2009 recession when the market was crashing and tanking. Right. So again, another stark reminder where you have to be, understanding what's really happening in the broader macroeconomics and things. When you're hearing these people on Wall Street telling you that everything is kind of fine because, we're about to go back to work, possibly because Trump want to put people back to work right away. And, they're just buying markets up, buying these stocks up as if, again, they turn it into profit. But here, this data point is clearly showing you that nobody's manufacturing nothing, right? Nobody's spending money on, polo shirts and, and whatever your little favorite little designer is and iPhones. So how is it that these stocks are up again 20, 30, 40, 50% off the lows, as if they're, they just been, game busted, selling products out the door. So it's an asset inflation heist. It's a Federal Reserve asset inflation heist where they're pumping money into the markets. Banks like these J.P. Morgan, Citigroup, Bank of America, Wells Fargo, all these other institutions are taking that money and buying stocks with it. They're not making any money off interest rates because interest rates are double low, right? We broke that down a little bit yesterday. So basically, they're just making money off what? Buying and selling stocks, pumping stocks up that don't deserve valuation that they are at, and they're making money off that. If you look at some of their some of their data on their earnings report, right? You had some stocks, again, like a Goldman Sachs or whatever, where they were, or Bank of America, whatever, where they were down on, again, overall revenue growth when it comes to interest accrued income, but they were up on fixed income revenue and also equity-based income from obviously assets and stocks like that. Say, go figure, right? Yeah, because they're utilizing all this liquidity from the repo operations that the banks are getting from the feds to turn around and go buy ETFs, buying certain sector, whatever the case. That's how they're making money, basically, in a nutshell. Right, so they're not doing it organically. They're not turning a profit organically inside the house, right? So that just goes to show you why these banks are in cities, because, again, they'll turn around and give a favorable rating on a stock like Tesla right now when Tesla ain't even making a third of what a company like a J.P. Morgan or Goldman Sachs would be making if they had the ability to kind of charge out extra on interest rates and stuff like that. All right, they barely got one factory open. All the other ones are shut down. They barely even being able to ship these vehicles, but they still deserve, again, near $90 billion valuation. You couldn't make this stuff up. So again, they're just speculating and gambling. Just to put it in a nutshell, they're gambling. Right. So manufacturing output fell even more acutely by 6.3%. So manufacturing, again, in the dirt, right? In the dirt. Industrials, obviously, which was very bad. Again, think about industrial type manufacturing. Think about regular manufacturing, like I was speaking about, like textiles, things of that nature. Right. 5.4 for industrials, 6.3 for manufacturing. Right. So the Empire State Manufacturing Index, which tracks factory activity in New York State, likewise plummeted to a record low of 78.2, negative 78.2, right? Very, very staggering data point there, right? Very, very staggering data point. And we know New York is hit hard right now, obviously, because of the coronavirus. And again, the fact that you don't have any manufacturing growth, for the broader scheme of your economy, for the greater good of your GDP, then what does that say about, again, the idea that Wall Street has, this kind of forward-thinking data or this priced-in metric, whatever algorithm that they're using to say that, again, this is where the market deserves to be at this point. So again, people say, again, they always push back and say, well, what do you want? The market to just tank? Do you want people to lose what pensions they have left? Well, guess what? Wall Street has already gambled away most of you guys' pensions anyway. Don't blame it on the idea that when things happen and you're supposed to plan for a rainy day, that you need to have all your I's dotted and T's crossed and your eggs pretty much settled in a way where they're not just exposed to all this potential volatility, because they tell you and I to do that, right? Have income put away for a rainy day. So if you fall, no one comes to your aid. I'm sorry, I just refuse to believe that you can just go and just instantly just get loans like you're seeing. This happened pretty much last night with the airline industry receiving about $5.8 billion, from their stimulus package of 2.3 trillion, whatever. They got a $58 billion pretty much handout. And the majority of that is grant money with a G, grant money, not loan money, but grant money, which means free money, taxpayers' money. American Airlines. Now, is American Airlines going to slash their prices for booking flights for y'all? Are they going to give y'all better meals on the plane? Are they going to not charge you extra for baggage fees? Right? And gas prices are low. So even with all these savings and things, again, they still going to make what? Turn a profit off y'all. And like they were doing before in a very negligent fashion, just buying back shares. They used pretty much the money they was making in profits from gouging, passengers to buy back their shares right, to keep the stock price inflated artificially, as opposed to being better at doing, again, R&D, research and development, M&A, mergers and acquisitions, mergers and, marketing and advertisement, in a way to scale their businesses where they can obviously, save the customers, but, build a more sustainable platform where they can acquire more customers at a more cheaper rate, like you normally would do in a business, right? The spot sustainment, right? They was, paying executive bonuses, and again, that kind of stuff y'all already know about. But hey, there's some people that need to hear this stuff that's new to this, and that's why we talk about it, right? Because understanding how finances work, how companies, run their businesses, we need to be able to understand this stuff, right? Especially if you're a consumer, right? So again, those numbers were horrible in terms of the manufacturing numbers, especially in the state of New York. So that translates to all across the broader market in this country, where we just don't have this, pot of gold at the end of the rainbow, as you're trying to assess by listening to Wall Street or CNBC every day, just trying to tell you that everything is fine. Because obviously they're gonna have to say that, because they have clients that are waiting on them to kind of make money in a marketplace like this. So they have to always be bullish or very optimistic. So you're mistaking that it's like everything is all clear, which is false. It's a false narrative. So you need to learn how to manage your own money and not depend on these people, right? Because obviously today, as the market is pulling back, at the tune of roughly about 700%, 700 points or so on the Dow, roughly about near 83, 84, 85 points on the S&P 500. Right? And again, that's strictly based on, a lot of this economic data is coming out from the earnings season that we were all waiting for, is obviously beginning to reveal itself as that we have a major problem. Again, nobody's making money. They didn't make money pretty much for the last part of, I would say from the first quarter of 2019 to up to this point, there was still no earnings growth, no organic earnings growth. So how are these stocks still up at all-time record prices? Because again, asset inflation bubble blowing by the Feds, again, just dumping, again, taxpayer monies into stocks, for these banks to dump it into stocks pretty much. So again, it's pretty much borderline criminal, but again, hey, y'all know how this stuff goes, right? Y'all know how it goes, as they would say. All right. So again, same way with Bank of America. Again, like I was talking about these banks, I mean, they can't have really, make a lot of money off interest. So they're just doing a whole lot of what? Right? Making money off selling stocks, right? They're just making money off gambling, pretty much gambling stocks right now, right? And that's basically, the name of the game. And this is how this stuff, is set up, where these banks, again, using your money, if it's in their institution, along with the Federal Reserve money that's coming in, and they're speculating on stocks, right? And making money, from that perspective or that fashion. And again, a lot of people, may not understand how that works, but we say, well, they better not be gambling with my money. Well, that's basically what's happening. Right. So as you can see, the Bank of America and Citigroup both fell, around about 5.4% for Bank of America. Citigroup fell about 4.5% today after releasing their earnings number that showed there's obviously a real bad situation here that's happening, because the loans are starting to default, right? These loans that they had out there are starting to default, right? They can't make interest off of them at this point anyway, on top of the fact that people are starting to default. Hence, that's why you had yield curve inversions literally about a month and a half ago, 2 months ago, when you had the 1 and 3 month. I think you had like a 2 year and then something else inverted. And typically, when you have yield inversions, well, basically you have long-term debt defaulting faster than even short-term debt. That is a major problem, right? That's what a yield inversion obviously entails. So you would think people have more time to pay. It gives them opportunity to kind of get their finances, their business together. Right, but if you default even on long-term, contracts before even your short-term stuff, that's problematic, right? And some of these banks, like I was saying last week, and probably a couple of weeks ago, coming into earnings season, that these are the ones you want to watch out for, right? Because these were the ones who caused a lot of this inflation, this asset inflating bubble blowing with help to the Fed, and now they're starting to have they have to eat crow now. All of them are tanking. We saw it yesterday. Wells Fargo tanked after it ran up JP Morgan yesterday saying it ran up and then it tanked. Today, again, we had Bank of America, Goldman Sachs, right? The real big, insidious, institution out there, especially in Goldman Sachs, right? Them buzzards, right? They tank, they're tanking today. Again, notably so for a lot of reasons because again, their take on how the economy, should be run is not in reality to what Main Street really needs to be self-sustaining. Right? Again, because they're only concerned about their corporate buddies, right? They're only concerned about their corporate interests and things of that nature. And for us, again, as I'm always saying, that's why it's important for us to circle our wagons and look after each other in the same way. Use them before they use you. Out hustle those who are trying to hustle you. Right? Don't fall victim to somebody else's particular, agenda-based, goal or however you want to say agenda, whatever the case. But that's how that works in terms of how the banking industry obviously sets a precedence for the overall economy because they are the ones who are making the fraudulent lending loans. They're the ones who's charging you a lot of interest on things because they know your credit is a little stressed out because of other things happening because there's really no true money being made in this country the way people say it is because the minimum wage is still sitting at $7.25 in 2020 and they're trying to tell you can live comfortably off that. Like, get out of here with that, man. It's like, seriously. And you got people, again, like I'm always saying, they're voting against their own interests. They're telling people that they don't need this and they don't need that from the government. I don't need this, that, and the third. And yet they still, one paycheck away from being in poverty. While Wall Street can't wait to get a bailout. They can't wait to get your taxpayer dollars. Anytime you have an economic disaster, they're the first ones in lines with their hands out, with their purses open, saying, load my bag up. They have no chill. They have no moral fiber. And here it is, you trying to take the high road because you think you can have pride not to take something away from a system that's been taken from you since day one. And so you see what's happening here. This is why I utilize the markets. I utilize these same instruments to be able to provide me some kind of value and a value to create some kind of level of riches or wealth or whatever. Because again, a long-term perspective of this is that again, you want to be able to grow your money in a way, where you don't have to feel like you have to work so hard just to get pennies on the dollar. You can let your money go out there and work for you and gain dollars on the dollar. That's how they make their money. Hence, they hide their riches in what? Financial assets, equity-based assets, land assets, overall assets, be it paper or the tangible commodity itself. Gold, silver, platinum, palladium, land, agriculture, corn, feeder hogs. I mean, all that soybeans, all that stuff is publicly traded. Go figure. Some of you guys probably buy more corn than than grown in the field an hour. And then you can obviously invest in the actual commodity itself, feeder corn. Right. Trump all that touting and bragging about how China finna buy all this pork and corn and soybean. Well, soybeans are publicly traded. Right. It's a market out there for pretty much everything under some form of a nomenclature, whatever, but it's there. You have access to it, right? So again, just something to think about, guys. So again, as we look at the S&P 500 here, sitting at a very critical and pivot point, a very critical point here. Matter of fact, let me share my screen here so you guys can see where we at in terms of S&P 500, where it's teetering on the ideal that if it breaks below this lower band on my linear regression band, it can get real ugly. So they're doing everything in their little insidious power to save this thing. Look at this thing right here. See, I just keep hitting that line. It was just hitting this line all throughout the day, pinging on it. It pinged on it here, and now it's at this point. They refuse to let this thing dump underneath, because if it dumps underneath that linear regression band there, okay, here we go. We could easily flush down to about 271, right? We could easily flush down near 271, 272. Obviously, closer, broader case around about 273 at that point. So they're saving it. They're doing everything they can. They're throwing all kind of money at it. I mean, just, again, greedy. I mean, this is what the gap down from today, earlier in the day, obviously, as you can see right here. Market just kind of melted up. Look at that. It's just sitting that thing there overbought, aspects over pretty much the entire day yesterday. It was sitting at near overbought status. Almost the entire day, which is this line right here, this red line. That's what they call an overbought, an overbought indicator. Right, it's called the RSI. Right, for some of you guys that's new to this, again, I like to try to talk in terms where a lot of our people are still learning, so I want to be descriptive. Right, so anytime you have this line way up here at near this red line, that's what they call like that's like running your engine at full RPM, bent over to the right, just mashing on the gas and going nowhere. Eventually, your engine gonna overheat. Well, go back and look at this chart here. What do you see here? Overbought, 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 overbought for entire days, right? Overbought, right? Slight pullback, ran up again, overbought, 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 overbought. Greed. This is all greed. Again, and y'all are dealing with the same thing that everybody else is dealing with. Wall Street is not immune to the coronavirus, right? But apparently it is, because again, it has a backstop in terms of the Federal Reserve, who's willing to just dump unlimited large swaths of cash at their disposal. Not to you. Again, some of you guys are starting to get your Trump check. So, again, congratulations. And I hate to even say it like that, because at the end of the day, it's not really even like you're getting nothing free. You're not. It's just tax credit. Go Google what a tax credit is. George Bush the second, he gave out a few a little bit during his presidency, obviously because of the fact that he took everybody to war and damaged a lot of the economy, right? So he thought that, at least I give everybody some tax credit, and that'll make him feel a little bit good about me instead of coming from my neck. Well, that's basically what Trump is trying to do right now. He's taking a playbook out of George Bush II and trying to give y'all a stimulus check, which was already money that you needed months ago. And they were deliberating whether or not they want to do that. But they had no issue with dumping money again into Wall Street, in terms of the repo reverse operation, and also this federal stimulus package that they've been putting forth to save the bond market, treasury notes, things of that nature, which obviously parts of the stock market. So again, Wall Street ain't missing no meals. So looking at this overbought session here, and then now it finally pulled back a little bit, taking a breather. But ultimately, if you look at the chart where it came from, right? Again, it's just frothy buying, just establishing what? Higher lows. It's just melting the market up, higher lows. The 243, big gap up here, big gap up here. Now, technically, how markets work, anytime you have a gap up, markets are supposed to, when it runs and make a new high, it's supposed to backfill to a degree, fill that gap, right? It's supposed to come back and fill that gap, right? Let's see if I can draw a line here, right? It comes back and fill those gaps, and then it marches higher, right? But again, with the way how these people are, when I say these people, this monetary system, these people at the Treasury Department, right? These Steve Mnuchin and friends, right? How they're setting things up. Right? Look at that big gap there, right? Haven't even been filled. This one here, another one, another gap that hasn't been filled, right? They call it backfilling, or stock adjustment, so to speak, right? Obviously, all that implied ghost money, in a sense, has to be accounted for, right? And so, guess what? Another gap from here to here. This one here barely came back a little bit here, halfway, and then it retraced and then it came back and filled this. So that one got filled, right? As you can see right there, that's how a gap's supposed to feel. So it went up and gapped up, trended sideways, made a new high, obviously here, tested the highs right here, hit some resistance there, obviously, and then it pulled back and gap filled. That's how natural stock moves are supposed to happen. And then it launched up and went higher, gapped up and went higher. That's natural backfilling. It's called backfilling, right? So yeah, it matter backfill that. This gap here, same way. You got a small gap here. See what it did here? Went up, made a new high, made a newer high here. Came back, backfilled it, trended sideways, accumulated, consolidated like it's supposed to, gapped up again in that same, actually size value of the last big major gap up it had back here, and then went up and made a new high, right? And now you're having a small backfill here, which sees the gap right here, where the stock is at, right here, backfilling. Now, but here's what's interesting about this. This is a critical level of support here, right? This part of this linear regression band, this big column here, that's a major point of support here. So roughly about 275.50. If it breaks this 275.50, again, easily can run down to about 273, right? 272, potentially even down to 271, right? See right here, these little gaps that's still in this point here, right? It'll be obviously if you can ever get back to that point, which is showing you around about near the 200-day moving average. That's why it's sitting there around about 266, right? So again, this is saying we got to get it off the lows. We got to keep it pumped up. As you can see here, they're fighting, right? Even to try to overtake the VWAP. And as long as they can keep this thing trending sideways throughout the day, on the back end of the day, the Federal Reserve is going to come in and what? Unload a lot of money right back into the market and run it back higher. As if this never happened. Again, as if everything is all clear. After hearing the earnings numbers today that came out, which were horrible for the banks. Of all people, the banks, they always watch the banks, right? But if the banks are tanking and they got bad numbers, how is the market able to account for this level of so-called supposed growth and forward thinking of priced in values when the banks ain't even making no money, which lend the money to the small businesses, which pay the debts off other businesses in terms of imports and exports? Again, you can't make sense of it, but that's how you need to learn. This is why we need to learn how this system works, especially the monetary system. So anybody making no money, how you got, again, asset prices just running up like, like they just, killing it right now. Right. So again, you'll listen to CNBC, which I have on here. I'm about to put on here in a second while I go handle a little quick business. And you're gonna hear them speaking as if, again, there's some level of optimism that needs to be had still, just because eventually, Trump may try to open the country back up real quick and get y'all back to work, right? Put y'all out there, on the battlefield, right? Trying to dodge this coronavirus. Right? But again, markets need to correct. So you still have a gap right here that hasn't been filled. Right, so keep this section here on your radar. Keep this point of support around 257 on your radar, and this point here around about 248. Now, whether the market ever makes it back there, I believe it's going to make it back there at some point. Me personally, I do. But they're going to do everything in their power to kind of run it up higher if they can, and make money off all this despair. Again, everything that's happening, because they care less, because they're getting a daily dose of free cash from the Federal Reserve Canon printer every single day. That print over there just humming, flipping them hundreds and 20s and grants and all that stuff, and taking it straight to what? Not your house, but the what? Wall Street house. And I know I'm not anti-market. I'm anti, unreality or non-reality. And I understand how this works. So again, if I'm gonna take advantage of it, I know how to what? Get in, get out, right? Get in, get out, and not get caught, or get in and then short it down and make money on the way back down, because I understand that all this is just artificial. In essence, to the overall macroeconomics that we're dealing with, when you got, again, global economists are saying that we're headed, to a nasty recession. I mean, all the signs are around you. How many businesses are closing down? How many of you guys probably won't even be able chance to go back to your job, unfortunately? Right? This is just, this ain't nothing. This, again, it's not rocket science. But you need to know how to play the game. Don't let them out hustle you, because they're using, again, a lot of greater goody, the taxpayers' money, to do just this here. Look at this straight line. It's almost in a straight line here. Just fighting. They're fighting to keep this thing from dropping. Again, forget the fact that, again, you still have a major gap here that has to be filled. That's why I sit more at the overbought session pretty much this entire, since basically going back near April the 6th, is sitting up here near overbought. Look at it, way overbought up here. They don't care. Run it higher. Sitting up here near overbought throughout the entire, basically from April the 6th to where we at today, around about, what, the 15th? It was sitting up in their overbought session. Just highly, highly overbought marketplace. And still fighting, trying to dig and get more out of it right here. Rounding out, you see the bottom here. You start to see it. They building around the bottom. They building around the bottom schematically. This is, you couldn't make this stuff up. They trying. They are definitely trying right now. So again, definitely, if you think about scalping the spy call to the upside, again, you see it's barely above the VWAP, but it's still too risky at that point. Unless you're going to be in and out real quick. You still got the 20-day moving average, which is this red line here, as a litmus test that it needs to kind of be able to kind of go up there and capture, right? Whether or not there's energy enough to get it up there, well, we know the Fed's going to try to push it up there if nobody else. Right? As you can see right now, they buying now. People buying now. Again, rounded bottom, clear J-hook pattern, fry pan bottom pattern, breakout, potential breakout. As you see, that candle's ever so slightly growing. after coming off the lows of roughly around about 275 to 67. Again, they're trying to save that support. Right? They're trying to do everything they can to save that support. So again, you got stocks again, Tesla up, Fugazi, all these stocks up, Fugazi. Again, this is them gambling. Again, trying to again, Wall Street has no chill. As I always say, they have no chill. Right? So again, just kind of putting them into context. All right. So just looking at Tesla again, real quick. Then I'm gonna go run it. Handle a quick little business. I'll be back. But I'll have CNBC playing, and my screen will still be showing live. Right? And I'll show you my little Boeing trade. I remember I told you about my little Boeing trade. I laid down my thesis why I'm shorting it. How I'm, why I'm still holding it short. This, that, and the third. Well, again, it's starting to hit my target. It's meeting the goals that I had set for it. Right. So again, same way with Tesla. Look at this big gap right here. Gap haven't been filled here. Right. Major gap here that needs to be filled on Tesla. Right. And you ask yourself, what would cause, let me see, hold up. What would cause Tesla to be sitting up here, again, at this price point, and again, another gap right here. This gap here hasn't even been filled. Another one, right? Another one, right? Another scenario. And you say, well, again, of all things, I just gave off a stat concerning, auto manufacturing and auto sales, right? It's pretty much said that it's they're in the dirt right now, right? Who's buying luxury cars right now? Even a Tesla. But this is the banks giving this company upgrades, as if they turn. I mean, they got a solar power, solar, not solar power, but they have a solar panel business as well. But it has no bearing on the money they make from selling those cars. So again, massive gaps up here, massive gaps just melting up. Look at there. Look at all the red, green candles there. Gap up right here, haven't been filled. This little point right here, and just running it higher. On what? Right? And so now you have a small pullback after hitting this real overbought session. Now look at here. Look at the RSI. Look down here. It's just hovering up in there overbought. Again, going back to August 6th, right? April the 6th. Overbought scenario, overbought territory. Slight pullback, overbought. Just riding the overbought scenario, just overbought. That's greed. When you see something like that in a marketplace where we're dealing with all this stuff we're dealing with, that's extreme greed. Here, way overbought, extreme greed. RSI sitting at 91. And they want to tell you that this is fine. And again, you have those people who are just, but it's that kind of stuff. Right? That kind of stuff. Like what but right? Oh, that's the wrong one. This is not the one. Oh, yeah, it's one, I'm sorry. So yeah, overbought. And now it's slightly pulling back here. Again, has major gaps to fill. So again, the next gap down, obviously if it makes it back to the support around about 699, right? If it makes it back to 699, look out look out below. Right? If it makes it back to 699 support level here, look out below. Right? Because again, it has a nasty gap to fill back down to 650. And it's sitting right at close to that gun line, right? This linear regression channel band. It's sitting right at this gun line. See how I played this gun line today? Same way you saw the SPY doing, so it penetrated it right here and bounced off of it. That means they're trying to save it. When you see that, again, they're trying to save it best they can, as if the stock, again, deserves to be up this high. Wall Street ain't missing no meals. All right. That little $1,200 Trump check most of y'all got ain't, again, about a hill of beans in the greater, broader scheme of what, you should really be getting from the government at a point like this day. In a moment like you're seeing Wall Street, again, doing stuff like this with a lot of taxpayers' money through the reverse repo operations that the Federal Reserve is dumping cash into the stock market. Right? Barely even pulling back. It's up here, sitting up here roughly around about 700 and it was up here around about 760, almost 750 something. And look here, pulling back to fill this little small little gap. If anything, didn't even really fill that gap all the way. Right here down to 716, 710, somewhere around there, 715. Barely even can fill that gap. Because again, they're trying to prop markets up, number one, to kill options. That's if you short the market, right? It's been a concerted effort to kind of kill all kind of put buyers and short sellers in the market, as if that's some kind of, as if a person is wrong for hedging their portfolio, because there's all this economic uncertainty that people still trying to have to deal with. So they're trying to punish even short sellers. Just show you how maniacal they are. Again, you got a person like Steve Mnuchin, which is the head of the Treasury Department, which used to work for Goldman Sachs, the most insidious institution on the planet that has pretty much wrecked economies, inflated, manipulated forex currencies, known criminals. Steve Mnuchin was a criminal himself. He was investigated for fraud when he was at Goldman Sachs. How did he make it to the Secretary of Treasury of this country? We watched the movie the other day, Terms of Capitalism, right? That documentary. We broke down exactly how Goldman Sachs sits at the head of these particular very important institutions, in terms of government institution, and make decisions for stock markets, benefits only. True story. Under Reagan, Merrill Lynch. I mean, we go on and on and on. These people came in and took these positions, even under Obama, right? George Bush the second. All these guys coming out of Goldman Sachs end up being Secretary of Treasury or some important figure in terms of the monetary system, because they know exactly how to fluctuate currencies, fluctuate money, inflate stocks to make Wall Street rich, corporate interests richer. And you turn around and have a Republican sitting president who's always talking about tax cuts. Well, those tax cuts typically always go to who? Rich people, right? Whether you're Republican or not, don't get in your feelings. Sometimes you need to talk about it in a way where people understand how this stuff works, right? They always give tax cuts to who? Their base. Who are their base? Who is their base? People who got money. Not even the poor, uneducated ones that Trump said he wanted what? That he loves. His words, not mine. He pretty much came out of his own mouth and said he loved the poor, uneducated what? Republican voters. There's a ton of them out there. Go through West Virginia, right? No slight, but it's just fact. Go through West Virginia, parts of West Virginia, Kentucky, Arkansas, Alabama. Those poor, uneducated Mississippi that voted what? Republican, just because they like his what? His nasty demeanor, more or less, than his policy. Right? Reminds them of old school, deep South segregation and that kind of ignorant stuff. These are people that vote against their own interests, just for the fact that they can have a symbol in the White House that seemingly kind of carry their own innate biases and prejudices. True story. It happened under Obama. African American community voted in record numbers to put a person in office that didn't do not jack squat for them, not nothing. He did stuff for gays. He did stuff for even more Republican-based corporate interest people and things of that nature. Did nothing for the black community, but was a symbol. So people cried for a symbol and got nothing from it. Again, people always vote against their own interest because their own innate biases that are ignorant to the ideal of what they need to really get from a so-called government system that's taken from them every single day. Couldn't make this stuff up, right? Couldn't make this stuff up. Right. So again, they pumping the market right now, just pumping it. Pumping the market. Again, so this is what we have to deal with. But again, when you learn how to play the game, you learn how to catch these moves. Get in, get your bag, get up out of there. Right here, get in, get your bag, get up out of there. Again, use them the same way they're using you. But you still need to understand how the overall picture of how this stuff really works. So that's why I'm always going to talk about it from that place where it seems like, well, you making it seem like it ain't, that ain't good. That is going, no, you need to understand why it's going up. So you don't be misled and think you can sit in it and sit in it and sit in it. Next thing you know, it start dumping on you. Then you're like, why is it coming down? Well, it's coming down because it's, artificially inflated. You got to know how to play the game. The good, the bad, the ugly. Nothing just goes straight up forever. If that's the case, stocks will be up near what? 100,000. All right, this Tesla be 100,000. This SP 500 be up like 500,000, some crazy number. That's not how this works, right? You have to actually produce goods and services, products, good balance sheets, right? Less debt, run a profitable company. That's how your stock gets rewarded for it. Technically, that's how it's supposed to get. Fundamentally, that's how it's supposed to get rewarded for it. If you don't see that, then you know what it is. It's a whole lot of what? inflating. That's why they call it a debt bubble, right? Some of you guys took economics in school. Y'all know enough about debt bubbles. You may not know the intricacies of aspect of it, but a debt bubble is just that, a bubble that's been inflated by debt and not real real growth, production, service, whatever work. So it's obviously it's artificial. Obviously it's artificial. So the same thing you're seeing right now in this 12 o'clock hour, this is when the markets always come in and get a boost from the Federal Reserve. It happens like on clockwork. Right at 12 o'clock, you start seeing a large swaths of cash coming into the S&P 500, into the Dow, into the Nasdaq, into certain stocks. That's the banks buying these stocks up at a point when the algos are kind of going on pause because people going to lunch, right? Wall Street goes to lunch at 12 o'clock. They come back between 1:30 to 2 o'clock. And so in between time, they have these banks or the Federal Reserve will come in and actually start buying the market up at that point too, running it right back up. Again, couldn't make this stuff up, but that's why I study it. And you need to study it too, even down to the point where you can just watch the clock and see when things starting to happen, because you have abnormal volume coming in all out the blue, and you're like, well, where is this coming from? Right? What news is happening right now to cause that? Right? That's the game. Right? That's how the game works. So again, just want to share that with you guys, so we can be better at understanding how the market works, right? Because knowing this puts you in a better position, right? Where, again, you can benefit from it, right? Learning how to use the system against the system. So when they doling out grants, get in line too, right? Get in line too. Why wouldn't you? Right? Sister Monica in the building. She got my contract under President Obama. I can't be too mad. That's it. Again, it's not even about the personality or the symbol of the person that's up there. You're there to get the benefits, because all these people are just people. No more than that. No more than that. Right? I'm there for the benefits. Y'all know my mentality. I'm there for the benefits and the benefits only. Y'all cut that check, I'm there. Right? Y'all cut that check, I'm there. Right? With my hand out, just like Goldman Sachs. I stand right beside Goldman Sachs, Credit Suisse, Bank of America, PNC Bank, Citigroup, any of them. Be right there with my hand out too. Because again, they have no shame in it. Why should you? Ain't no high road in poverty. Ain't no such thing as taking the high road just to be in poverty. Ain't no such thing as being prideful just to be in poverty. If you think that way, man, I guarantee you, good luck. All I'm gonna say is good luck. Good luck. Ain't no poverty pimping around here, as they would say. Bearing your own cross, all that kind of stuff. Just be poor, and money the root of all evil, all that kind of stuff. No, mismanaging money is the root of all evil. Not having enough resources is the root of all evil. Right? Downplaying the opportunity that you need to take advantage of to get better resourced up from a knowledge perspective is the root of all evil. Right? You need to learn how to survive, but not necessarily survive, but thrive. Thriving is a difference. Right? You need to learn how to thrive. Right? Again, that's a part of financial freedom that we talk about all the time, right? Financial literacy, right, is understanding how to use the system, this so-called quote unquote complex system, to your benefit. Right? So that's why understanding how to use the markets are very, vital, because again, it's a very turnkey, user-friendly apparatus at your disposal. The hard work comes through the due diligence and the learning how to make sense of all of it. But once you get a good, understanding, then you always have access to capital. When I say access, meaning you can go into the market at any given point when it's open, while it's open, and find a bag, acquire a bag, and not have to worry about somebody else telling you when not, and all that kind of stuff, right? So again, that's why we take this stuff, serious, right? We take it serious, right? You got stocks up today that's just banging, right? You got stocks up today that's just banging. You got this stock right here. We got stock up today, up about 1,800%. It's a straight pump and dump. The volume is at 143,000 shares traded. Let me show y'all this real quick. Let me show you how. Again, this is the kind of stuff Wall Street do, right? And I haven't even traded it, right? I saw it breaking out, doing all the kind of funkiness, but typically when I'm in that kind of mode, now that's when I go into gambling mode, right? I said, we got a gambler today. And I'll play around with a few dollars and make a little, make a little bag. This one here, let me show you this here. Look at this stock, guys. This stock is up 1,800% today. It came from literally $4 and change, and it's up to $90. How many people? Again, I saw it moving up a little bit, doing this thing. I'm just not in the mood today. Right? People are like, what you mean you in the mood to make money? Yeah, just not in the mood today. 1,800% could not make this stuff up. And it's just melting up, melting up, melting up. Right? Gets halted, goes up higher. Gets halted, goes up higher. Gets halted, goes up higher. In terms of this stair step, when I say stop, just halting. Perfect stair step pattern of just unbelievable, greed. 1,800%. Now the short back down, the ride back down is going to be what? Brutal. A stock that was trading literally at $3 or $4 a share is up $90 in one day in about 3 hours. But a person that has no clue about the markets and any of this, they would never have a ability to make that kind of return on an investment or a trade in this amount of time. They will never be in a position to do that. All right. This is how the market, again, gets rich while average people sit home. Because some of y'all, again, 1,800%. That means if you put $10 into it, how much money would you be worth? That $10 be worth right now? What's 1,800% of $10? Anybody in the back chat? What's 1,800% of $10? 1,800% times $10, basically. What's that math on that? All right, let me see where we at. What's that price? What's that profit haul on that? What's 1,800% of $10? Some of y'all had $10 today, even though the stock started out around about $4. What's 1,800% of $10? Somebody throw that number in the back chat. That profit haul. Yeah, it does. It's a scanner. Actually, it's a full-fledged algo scanner, Brother Mathis. It calls out alerts. It does all that. I mean, I pay a subscription fee for it, so it's pretty much a tool in my little toolbox. To again to do pretty much find stocks and give me alerts on them, whether I take a trade on them or I don't. But that's basically what it is. It's an algo scanner to find stocks, ones that's breaking out and ones that's breaking down, so short and long, and also it does options as well. Right. So if you guys are thinking about getting that black box scanner, if you're at that level, check my description box below. There's a link down there. Click on it, get signed up. Right. Benefit, opportunity. Again, being able to use it and put it to work, right? Because again, it'll pay for itself. With a few trades, if you learn how to obviously, work it properly. Right. You learn how to work it properly. Right, look at that. See what I'm saying? See the melt up? Look at this market melt up. Look at this greed. Right. These people got no chill. Right. These people got no chill. Right. So yeah. So again, that's how this how this stuff works. So it's halting now. It's probably, you see the bid right here is at 59.50. So when it comes out this halt, it's probably gonna start crashing. All right. It's probably gonna start crashing. The volume is pretty much just nothing. So we'll see. How it opens up, it crashes back down. Right. So again, just putting that out there. That's the kind of stuff that's happening right now underneath a lot of people's noses that's sitting home right now, probably playing Xbox. Right. When they need to be trying to play this, get some of this bag here. Right. So they could have put $10 on it, and $10 again, which would have got them 2 shares, right? Because it started at around about $4 or $5 a share. You'd have got 2 shares, right? You'd have got 2 shares, right? 2 shares at $10 up here at $90, 1,800%. Again, that's the money you would have pulled down, right? You'd have pulled that kind of money down, right? That's the little black box link if you decide to want to, sign up for it, right? So I mean, nice. That's a big bag, right? That's a big bag. right? Yeah, so yeah, 1,800% time $10. You know, 1,800% of $10. So that's, I mean, that's a big banger for the day to just run it up to the upside. Right, that's it, brother Sean John. There you go. There you guys go. How many? I mean, how many of y'all could turn $10 into $10 into a buck 80? Right. How many of y'all could turn $10 into a buck 80 in one trade? Right. That's the power of this, this instrument in terms of being able to kind of come into this freaky, crazy, greedy market and get it like that. Right. $10 turned to what? 360 from 2 shares of that stock. 10 turned to 360. Now, again, y'all know how we always put it in the content. Again, imagine you slapped 100 on it, right? 100 obviously is what? 3,600 for 2 shares. Well, you get more shares than that, obviously, but you know what I'm saying? Hypothetically, those 2 shares. But if you put $100 on the base, 1,800% off $100, then that value of the, you start kind of looking at it from the place of shares and all that kind of stuff like that. Right. So that's the kind of things that we take, with this craft, with this, with this skill set, with this opportunity, in a way where we're always looking for what? Right. We're always looking for growth. We're always looking for, profit. Right. We're always looking for, opportunity. Right. Because again, it's just a very turnkey, pretty much it's a turnkey business. It's a turnkey online business. Investing and trading in stocks is pretty much a turnkey business where, again, a novice person can come in and just, get after it with no understanding, no skill, no true skill set, and make a killing. Right. I'm gonna add to my boy in short. I've been sitting there putting it on. I was waiting for it to kind of run back. I knew it's gonna run back up at some point near this lunchtime hour, which they always do. Let me go and add to it. All right. Not gonna put a ton on it. Right at this VWAP line, which is probably gonna bounce here in a second, but I'm definitely gonna add to it because at some point if it breaks back below that VWAP, that's even more weakness on that, on that stock on the back end of the day. Right. So again, guys, this is what we study for. This is what we in our free time, this is what we're looking at. These are things that we're going over, right? We're constantly, checking the news. We're checking, geopolitical news. We're checking the economic data out there. These different, these different data points as far as growth and manufacturing and retail sales and core sales and Empire State index industrials and things. You have to keep up with what's going on around you. Right? Why wouldn't you? Right? Why wouldn't you? Cost you nothing. A couple little Google searches, quick little understanding, so that way you keep up where everything is happening. Right? Where the money's going, where it's not going, because apparently it's not going to us. Right? It ain't coming to our pockets. Right? So again, that little $1,200 Trump check, not to make light of it, because a lot of people need it, but I guarantee you this: it's a small drop in the bucket and what you really need to be self-sustaining yourself right now under this shutdown. And the major portion of all this stimulus money that's being pumped up by the Federal Reserve and implemented and going into so-called, the quote unquote so-called SBA loan lending and buying bond market, that stuff again is feeding the stock market. Let's just call it what it is. It's feeding the stock market. Right? It's feeding them. And we need to come right on over here and what? Eat off of it too. Right? Why wouldn't you? Right? Again, $10 turned into 180. Right? 360 bakes off 2 shares of that that LTRP stock. LTRPB stock, excuse me. Up 1,800% on 143 shares traded on the day. You got other stock. It just opened up. Just opened back up. It gapped all the way up to 95. It's finna go higher. This trash finna go higher. right? Let me show y'all this real quick. We're gonna watch this one here for a second here, right? I'm not gonna touch it because I was most people they'll be tempted to trade it and touch it. I'm not gonna do it. All right, I'm not gonna do it. Right, I'm gonna be here and I'm gonna show y'all some good, how to sometimes just understand how to just watch. Y'all see the same? It gapped up from the halt, right? From 80 something bucks, it gapped up and now it's up over 20 bucks in one gap up. Look at where it's at now. It's up to $104 right now, up over 2,000%, 2,100%. Right? Just got halted again. The ask is at 109, so that means they're asking higher than where it's at this point. No, it's still trading. Let me see. Yeah, it just got halted again. But they had a 109 ask on the price to run it higher. So somebody trying to run it higher. This thing is up 2,100%. $10 times 2,100%. Basically around about what, $210. Times 2 shares. There you go. 420 some odd dollars off $10. That's this is why we circle these kind of wagons. And some of y'all again home right now could have been doing this from your cell phone while you're playing with your kids or your wife or your spouse or whoever, right? In the backyard, in the garage, working on your little favorite little, some of y'all working on that GT out there, getting them engines right, getting that engine right. You got your cell phone, your tablet right next to you, making a little extra money to pay for that carburetor you need, right? Them Flowmaster pipes, right? That nitrous oxide bottle, right? This is how we do it. This is how we do it. This is how we do it. All right, again, UAVS, that's another one running today. I posted it earlier in our little group. I think when I posted it, it was up roughly around about 170, 80%, somewhere around there, maybe, I don't know. Now it's up to 264% on the day. It's still marching a little higher. A 200% run on the day. And this stock it's trading at like $1 and some change. Obviously, it was down in the penny stock area before that, under $1. And now it's up over 250%. This kind of stuff. Some of you guys got $5 laying around, $10 laying around, $10 on a 264% runner. How much is that? $10 end up turning into what? $26 and some change. So you end up walking away with roughly around about 30 some odd dollars from a $10 what? Trade. Well, guess what? That bought the family lunch today. Use them the same way they're trying to use you. CHCI up 110%. All your little stocks up 70, 50%, something like that. Just grinding up throughout the day. Right? Crazy, right? So guess what? This move up gonna be just as. If you can find share the short on this one here, I'm probably gonna try to look around and see if this one shares the short out there. But if you can find share the short in this, the ride back down is going to be brutal. It's gonna be brutal. All right, so obviously you got to get out before what the last person do, because this is what you call a pump and dump. It's exactly what you call a pump and dump. Again, guys, don't take it lightly in terms of the opportunity, right? But also don't get caught up trying to think you can just come in up here and chase this stock up at this point, at this high. Because this is how you can get burned, right? Because again, the meat of the move has already been made. Now it's better to watch it and learn from it, how it moved, why it moved, all this stuff. Take notes, and so that way you become a little bit more knowledgeable. And when you see stuff like this happen, you know exactly what you're dealing with and how to deal with it if you choose to take a position on it. So these are good moments just to kind of spectate, sit in the gallery, pop you some popcorn, and look at this joker here, right? Because somebody, again, y'all know the people that was in down here. This was an orchestrated pump and dump. Again, they're making a grip today. Again, somebody probably put 10,000 on it today. I guarantee you. They knew about this pump. They knew they was going to do it. It probably was in some of the chat rooms. I know about a lot of them because I'm in some of them. They say, hey, we're going to pump this stock. People just start loading up like they getting ready to go on a hunt. True story. They've been there click-clacking guns and getting their little money together. Well, how much you going to put on? I'm going to put about 1,000 on it. Well, I'm going to put about 10 racks on it. That kind of stuff. All right. So, again, $10,000, on a 2,100% gainer today, how much is that? What's 2,100% times 10,000? Right? You talking about well over what, $200,000, somewhere around there? 10,000 turns into 200,000. You done for the entire year if you choose. True story. Right. So again, that's a part of the game, though. That's how this game works. Right. So again, I have no. Look at here. If I can get it, I'm definitely going to find a way to get it. The same way they're getting it. Again, from the comfort of your cell phone, tablet, computer, wherever, outside on the back porch, sitting at your desk, pushing button. Read some charts, understand some news, push the button. And when you're done, push the button, get out, go about your day. Right. So again, that's just this is the craziness there. I've been in these kind of scenarios before. Right. The biggest one I was in was a stock called it was ALTR, I believe. It was a penny stock in the OTC market. It went up 15,000% in a day. Right. Obviously, this one here definitely over that. I've seen other stocks go up 3,000% in a day. But the one I was in went up like about 15,000% in a day. Around about 16,000%. Somewhere around there. No, it was 1,500%. I might have been saying it wrong. I have to go back and pull up. I got it. I think it was like 1,500 or 1,600%. Or was it 1,000? Man, it's been a minute. It was back in 2017. So that's why it's been a minute. Right. But I still kept like a couple of the shares as a reminder, of that great trade I got in. And I got in around about, I think, a 009, somewhere around there. And it went all the way up to like 16, 17 odd cents, somewhere around there. So it rough, big banger to the upside. A nice little grip on that. Again, look at UAVS is up near 270% right now. Still climbing higher. Just that little bit of time since we've been talking, it's up an additional 20, 30%. Again, quick scalp moments. When we say quick scalps, so you guys jump in with a quick little, $100, make 30% on $100 real quick. You didn't pick a quick $30, you out of there. I mean, this is day trading though. What I'm speaking about now is strictly day trading. This is not long-term investing value, right? Again, I'm always going to be the first advocate to say that we're here for long-term investment, value investing, dollar cost average based investing, putting it away for a rainy day, letting it grow up near 300%. Now we're at 300%. UAVS is up 300%. Look at the squeeze right here. Look at the squeezing up here. Gang banging to the upside. Right? Bloods and cripping up to the upside. Crip walking to the upside. Look at that candle there. Broke the old high, and now it's up there in what they call price discovery territory. Price discovery territory. Right? Broke the old high right here. Right? Roughly about, in the 8 some cents, somewhere around there. Now it's off to the races. If it holds. 314%. The stock came from, look where it came from, guys. It was trading at literally 36 cents a share this morning. 36 cents a share this morning around about 8:30. And then it took off. 36 cents. Again, couch money. Some of y'all got this couch sitting in y'all couch right now. You could have bought one share, no commission fees on your Robinhood, Webull app, whatever. One share, and it's already up $1.42. So you done picked up like $1 and change in profit off a 36-cent share stock. And you just bought one share. Again, it's high in sight because it's after fact, but this is how you break it down in terms of the case study. Now the goal is to find these stocks. That's when the work comes in. Right? That's when the work comes in. Right? Because it happens all the time. They're all around. Right? These stocks just get the gap up and running up just here over 100%. Pulling back in the back in the day a little bit. Right? If it's going to hold, it definitely better hold. If it's not, it's going to get out of there. But we gave alert on this stock this morning at around about $2.55. About 9 o'clock, Black Box gave an alert right $2.55. It went from $2.55 up to $6 and some change. Up near $4 a share in a matter of what time? About 10 o'clock. So about an hour, this stock picked up, $4 a change a share. That's the kind of stuff I'm talking about. From $2.55. It started turning over. again, my little 9:50, 10 o'clock pullback strategy, just like clockwork. Look here. A little bit after 10, it rolls back over. I'm out of there. I'm out of there at that point. So again, just a part of what, part of a day in the life, right? It's a part of a day in the life. And again, you got LTR, PB sitting up here gapped up like they just got no, like no tomorrow. Wall Street, this is when they come in and start pumping the market. So right now they're pumping the market. Again, like I told y'all, like clockwork. I mean, these greedy buzzers have no chill, right? These greedy buzzers have no chill, right? So again, just a part of the game, guys. So, we study to be approved. We take this stuff serious. We're utilizing the greater good of our ability to make sense of this stuff, literally profit and sense, right? And then we come in and play the game of Robin Hood, right? Taking from these old, these greedy rich jokers and spreading it out with people who are on their way to get better and get, to acquire more, right? This unlimited pump and dumping right now, just unlimited pump and dumping right now in the markets. Right. And this is the point where, again, at the 12 o'clock hour, that's when they cut on the algos in terms of the banks. They come in while everybody kind of sitting idle, and they run the markets up. They run the markets up. Yeah. They can't, like, how dare them lose money, right? It's that kind of mentality. How dare, the market be down today? Where's your benefit? Right? Where's your benefit? Right? Bad data came out today. I mean, bad data came out today. We talking about record number of data points came out today, and you still will find them trying to run the market up. Again, these people got no chill. Right? They have no chill. Right? Let me share my screen here. Then like I say, I'm gonna jump off for a second here, guys, and go have lunch. But I'm gonna leave my screen going, so you guys can be able to see this stuff happening in real time. Right? But this is your SP 5. Look at this bottom bounce here. Look at this here. Again, remember I told you they're trying to keep it off the lows, that 275 breaking that. Look at there. Where all this volume came from all of a sudden. Who buying the market up at 12 o'clock on the dot? All right. Who came in that obviously at lunchtime when most people actually even at home, probably ordering lunch. They ain't sitting in front of their screens. Who buying the market up right here? With this kind of level of volume. And the market is melting up higher. Again, you gotta learn when to spot a crook, a criminal. And I'm saying that obviously because you know what's happening, but again, they're utilizing your bank repo money that's coming in from the feds and just popping the market up, trying to prop it up. They're trying to prop it up. Again, they ain't fighting here. Just keep running it. So again, you play that scalp like I was telling y'all. You catch the bottom and you play the scalp. You can scalp it up towards the 20-day moving average. On that last chart I showed you, they trying to play that VWAP scalp, get above it, try to push it high to get back up near that 20-day moving average, which is roughly around about what, 280, right? Good luck. Right. But they definitely gonna try. Because again, greed has no chill. Right, there you go, brother Robert. That's how you get it. That's how you get it, brother. Demonstrating, right? Because again, you ride the wave. Again, when it's happening, you ride the wave. Right? You ride that wave. Right? That's what it's all about. When they say when others are greedy, you get fearful. When others are fearful, you get greedy. Right? So it's part of how this game works. And look at that volume. These are 5-minute candles, mind you. The volume is coming out of nowhere. At a time when people, again, spraying Grey Poupon on their little crusty toast, warming up that little, them noodles from the night before, whatever. And Feds over here just pumping the equity markets with no chill. So again, these are moments you start looking at when they start getting overextended. So you look at the indication down there, it's overbought like crazy, right? It's overbought like crazy, right? Way up here, RSI right here. It's just on the daily aspect here, on the daily, overbought like crazy. Right. So again, just something to watch here, guys. So I'm gonna leave my screen open and showing here while I go and have me a lunch. Again, I'm not gonna sit here and lose nutrients now. I normally go hard for the family, but the brother got to eat. So now, if you guys do want to come on the panel and hold it down while I'm having lunch, you guys are welcome to. I will post a link. In the event you guys do want to come on, let me get that link. I won't be here, obviously, but if you want to come on and narrate or show some stocks or whatever you have ability to share the screen, you can. If not, you can just let the screen share and just kind of talk. If you want to just share some ideas, whatever. Totally you guys' choice, but I'm going to get me some lunch, right? Go get me a little booster, right? Get my little booster shot, a little booster vaccine, right? All right, my vaccine come in the form of a whole organic ingredients, right? Leaves and juices and fruits and that kind of stuff. And that's my vaccine. Yeah, so that's the link there, guys. If you want to come on to the panel, there's the link. All right, oil market getting beat up again today, right? Which we talked about that, right? And we talked about the oil market. I said it wasn't enough. Right now, 10 million barrels per day wasn't enough. Right. So again, it is what it is. So the oil market getting punished because again they want more, and the Saudis are fighting again. They fighting again today. And I say you can't put you putting that kind of level of trust into that entity, right? Again, these people controlling the market. They want to make sure that they're in control and not USA. So no matter how much Trump's in there acting like he's taking victory for bringing people to the table, he ain't doing nothing but running his fat mouth. He always looking for a W because he used to taking L's, right? Again, don't get upset because I'm talking about your favorite president. But again, to me, they just regular people, all of them. I don't care about none of them. Right? All of them charlatans. There you go. Right, what's going on, over Chris? What's going on, family?
Hey, peace, family. How you doing, over?
Doing well. Sitting there trying to break down, make sense of this stuff. Share some wisdom. Share some knowledge, share some wisdom.
Oh, you're one of the best at it, so it's greatly appreciated, for sure.
Yeah, I'm humble. I'm humble with it.
Yeah. So you traded anything today?
Yeah, I got the I showed my one trade I had. My spy put, I bought that spy put swing yesterday. That was a nice little bag. I know I should have bought two, but I bought one. But again, that ended up making right about $120 off that. So roughly about 100%. I paid $1.26 for it, and I made like $1.20 off of it. So close to right near 120. Close to 100%. I hit up APA oil play. I had two puts in that. That swung, obviously, waiting for it to break below 8, and it did. So it's down now, roughly about 750. Hit a low around about $7. All right.
Right.
I had three of them. Excuse me, three of them. All right. So they're down. Meaning this, that those were profitable today. What else did I take today? I took. What else did I trade? I traded something else.
Still holding Boeing, right?
Yeah. I still got a chokehold on them. I'm just waiting for it to break down in the back in the day. If it is, if it's not, the Fed's gonna pump the market. They pumping it right now. They are pumping it. They juicing the markets. You got the S&P 500 all the way back up to 278.64. Like I said, they climbing that wall of worry to get it back up near that 20 moving average, which is the 280 mark. And so again, this is them using that taxpayer money. You know how it go. They're in greed mode, right? They're in greed mode right now.
That's right.
Again, just you get in with them and ride it up, and when they roll it over, you roll it back down. Right? If they roll it around, again, knowing how they are, they're gonna try to run it up higher, as y'all can see right here. Right? They don't. And again, these people ain't got no chill. So again, you got a perfect rounded bottom almost here on the bottom here, where they kind of played that through it like a fiddle here, and then they will unleash the hounds. Right into that 12 o'clock hour. That's when they always kind of release those hounds indiscriminately when people not paying attention. They'll run it up. You'll come back from lunch like, man, how the market up? Well, that's the cover that they use to kind of bring in that new tranche of cash from the repo operations and flood it out, because again, the repo operation for the day typically ends around about 1:45. So this is when they use that last tranche of money, dump it, get it off the load, right?
Right.
They come and do just that. So again, a lot of people might not know what I'm talking about real quick. Let me do this here, then I'm gonna get off and go eat me some lunch. All right, one second here. Let me go to my screen here. Excuse me. Let me go over here. Let's go to where is this? Hold up. Where am I? Over here. Where my thing at? All right. So yeah. So yeah. Real quick. Let me show y'all this, and I'm gonna go eat. All right. I'm gonna sound like Barry White. That means my voice, my throat, even hungry. All right.
Yes, sir. Very white.
The Barry White on them. All right. See right here. Y'all see this? This is the repo operation for the day. So just let y'all know where I'm at. So this ain't no, this is a primary source. All right. So what's up? All right. This. All right.
Yep. I say it's Wednesday, April 15th, which is today.
Oh yeah. All right. Look what time the operation close time. What I say operation close time is what?
1:15.
That's when that tranche came through. What? 3.1 what? 3.15 billion.
Yep.
That money started coming in right in around a little bit after 12 o'clock. They unload that switch and they unload, hit the switch on that. $3 billion in that little bit shorter time into the market, just like that. All right, this here operation here is the one that extends into tomorrow. Guess what? Treasury, agency, mortgage-backed lending, loan, debt, collateral, junk bonds, all that stuff. 16.35 billion. Now you don't know the exact time they're gonna do it. They ain't gonna tell you that. But guess who gets to know that? The banks.
Yep.
The banks get to know it because the feds give it to them, then they turn around and inject it to the market. That's how they sit around and make money off y'all all day long. If you didn't know, now you know, brother. Right?
Thanks.
This is how they do it, guys. This is how these crooks get away with it all day. So how can you beat something like that? You can't. When they doing this kind of injection, right? When the government take control of the stock market, it's not a free market anymore. The Federal Reserve has pretty much done it, what they call a coup d'etat or a heist of taxpayer dollars because of this coronavirus, and they just flood the market with all this money, and you doing it right underneath your nose by giving it to the banks to make the actual payments, and the banks, the feds actually making payments on their own too, and they just dumping it in at integral times and running the market up or getting it off the lows to keep it up, but keep this bubble inflated.
Right.
Wall Street ain't hurting for them to be sitting there trying to do all this. They trying to make excuse that it is when it's not necessarily. It's not. It's companies out there that are just ratchet and raggedy and need to fail. But they're going to get a stimulus, right, like Boeing and many others, but they're going to get a bailout, again, based on the idea that you too busy worrying about how you feed your babies, and they're going to come right in with their hands out and get some of this socialist money. This socialist welfare money that they sitting there try to make you feel bad about in terms of socialism. And then Trump came in and became the biggest socialist president ever in American history. He's borrowed well over $4 trillion. He borrowed well over $4 trillion and then $6 trillion in the past, literally about the past 5-6 months alone. Ran the national debt and was the biggest advocate against all that stuff when he was trying to run for president, about running up debt and all this. And he came in and just borrow. And guess who benefit from it? You or Wall Street or their corporate buddies. This is the game, right? Right here. Look here. Wednesday, April 15th, right? What time did the operation here close? At what time? 1:45. What time is it right now? Not 1:45.
Yeah, it ain't time yet, but it's coming.
Another 8 billion. Another 8 billion. It's in the billions, guys. Another 8 billion. Not done yet, right? Let's come back. Here's the fixed rate one. Another 9.9 billion. This operation ends what? Today. This right here closed at 1:15. So guess what? Another 9 billion. Not making this up. Showing you all the data. This one here ended this morning. So this right here was the first wave of pumping the dump. They tried to pump the market with everything from that point on up. 9 billion, 8 billion, 16 billion, 3 billion. All that came into the market. And that's why you got the SP 500 going up right now, because they literally buying it, running it up. scalping it, making money off day trading the market with taxpayers' money. And then they'll sell a good portion of it, get out. Again, when you put it, like, think about that. Put it in the context. $1 billion, right? You buy the SP 500 at 276. You put $1 billion on that. You can do how much shares you'll get from a $276 ticket. They run it up to the 278.79. That's basically over what? 2 points and change, right? And then 3 points basically off $1 billion. And we talking about these 3 billion, this 16 billion, all this kind of stuff. How much money they made in that moment? Let that marinate for a moment. Let that marinate for a moment. Primary source. If y'all don't have this site, y'all need it. Into the back chat it goes. Right? Into the back chat it goes. Right? Y'all gonna get this knowledge. Y'all gonna get this knowledge. Learn how to track the money. Learn how to keep your eye on the what? The crook. Right? Mm-hmm. I call them crook because that's big what they are. You're like, man, that's people daddies and man, stop. Y'all know what it is. These people ain't doing that for y'all. Stop acting like they're doing something for y'all. Just because you get to go to McDonald's at 2 a.m. in the morning, you think you got something. Mm-hmm. You just go get a heart or so, a heartburn, and diarrhea. You ain't got nothing. You ain't got nothing. You're on your bragging because you can go to McDonald's at 2 a.m. in the morning. But again, this is the game, guys. That's the St. Louis Fed, and this is the New York Fed. Those are the people control of dumping money into the banks in the repo reverse operation, into the equity bonds, junk bonds, muni bonds, all those kind of treasury bonds, stuff like that, ETFs, to run the market up during this time when there's so-called this uncertainty and despair and coronavirus and whatever. And they just drop you a little $1,200 check and tell us that might be the only one. And the Democrats push back. They say, guess what? Now y'all need to kind of drop some more. Canada giving out $2,000 a month for their citizens, $2,000 a month for 4 months minimum. You got a $1,200 check, your bills piling up, and when they release that moratorium, you got to pay all them bills all in one lump sum. Now, how you gonna do that on one $1,200 stipend from the government? That's a tax credit. Not even free money. It's a tax credit. Got him. Got him. Again, people vote against their own interests. Ron DeSantis trying to put people back to work faster than Trump can. Finna put people at all kind of risk hazards. When they know that coronavirus, and it's an old folks retirement place in terms of the state of Florida, my home state, they finna open that junk up just to defy human health services just to open it back up so they can make some money. And then they don't want to give you no money to protect. Man, okay. Let me get off my soapbox and go eat, man. let me close it down. Let me go eat. All right. Again, the market or the stocks will be up. Again, if you guys do want to come on the panel and discuss it while I'm away, that's on you guys. Again, I'm sure Over Chris always come through and hold it down. I can never say enough about that, brother. I appreciate it. All right, devoting this time. Not that you guys have to. I'm just saying it's a workshop environment here. Y'all know how I like to roll. We do this stuff together. That's how you learn. You come on, you ask questions, whether it be in the back chat, whether it be on the live broadcast, if you're able to, obviously. And let's discuss it, right? That's what I love about it. Yeah.
Village mentality. Village mentality.
Yeah. That's it, 100%. It's all about the village. I love that. I love it. Right. So that's it on that, guys. So if y'all want, I'll leave my screens up, my trading screen up. Or I can put it on the SP 500 on Trading View. Trading View, if y'all, however y'all want, it doesn't matter. But I'll let it run while I'm, going to handle my little intake moment, right? My little nourishing moment. I put it on CNBC. Yeah, let me go. I'm gonna put it on CNBC, and then yeah, I'll put it on CNBC, and we'll just let it run. Let them talk about it. Hit them. Let's listen to them lying over there at CNBC. Basically, they're lying about something. The market's supposed to be up today. It's the reason why it's up today is because of blah 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 blah. Okay. All right, so I'm gonna share my screen, and I'll be back, guys. And there's the link, you guys, if you guys decide to come onto the panel. I think I had to do it manually, but just in case.
I will say this though, Over. I'm getting rid of half of my portfolio because all stocks are pumping down.
Well, you got to know how to again. Well, that's how you manage your money. Banks allocate money to different resources or different branches of their, their services. It's the same way with you, because if you made enough money at a certain point, you hit some goals that you had in play for yourself, It's okay to pay yourself. Take a little bit off the table. See, that's the part about even long-term investing where you can do that. You don't have to liquidate your entire position, but you can take some of that profit that you made, that extra profit, or that house money value in the profit, and still be in at a point where you kind of came in at a certain dollar point, just with less shares, but you still, took that kind of extra. See what I'm saying? And you just kind of allocate across some other asset plays that some of that might be underperformers or some things that are getting ready to break out. And that's all you do. You just move your money around. Same way you do when it comes to your bills and stuff like that. You just move money around. That's how this stuff works, right? So knowing that and learning how to do that will make you a better money manager than a bank could ever do for you, right? And them charging you a fee for you. Manage your own money. Right. So I love that, man. That's what I'm talking about, Chris. You learn how to make it happen. Shift it around, put it to other places where it can grow. And again, just keep doing it. Wash, rinse, repeat. As we say, wash, rinse, repeat. That's all it is, guys. Right. So that's it, guys. So yeah. So let me I'm gonna put that screen up. Matter of fact, I'll make sure I put that that LTRPB up so we can see how that retarded start running. While I'm away at lunch, y'all can keep your eye on it because I'm pretty sure when it get ready to start dumping, y'all gonna see exactly what I'm talking about. All right. So let me pull that joke up. Let's replace with JP Hunt with it. Right, I got me some of that JP Hunt money back. They got me on an auction put that I bought, and it went up on earning. But I turned around and shorted that joker and got some of the money right back. Got him. So I don't need to have that screen up anymore. LTRPB is that ticker symbol. All right, so I'm gonna put that screen up so y'all can watch the fireworks with that one while All right, there we go. So let me hold up. This is the daily chart for the 1 minute chart. Yeah, this is daily, just low volume. That's why. Okay, yeah. So that's that. All right, yeah. So Chris, you got it, fam. The reins are in your hand, family. I'm gonna share my overall screen. Now, unless you want to share your screen, if not, I just share my overall screen.
Yeah, I'm on my phone.
You on your phone? Okay. Okay, no worries, no worries. Let me share. Let me do that. Oh, and I gotta switch my mic to. Well, hold on. I just let it run. Let me see. God dog it. Hold up. Blah, 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 blah. Share screen, application. No, entire screen. All right. So that's it, guys. So I'll be back in a minute, guys. Peace, power, and profit, everyone. We're just going to have a quick lunch.
All right. Peace, y'all.
All right. Peace, family. Peace.
Volunteers, but baseball was the first one to say yes. The goal of the project is to provide a better understanding of how many people in various parts of America have been infected. That could help researchers figure out how many people might have been exposed but suffered no symptoms, and that information could help public officials determine when it's safe to ease up on social distancing rules and to slow down the pandemic. Kelly, back to you.
Yeah, no, it's fascinating. We know this is the next step towards the reopening, but you said MLB was the first to sign on with this, but how did these two groups get involved?
So in addition to Stanford and USC, there's an anti-doping lab based out of Utah that's part of this study. There's not a lot of anti-doping testing going on right now because there are no sports, so they are getting involved with this. They already had an existing relationship with MLB, and so they were able to use that relationship, and MLB was very quick to say, yes, we want to participate.
Wow, that is fascinating. That is a great repurposing of something that wasn't being used.
Right.
Eric, thanks so much. Yeah. Eric Chemi. Coming up, some of the biggest tech names have been the big leaders this month. Amazon, Netflix, Google, Microsoft, and most of the semiconductor names. Will the run continue? We will ask. Plus, more companies may be looking to add cash to the balance sheet as they prepare for a downturn. Could dividend cuts be on the table? And if so, who's most at risk? Stay with us. Welcome back to the exchange. Let's check in on the markets about half past the hour. We're 200 points or so off the lows for the Dow, but we're still down 495. That's a 2% decline. 716 was the low. The S&P 500 down 2.25% right now. The Nasdaq relatively okay, down 1.5%. Here are the sectors that are leading the way to the downside. Energy, top of the list as crude broke below $20 a barrel. The sector's down 6%. Materials down 4.5%. Financials down 4% today. And let's check on the price of oil. It's barely back above the $20 mark. Its lowest level intraday since February of 2002, fighting to get back into positive territory and struggling to do so. Now, many companies have suspended their share buybacks and even withdrawn guidance here, but only a few have halted their dividend payments. Could that be the next shoe to drop? Bob Bassani rejoins me with some of those answers. Bob?
And you've heard Procter & Gamble and you've heard Johnson & Johnson. They increased their dividend both by about 6%, but they're outliers, Kelly. You're not going to see a lot of that. First off, they have very modest dividends, around 2.5%. More prevalent is trends towards cutting and in some cases eliminating the dividend that you've seen. So there's Johnson & Johnson, Procter & Gamble trading to the upside. They've had very good runs recently. But if you take a look at those canceling the dividend, suspending it, we should say, Carnival, Darden, Ford, Hilton, Nordstrom, Delta, Boeing, it's a fairly long list. It may get a little bit longer in the next couple of weeks here. Wall Street circulating lists of plenty of companies out there that have seen dramatic price drops, big increases in their dividend yields, and perhaps most importantly, big cash flow problems, but that's going to be the most important thing. So here's companies that have pretty high dividend rates that have really rocketed in the last few weeks. Kohl's at nearly 15%, Schlumberger and Halliburton are both 13%. Halliburton's probably 10%. Ethan Allen, Host Hotels, American Airlines. You'll notice something about this. They tend to cluster in a particular subsector. So you're seeing retailers, energy, hotel stocks, airline stocks. Those are the ones that are seeing the dividend yields rock up the most and maybe at the most risk of a dividend cut. So what does it mean? Does it mean that dividend payers should abandon the market? And I don't think so. Most of the time, there's estimates of 10 to 15% declines in total dividends paid this year, but they're largely concentrated in those particular sectors. And Kelly, I think that's a little bit of a good sign for the overall market. We're not seeing mass dividend cuts going on, but certain sectors, oh yeah, for sure.
Yeah, that's true. Bob, thanks. Bob Bassani. But from dividend cuts to tech, Amazon and Netflix hitting all-time highs and leading some traders to believe that tech offers the best promise for a way out of the slowdown that we're seeing. For more, I'm joined by Paul Meeks. He's lead portfolio manager of the Wireless Fund. Paul, it's good to see you. I haven't caught up with you in a little while, so tell me how you've been positioning throughout the sell-off.
So what I've done is I've reshuffled the deck, and of course, as technology stocks did so well in 19, most technology stocks last year up 40 to 50%. If you are somebody like me that actually looks at valuations, I had to dip last year, particularly towards the end of the year, to the JV team. Companies that were not as nice as I wanted to, but they were relatively attractive valuations. Well, then you get into 2020 and you have the coronavirus and you have the big draft downwards in stocks. And so what I've done is I've gotten out of the JV teams. Now I can go into the varsity names because these are ones that are actually quality companies that now, for the first time, and sometimes not just months, but years, are reasonably valued. So I've done that. And then with surplus cash, I'm actually still building a pretty big cash position because I'm not one of the believers that this is going to be a snapback that's actually going to sustain itself.
Oh, interesting. So you want cash to be able to buy maybe even cheaper, those varsity names, even cheaper valuations. Who are those names that you're snapping up here?
Now, one of the things that I'm interested in is there are a couple of companies that were showing a lot of momentum pre-coronavirus, and it's going to be obvious to all in the post-coronavirus world that they are getting stronger. Netflix, Amazon. Recently, I beefed up my holdings in Activision as a gaming play, Akamai as an internet speed and performance and security play, and some other names, because I want to make sure that they're the best names and also they fit the themes, because the themes are going to be different on the other side of this. Make sure that they are fitting the themes for remote workplace and some of the other major themes in technology.
So you think remote workplace becomes a big thing coming out of this? I kind of wanted to ask you about that. I mean, a lot of people have piled on to the stay-at-home bandwagon trade. So I'm a little surprised to hear you in that as well. Is that because you think this is going to be a permanent shift, or just because they got so cheap that you could comfortably buy them?
Well, it's interesting. I've separated my portfolio into some core names that I discussed, And I do have some trading names, such as Zoom, which is a stock that I will exit as fast as I enter, because maybe over time it is a permanent beneficiary of the live at home, work at home theme. But as of now, it's still on the come. So I have some on the fringes. I'm playing with the coronavirus successfully, some of those plays, but they're definitely not core names, and they will go, as I said before, as fast as they came in when the time is right.
So Zoom's at 150. What's your selling price?
I think if Zoom gets back to the mid 160s, which was its high just a couple of weeks ago, I think I just, as I held my nose and bought it, I'd probably have to hold my nose, and even if it might be up 5, 6, 7% as it is today, on that particular day, I just have to sell it in good conscience until they show that they can actually monetize this huge influx of subscribers. I'm not a believer long term.
Oh, I have to squeeze this in. Everybody's loved MasterCard and Visa. Many people have picked them up on the sell-off. Why did you sell them?
MasterCard and Visa do dominate the backbone of payment processing. But the problem is, in the post-coronavirus world, we're going to be going to bars, restaurants, doing face-to-face transactions a lot less. And so I think in that space, you want to be in different names in payment processing versus MasterCard and Visa, which actually got very expensive because they did so well for so many years leading to the coronavirus. I just think they're bigger fish to fry than those two.
Would you give us the name of who you think you should be in the payment processing space?
I think as we morph over time, I don't do it right now because I still think they could go lower. But PayPal and Square are probably more interesting to me than MasterCard and Visa.
All right, Paul, always answer the questions candidly. We really appreciate it.
That's my thing.
Great to see you, Paul Weeks. Paul Weeks of the Wireless Fund, the lead portfolio manager. Coming up, getting the right supplies to the right places at the right time. A look at how one new partnership hopes to streamline that process. Plus, how did every single resident on wealthy Fisher Island and their staff get an antibody test when many doctors and patients across the country still can't get one? That story is straight ahead.
Yeah, I'm getting rid of a good part of my portfolio. And focus on my ETFs and Netflix, Amazon, Tesla, Apple, Microsoft, and a few others. Big assets. There's some other ones I'm going to keep too that are small but growing. But it's about money management.
Welcome back. Let's get to our big calls of the day, and Tesla is topping our list once again. Goldman initiating the company with a buy of $864 price target, to be specific. Goldman says Tesla is well positioned to benefit from long-term secular growth in electric vehicles, and that the company's early mover advantage should allow them to maintain good market share and gross margins. They say the company has also made improvements in cash flow. Tesla shares are at $727 today, up 2.5%. Next up is Canada Goose. D.A. Davidson upgrading them to a buy and raising the price target to $30 from $20. Canada Goose is at 21 today. They're saying that concerns about inventory overhang could recede as we move past the COVID crisis. They also like to set up for 2021 because this crisis will help next year's comp. They add Canada Goose to the solid balance sheet and liquidity position. Still, the shares are fractionally lower today by about 2%. And finally, Target upgraded by BMO to outperform and its price target hike to 125. Target, they say, is poised to emerge from this pandemic in a stronger position relative to peers whose closures may accelerate. And Target's trial of same-day services has also picked up, which BMO says will support a competitive advantage for the company and support higher margin sales. Target's still taking some profits today, down 2.5%. While the need for critical healthcare supplies to fight coronavirus has been great, so has been the willingness to help. But getting what's needed to the right place in a timely manner has been a challenge, and that's where the Frontline Impact Project comes in. Frank Holland is here now with more on that for us. Frank.
Hey there, Kevin. As part of that project, Snack is donating 5 million Kind bars and $1 million to healthcare workers that are responding to the COVID-19 epidemic as part of that Frontline Impact Project. It also facilitates corporate donations of food, transportation, and lodging. It's all part of Project N95. That's a nonprofit that handles the logistics for hospitals to buy pieces of critical equipment. Organizers are using what they've learned sourcing PPE for hospitals to get donations for workers after hours.
The biggest issue that we've seen has been the ability to understand who out in that ecosystem of suppliers actually has the equipment or the products that the hospitals can purchase. So the imbalance there really is that there are many people raising their hands saying we provide that, but there are very few who actually can deliver on that.
Now we're creating a sister platform to enable them to also get healthy snacks or travel vouchers or lodging or any other needs that are donated by corporate organizations.
And delivering donations has been a challenge. For example, Ralph Lauren partnering up with a nonprofit to deliver thousands of masks and gowns for donations on the East Coast. And then you have Las Vegas Sands handling the donation of 2 million masks in Nevada and New York all by itself. And then you have companies like Lowe's using medical supplier companies, Premier and Vizient, to deliver $10 million in PPE nationwide. Okay?
Markets everywhere. Frank, thank you. Happens to put all the Franks together. Frank Holland with the details on that partnership for us. Now to Robert Frank, who's going to tell us about the antibody testing kits among the many items in short supply across the country. We know that, but if you live on Fisher Island, Robert, suddenly you can get a test. What's going on?
It's amazing, Kelly. Well, only 1% of Floridians have been able to get tested for the coronavirus, but 100% of the residents of Fisher Island off Miami have just gotten the antibody test. Now, the residents purchased 1,800 test kits for the island's 800 families, as well as for their housekeepers, their landscapers, and their workers. Now, everyone on the island would get the test, which gives them almost instant results on whether they have been exposed to the virus or have the immunity. Just to be clear, this is not the nasal swab test, which tells you whether you are infected. And of course, that test is more demand. But the testing has sparked a backlash in the state where there's still a lot of demand for tests and a lot of wait for testing right now. The spokeswoman for the island, which is only accessible by boat and has an average income of $2.5 million, said that since many of its residents are over 60, they are high risk and pay for the test themselves at $17 each. She said they are also engaging in social distancing since the marina, the golf club, and the tennis courts are now closed. The University of Miami Health System, they're the ones that provided the test. They said in a statement to me that, quote, we may have created the impression that certain communities would receive preferential treatment. They say they are now revising that system for providing the test. But clearly, as this crisis has exposed a lot of levels of inequality, this is just another example where people can point to it and say, see, the wealthy got different treatment from everyone else.
Right, because the cost is not an issue here. $17, almost everybody could get. What should I call up the University of Miami and ask for one myself? I mean, Miami's going to face more questions. Exactly. Like it's who is the person with the access and why was it granted by the University of Miami?
Well, that is the question. I suspect somewhere in there, there's a wealthy resident of Fisher Island that probably also serves on the board or is a big donor to the hospital. I don't know who that might be. The hospital system saying, look, this is what they wanted. We've provided it. Now, interesting, I found out that the test for the island came from the same company that the hospital got the test from for a broader Miami-Dade County government study. Again, they're saying they didn't divert these. But it is interesting they came from the same company.
Very lots is about this. Robert, thanks. Appreciate it.
Thank you.
Robert Frey. Coming up, why the Fed's emergence as a power player is posing new risks to its independence. Greg just wrote about it, and he'll join me live to talk about it next.
So seems like I'm gonna have to make a quick run here, guys, and grab me a little lunch because what I have a taste for, I can't put it together fast enough. So I'm gonna run out and grab me a quick little lunch. Get me a little eggplant, right? Little chickpeas, right? Make me like a little nice little meal here from the restaurant. So I'll be back again. I am sharing my screen as you can see, so it's not like you guys necessarily can't see it still, but yeah, I'm in my preparatory mode, so I just want to show y'all guys, your brother be taking it serious, right? So as you can see, I got my N95 mask on here, right? So we never have a moment where we don't stop and do what they call a PSA, right? So I got my N95 mask on. I don't know if you can see. Let me see here. All right. Got my,
the market is looking to the Fed for leadership.
got my N95 on.
And it has arguably emerged as the most powerful component of the
right.
response. But as the central bank takes on more power, it's also.
And what I also do, I get a lesson. This is how I leave out the house, right?
I see you, Oba.
You see me over here looking like Bane, right, from Batman. Right around looking like Bane. I'm gonna go beat up Gotham City tonight. Boy, I'm gonna rattle up there around these little streets here.
Facts.
You know what I'm saying? Like, let you know, I practice what I preach. I ain't just talking. Hold on, let me put my little buff on. I put my mask on, my N95 mask on. And then I turn around and put my buff on, right? So these buffs come in handy now. Man, I wish I now got more. I got a few, but, right? Put my little buff on top of that. And this is a fishing buff.
Yeah.
You guys know what I'm talking about when I say buff. All my outdoor people out there, y'all know exactly what I'm talking about. Put that buff on.
Yep.
Wrong side. Okay, here we go.
Use those for hunting in the cold.
Yeah, yep, or fishing, yep. Keep the nets and stuff out your face, or keep, hunting in the cold. Right over, Chris. You forgot, you in Texas, you know what it is. On that prime real estate market out there in Texas.
Yes, sir.
So this helps also keep it sealed better too, even though it's still, it's pretty decent seal on it. But again, you want it to really be taken care of. You ain't gotta be playing no games. So we ain't playing no game around here now. On my watch. Put that buff on too. Put that joker down. Y'all can see that right there. We're like I'm ready to go rob the bank, right? I'm finna go run up on the feds, dog. I'm finna go run up on them feds. Let me get that money. Let me get some of that money. All right, so again, there we go, guys. So let me see here. You can see it. I pull it up a little higher. I forgot I got this old deck standing little video cam here. Yeah, but yeah, y'all can see it. So that's how I leave out the house, man. I keep my obviously cover my hair because you know coronavirus can't get in your hair, right? So it can get inside your hair. So some of y'all ladies out there and brothers, if you can, cover up your hair too. All right, cover up your hair too. And I'm saying, if you go into a place where you know it's gonna be a lot of people in there or whatever, go ahead and cover all that stuff up. Right. So these buffs come in real good handy right now. So good thing I got, some of them laying around the house. And yeah, you can protect yourself. Right. So that's it. So yeah. So I'm gonna run out here real quick, like I said, guys, and go grab, handle a quick little bit of grab me a quick little lunch. And I'll be back here, well before power hour, obviously, but it shouldn't take me long because the little place up the street, they're doing everything only doing pickup only. So I'm just gonna call it in and swing by and grab it and come on back in here. So I'll be back here shortly, guys. But again, my screen is still sharing anyway, so you guys see it. So ain't nothing, the usual basically. All right, guys. So I'll be back in a minute here. I'm gonna cut CNBC back up, and I'll see you guys in a few.
Run out of money later today, so it's going to come down to the wire for whether there's enough funds out there for what's already been announced, not just on the Fed side. And we're just minutes away from the Fed releasing the beige book this afternoon. In today's down market, will that news top of the hour send stocks even lower? Stay tuned to find out. Plus, we'll have the CEO of Junior's Cheesecake. He's back, and he told us yesterday he got that small business loan, but he's not ready to bring back his workers just yet. That's stirring outrage from Washington to Main Street. We'll talk to him about the blowback.
That kind of guy. That's the kind of guy right there. That's the crook right there. That kind of guy. Let me get out of here, man. I'll be talking again. Oh, these maggots trying to pump Boeing. Uh-oh, it must be some news out. I know I done missed it.
Good afternoon, everyone, and welcome. Our breaking news coverage of the markets in turmoil and the global coronavirus pandemic continues right now on Power Lunch. I'm Tyler Matheson. Glad you could be with us. The market's getting a reality check at this hour after bouncing back earlier in the week and last week as well. We are off the lows, but the Dow is down roughly 500 points on a flood of weak economic data. Would you expect anything different? From manufacturing to housing to retail sales, all of those areas showing just what one might expect in a shuttered economy. Best Buy, meanwhile, announcing it will furlough more than 50,000 workers. And JCPenney exploring bankruptcy. The company now worth only about $70 million. At its peak, it was worth just under $20 billion. Plus, small business owner Alan Rosen of Junior's Cheesecake will be back. He ignited a bit of a controversy and a heck of a lot of curiosity yesterday on this show when he said he is not using the $5 million he will ultimately get, he expects, from the government to pay workers. He will be back here to explain why he's doing that and why and how that is helping him, Kelly, keep his business afloat.
Yeah, looking forward to that, Tyler. Thanks. And we're about to get a closer look at the economy. The Federal Reserve releasing its beige report just this minute. Steve Lee's been digging through it for us. Bob Bassani and Rick Santelli are standing by for instant reaction. Bob, before we dig into that, let's dig in on the sell-off. What are you seeing?
Yeah, we're down, Kelly. I want to show you the S&P 500, but we're well off of the lows. And you can thank Andrew Cuomo, market mover. Once again, we rose about 20 points off the lows as Cuomo was talking about hospitalizations down, intubations down. But if you look at the sectors that are down, these are the sectors that are down on general worries about the economy and things are not going to get better soon. So energy, banks, the Russell 2000 is getting clobbered again, industrials, and consumer staples are doing a little bit better in healthcare. This is what it always happens when you get coronavirus worries that are out there. Stay-at-home stuff's doing well. New highs. We got Netflix new highs. We got Amazon at a new high. Walmart's at a new high, and even Eli Lilly at a new high. So where are we right now? I'm describing the three stages we've been going through. First is the panic stage. That ended on March 23rd. We were down 34%. Remember that? Then by March 24th, we took off. We're 27% off the lows. But today, we got the reality phase coming in. Just look at what we've got here. We've got bank loan losses with very high reserves. We're hearing from the banks. March retail sales are the worst on record. Oil prices are at 18-year lows. The builder confidence is the worst on record. Kelly, guys, can you get much worse news than this? And I think the market's just got to digest. In fact, it's going to be a rough few months. Back to you.
Robert, thank you very much. Let's go out to Chicago and check in with Rick Santelli. Yields collapsing today on all kinds of economic data. The yields, Rick, had been stable, at least on the 10-year, for much of the past few days, but not so today.
Yeah, no, it's been unbelievable. As a matter of fact, I guess what sticks in my mind is industrial production had the biggest monthly drop since January of 1946. That pretty much says it all. Beige book Steve's going to get to, but the big headline, sharp contraction. We kind of knew that, so not a reaction now, but huge movement all day. Look at a 2-year note yield and realize we haven't seen these yields, should they close under 19.5, which we were briefly since September of 2011. Call it 8.5 years. You move down the curve. This chart goes back to the Eisenhower administration on 10-year notes, hovering around 64 basis points, 10 basis points above the all-time forever low yield close. And that isn't a good thing as these rates come down. Finally, let's look at the dollar index. This is a 24-hour chart. We've got over breaking news, I think. Breaking news.
Exactly. This is a different kind of breaking news, Rick. I'm just going to interrupt you to get the beige book headlines. And Steve, just so everybody knows, we don't get the embargo anymore. We're all doing this on the fly. What can you tell us?
I can tell you that it's a different kind of beige book, Kelly. Activity contracted sharply and abruptly, the beige book says, about economic activity in the United States. This is the collection of economic anecdotes from around the 12 Federal Reserve districts. It says the hardest hit industries were leisure, hospitality, and retail. Most districts reported declines in manufacturing. There was strong production, however, of food and medical products. Those were hampered, though. However, there were delays across manufacturing because of virus prevention measures and supply chain disruptions. The energy sector obviously suffered from high production and low demand, and obviously decreased output. Loan demand, something the Fed follows very carefully, was high throughout the country as businesses sought to borrow money to stay afloat and stay alive. Employment declined throughout all districts, and one more headline I want to give you is the idea that employment is expected to, the near-term outlook was for more job cuts in coming months. So this is a beige book, Kelly, that for month after month told us that economic activity was modest to moderate throughout the country, very little variation throughout the past 13, 14, 15 months, actually even longer than that. And then it turned sharply last month when it started to include the effects of the coronavirus, and now it's fully taken over the picture of the economy right now as we know it.
Yeah, well said, Steve. Let's bring in Rick Santelli. Rick, to kind of resume what you were saying, but maybe first to react to what we've just heard from the beige book.
Yeah, now there is virtually no reaction in the fixed income space because the reaction has been all day. As Tyler referred to, 10-year note yields here at 64 basis points haven't moved a lot since those headlines. But remember, that's down 11 basis points on the day. If you look at a 30-year bond, it's down 13 basis points on the day. The yield curve has moved 9 basis points because 2-year notes really aren't moving, so it's flattened. They're only down 2 basis points. And let me get back to the dollar. The dollar index had over a 1% range in the last 24 hours, and the HYG, it gapped lower. That's not a good thing. Credit markets were doing pretty good on the spread, especially high yield and investment grade. And the HYG now, Kelly, is giving up some of those gains that it's had, really, that started on March 23rd with the Fed announcement of the program for investment grade. And of course, then it really escalated to junk and HYG ETFs on April 9th when the Fed said, let's include some, junk ETFs in there. But all in all, the beige book summarizes what investors intrinsically have been feeling the last 24 hours especially.
Rick? All right, Rick, thank you very much. And let's get some more reaction to that beige book and what it means for the markets going forward. Gabriela Santos is global market strategist with JP Morgan Asset Management. Mike Ryan is America's CIO with UBS Global Wealth Management. Welcome to both of you. Gabriela, let me start with you. Your reaction to the beige book, which really turned a bright red crimson color.
So I think the beige book is confirming what investors have known for the past few weeks, which is that the economy is really sharply contracting here in the month of March and in the month of April as well. And today we also got the first hard data confirmation of that with retail sales and with industrial production. So I think it's pretty clear at this point that we've begun a pretty deep recession here in the US and around the world. I think the action for this week is a little bit away from the short-term economic data and a little bit more into, number one, how is this impacting the micro? How is it impacting companies, and what are they doing to position themselves? And number two, where do we go from here? And that's really the most important question right now. It's that next phase of reopening. And we hope that there's more of a realization that this is going to be a slow process, a gradual process, one that has fits and starts, and that's really dominated still by the healthcare issue. And I think that's what you're seeing in the markets today. Is you're seeing the realization that we're not quite past the storm. It's not smooth sailing from here quite yet.
It really is, Gabrielle, as you say. Where do we go from here? And Mike, how quickly do we get there? So what, Mike, is the cautious, prudent thing to do with my money right now? Where should I be, if I have incremental money left, where should I be overweight? Where should I be underweight?
So first of all, let me go back to and follow up on something that Gabrielle said, because I do think, the beige book report is, gives us kind of this grim confirmation of what we already knew in terms of this is going to be a pretty steep economic deceleration. There's a couple of things we will look through the beige book, though, to kind of get a better sense of. First of all, in terms of labor market conditions, what do companies see going forward? Those who haven't already laid off workers, what are their plans? And then secondly, what will this do for investment spending? So while the beige book is going to give us confirmation of what we see in the economic data, we'll have to look through that in terms of what do we see happening next. And going back to Gabriela's point, when do we see this economic recovery process begin to take hold? Now, obviously, there's a lot of preconditions that have to be met there first. First of all, as mentioned, we need to see the containment of the public health threat. That's the most immediate issue. And then secondly, we need to see that the initiatives that are put in place by both the Fed as well as the federal government through both monetary and fiscal policy channels are going to help us work through that transition period and allow the economy to restart once we work through that. So going back to where we're recommending, right now we're looking in three places. One, where we think there's some opportunities that have been, where we've seen some dislocations in companies where we still think the long-term fundamentals are intact. We call these our discriminating buyers list. Secondly, sectors or asset classes that reflect an overly pessimistic scenario. And one example there is what we see right now in high yield. And then lastly, where we see some long-term trends that are still intact, for example, in areas like healthcare, secondly, in digital transformation, but also in this last thing that we talked about in terms of that move towards deglobalization.
All right, let's move back to Steve Leisman, who's had some time now to pour over some of the pages of the beige book. Are you finding any nuggets in there, Steve?
Just an answer to the labor question that was just asked, the beige book suggests that more layoffs are to come, and we're going to get that jobless claims number tomorrow, where another 4 million Americans are expected to have applied for unemployment insurance. I was going to say that Raphael Bostic, the Atlanta Fed president, just said to something Gabriella was talking about earlier, that May looms as a critical month where we can find out that liquidity problems become solvency problems. And of course, solvency problems become issues that are going to be with us for a longer period of time than just liquidity problems, which the Federal Reserve can back up. I was also going to point out when Rick was on that what's happened to the 210 spread is it's taken the turn to being flatter or narrower than it had been in the past. If you remember, Tyler, the bond market was well ahead of the stock market and seeing problems out there. And now with the kind of closing of the spread here, I'm wondering if once again the bond market is seeing trouble that goes on further than the stock market might be seeing. And it's been an interesting process to watch the outlook embedded in prices. Now, the Fed is so heavily in the market here that maybe one should be careful taking any signals at all. But I will tell you that that spread has begun to narrow again, suggesting that there's maybe more concern about the outlook in the future embedded in the bond market pricing right now.
I guess, Gabrielle, I'd ask you to react to that. I mean, as Steve pointed out, the bond market last summer, fall was flashing some signals of concern, but it wasn't flashing signals of concern about a global economic shutdown and a global pandemic. It was looking at other things. Now you can make the case that the bond market is expressing its concerns about the global economy in reaction to what's happened with the pandemic.
That's right, Taylor. I think just looking at the yields we have on treasuries, we thought we had low yields last year, right, when they were a little bit below 2%. Well, turns out you can go significantly lower than that when we do have a shock hit the economy, when we do have a lot of risk aversion. One interesting point that Steve was making, I think, is really important around fixed income and credit specifically. So this idea that this shock is not just a month or two, it's really going to be a difficult 2020. And the idea that the Fed and Congress can help with liquidity but not solvency is really important. And so for us, what that means is the credit that we hold or the companies that we own in the equity market needs to be ones that we're comfortable holding for the next year and beyond, ones that have solid balance sheet and can survive this moment. And for us in credit, that means a preference still for quality or investment grade over high yield at the moment.
All right, folks, we got to leave it there. Gabriela Santos, Mike Ryan, thank you very much. Steve Leisman, as always, great to see you. Kelly?
All right, coming up, we're all over this big sell-off on Wall Street after a slew of negative economic data this morning showing the real impact of coronavirus. Of course, just reiterated by the beige book as well. Take a look at energy, by far and away the biggest loser today, down another nearly 6% as crude broke below $20 a barrel before rebounding. Financials also lagging after the big banks report weak earnings. And a mixed bag for the airlines after reaching a deal for billions of dollars from the government. Will it be enough to keep the biggest players in business? We've got a special report. Much more Power Lunch right after this.
Welcome back, everyone, to Power Lunch. Retail sales suffering a record decline in March. They plunged about 8.7% as the coronavirus continues to hobble the economy and hit the consumer hard. Retail stocks continue to take a beating. The XRT, that's the ETF that tracks the group, is down another 5% today. Let's check in with Courtney Reagan now for more. Hi, Courtney.
Hi there, Tyler. So the consumer was really the strongest part of the economy before the coronavirus hit. But once it hit, the consumer went down, so did the retail industry, and it may be what holds us back from a full recovery. Remember, 70% of gross domestic product comes from consumer spending. That's $3.9 trillion. And the National Retail Federation estimates that $1.3 trillion in sales will be lost over just 3 months during this pandemic. Surveys show a lot of consumer reluctance to spend beyond essentials right now. And then when stores reopen, will consumers feel comfortable, or will they continue the social distancing measures? Look, retail is the largest private sector employer in the country. 32 million Americans are directly employed by retailers. 52 million when you add in those ancillary connected workers. That's 1 in 4 Americans. We've got hundreds of thousands of retail workers that are furloughed right now. Thousands more that are taking reduced salaries, those corporate workers. Best Buy just today sort of announcing additional measures in that regard. And right now, the National Retail Federation is estimating that 6.1 million retail jobs will be lost entirely. This is more than a furlough in the first 3 months of this crisis, more than 12 million over the course of a year. We know that retailers have borrowed billions of dollars in revolving lines of credit. They're suspending dividends. They're suspending buybacks. They're doing what they can, but they still have expenses that they have to fund, even if those stores are closed. And then you've got names that were already on the brink of trouble anyway. I'm talking about bankruptcy, the B word. Maybe names like JCPenney, Neiman Marcus, among others. This could be what finally pushes them over the edge. And then there's a big ripple effect, especially if you've got a lot of names that go under at the same time. Think about the retail rents, all of that real estate, the vendors that are owed money. This could be a big problem for a very important industry. Back over to you guys.
Yeah, Courtney, thank you, Courtney Reagan. For more on the challenging times for the retail industry, let's bring in Steve Sadov. He's the former chairman and CEO of Saks. Steve, I mean, you just heard Courtney lay it out there. There's a lot of concerns swirling about whether these retailers are going to emerge from coronavirus.
No, I think that Courtney described the situation extremely well. You've got a very difficult time for retailers. They just going through the first phase of this, which is survival. What do they need to do in terms of managing liquidity? They've furloughed people, they've cut orders, they're not paying rent, and they're looking for loans, and they're trying to survive. Now we've got to go to the question of how are they going to open, because these are high fixed cost businesses that just can't operate without revenue. Now recognize it's not all of retailers. You've got the Walmarts and Targets that are doing extremely well.
Right.
It's the apparel retailers are down 50% in the month of March, and that was only for half of the month. So we've got a very difficult economy for a number of the retailers. And what's really going on is the ones that were strong going in are continuing to be strong. The trends that were strong are continuing. And the ones that are weak, some of the ones that Courtney mentioned, may or may not survive through this.
So let's talk about JCPenney and whether you think filing for bankruptcy protection is an attractive option for them.
Well, it may or may not be. They've got to negotiate with their lenders. Their equity value is only about $70 million. They've got debt coming due. They've got a lot of inventory that's in the system. And the real question is, what's the longer term growth strategy for that brand or other brands that are on the edge? If they have a game plan that says we can close half of our store base or some number that is far better by getting out of the leases, then bankruptcy may make a better option. Right now, nobody is putting anyone in bankruptcy because stores aren't open and you couldn't even liquidate the inventory if you wanted to liquidate it. So for some companies, bankruptcy may be a reality, others not. It's going to be the highly leveraged companies that are most at risk. And JCPenney's one. You've lost 90% of the value already, roughly in the last year and a half. So they may, bankruptcy, certainly restructuring is an alternative for some form of the debt or their leases is something JCPenney's has to look at, but so do many other retailers. They're just not alone in this boat.
Steve, Tyler here. What happens to the inventory that these retailers already have?
It's a massive issue. I
Look
lived
at the SPY.
recession, the 08-09 period, and that was when volume was down 25%, and there was
No, the Fed's dumping money.
Now you're talking about volumes down 75% or some number like that. So you're going to have billions of dollars of inventory in the system. There's going to be product for the outlets, for the off-price players, but there's so much product. There are going to be new formats. Guild and players like that came out of the last recession. I think you'll creatively see new ways of trying to clear product. But this is and it's, by the way, the amount of product that you have in inventory sitting there is limiting the amount of cash available to buy new product. So that this product is going to be clogging the system for some period of time. And it's a major problem because you've got price credibility issues in terms of how much full price will you be selling coming out of it. The real issue to me is what is consumer demand going to be as we go forward. Right now, we're trying to figure out how do you open a store? What are the safety measures? What are the testing that has to go on so the consumer will feel comfortable? The reality is we don't know what their shopping behavior is going to be coming out of it. Yeah. And I personally think it's going to be a lot slower than some people think.
And in that case, Steve, what does it mean for the society? I mean, if we just don't have the level of stores, you know, at all in 6 or 12 months that we thought we were going to have, we know store closures are picking up already, but this is a very different phenomenon. It's going to have huge ripple effects, I would imagine, on the labor market, on the shopping malls, you know, on towns, on budgets.
Well, clearly you're going to see a lot more store closures. We have 3 times the square footage in terms of number of stores as Europe. So you're going to see a falling out of number of stores. You're going to accelerate the trend of the poorer malls, the C and D malls closing. So you're going to see a closing of a lot of stores, but you're also going to see some other things going on. Some of the early stage companies aren't going to be able to survive this because they don't have the financing capabilities. And it's not just getting a bridge loan. It's really being able to get the consumer demand coming back. I think you have another problem, which is, and Courtney referred to it, is a lot of these retailers are going to use that line from the last recession, which is don't let a good recession go to waste. And they're going to fundamentally restructure, and you're going to have a lot less people coming back on stream. So the unemployment rate getting back to the kinds of level that we were at pre this isn't going to happen that quickly. So that we've got to factor in a much slower demand structure in the third and fourth quarter.
Yeah, no, it's going to be a challenge, and it's just incredible to see that JCPenney equity at 26 cents per share. Steve, thanks. We appreciate it. Steve State of. Tyler?
Well, Kelly, still ahead on this edition of Power Lunch. Crude dipping below $20 a barrel earlier today as the coronavirus drives demand way down and inventories go way up. We are all over that move as the oil market gets set to close for the day. Plus, Airbnb was supposed to be an IPO darling. Well, now the rental company is taking on billions in debt just to stay afloat amid the virus fallout. We will bring you those details after this short break.
Welcome back to Power Lunch. Let's get to Eric Chemi for the latest on the coronavirus at this hour. Eric?
Kelly, good afternoon. New Jersey is reporting a nearly 40% drop in daily new cases, only 2,625 since yesterday. But Governor Phil Murphy says there are 351 new deaths, taking the state's toll above 3,100. He's urging residents to remain vigilant.
Don't take your foot off the gas, folks. Stay on this. I know you're itching to get out. You're itching to get back to normal. So am I. Who could blame you? We can't. We just can't yet. I promise you, the second we think we can, we will let you know that. You have my word.
Honda is furloughing most salaried workers in the United States for 2 weeks. It began shutting its North American operations on March 23rd and says U.S. and Canada facilities will stay closed through May 1st. Volkswagen will resume some production in Germany next Monday and in the United States on April 27th. Plants in Spain, Portugal, and Russia will also restart on the 27th. VW says plants in other countries will ramp up production in May. As always, for more coronavirus coverage, head to cnbc.com. Tyler, back to you.
All right, Eric, thank you very much. U.S. airlines, including American, Southwest, Delta, among others, have reached apparently a preliminary agreement with the Treasury Department for payroll assistance. Phil LeBeau spoke with Doug Parker, the CEO of American, about this, and he has the details now. Hi, Phil.
Hi, Tyler. Clearly a much-needed lifeline, not only for American, but all the airlines as they want to keep their payrolls locked in at least through September 30th. Here's what American will be receiving through the payroll grant. Now, we call it a payroll grant. Actually, 70% of it is a grant. Of the $5.8 billion Americans getting, $4.1 billion will be an actual grant they don't need to repay. The remaining $1.7 billion will be a low-interest loan that American will have to repay to the Treasury Department. All of this comes as we're seeing record low numbers in terms of people who were screened by the TSA at airports around the country yesterday, dropping down to 87,000. So it looks like it can't go any lower. And Doug Parker is not going to call the bottom here, but he did give us some sense that there are some signs to be cautiously optimistic about when it comes to future bookings.
Just in the last week, we've started to see bookings outside of 90 days start to tick up a little bit. That again, those can be changed in the future. That doesn't seem to be the case, but that seems to be a little bit of an indication that maybe our country's ready to get moving again. We have our sales team tells me we're being asked to work on conventions in the fourth quarter.
So a little bit of cautious optimism. Certainly nobody in the airline industry is ready to say that they're out of the woods yet. The airline stocks are mixed. And remember, Tyler, this was $25 billion from the grant program. The other $25 billion in the federal aid package for airlines comes in the form of loans. American will be applying for a loan from the Treasury and other airlines as well. Look for that over the next couple of days.
I was going over some notes there, Phil, and forgive me if you said it and I didn't hear it. Does part of this program involve warrants or the ability of the U.S. government to buy shares in these airlines?
It does involve warrants. All of the companies that are getting a payroll grant, essentially 3% of the value of the grant, it's basically 10% of the loan component, comes out to about 3%, will come in the form, will be warrants, the value equal in warrants that the Treasury Department will receive. Unclear yet when the Treasury Department plans to cash those warrants in. So that is one form of how the federal government is going to be getting compensated as part of setting this program up.
All right, Phil, thanks very much. Phil LeBeau reporting from Chicago. Still ahead, Alan Rosen, the CEO of Junior's Cheesecake, joined us on Power Lunch yesterday to explain how he was using his PPP monies. And he's now facing some blowback for it. But he, like so many other businesses, is not only trying to navigate the current environment, but also how to survive past that June 30 or 8-week deadline for dispersing the monies he received. We'll talk to him again, along with a small business expert, and get further clarity. And remember, you can always watch or listen to us live on the CNBC app. We'll be right back. Our special breaking news coverage returns after this.
Welcome back. Coming off the lows of the session right now, the Dow's still down about 1.5%, but the Nasdaq's down less than 1%, and the S&P is down about 1.8% today. Russell 2000 falling worse; it's down about 3.4%. And oil really brutal lately. Today, falling below $20 a barrel before trying to recover somewhat. Just closed up. Let's go to Eric Chemi at the commodity desk with more. Eric.
That's right, Kelly. WTI closing below $20 a barrel after briefly rising more than 1% earlier today. Brent under pressure, down more than 6% today. An hour ago, as you know, Kelly, the Texas Railroad Commission chair told CNBC that the commission agrees, quote, it has to do something as many Texas producers face serious challenges during this crisis. A production cut in Texas would be the first in nearly 50 years. Meanwhile, the EIA today projecting a 29 million barrel per day reduction in April oil demand. That would put it at levels not seen in 25 years. The EIA also warning that there is no amount of output cut big enough to fully offset the near-term demand declines. Tyler, back to you.
Eric, for one, I know I haven't put gas in my tank in about 3 weeks. Eric Chemi, thanks very much. Well, small business loans from the government starting to hit bank accounts this week, mercifully, and Junior's Cheesecake was one of those, receiving over $1 million so far out of the $5+ million its owner has applied for. But yesterday, Alan Rosen said on this program that he's not passing on that money to his 650 employees just yet.
No, we're not even paying them right now. We can't. If we were to pay them now and didn't get the green light to open until the end of June, the money would be wasted because we'd be closed after we used up that money. Restaurants don't typically have a ton of working capital sitting around. They're month-to-month businesses. So this capital is going to carry us through our grand reopening, for lack of a better term.
So Rosen's comments sparked such curiosity and even controversy among our viewers, like you, that we decided to have him back today to explain why he thinks his approach to handling the cash is not merely permissible under the law, but is the responsible thing to do for his business and his workers. He'll join us in a minute. But first, let's go to Kate Rogers for more details on how the SBA and the Treasury think this program is intended to function. Kate?
Hi, Tyler. Well, for many small business owners out there, there are a lot of questions remaining on the PPP front, like when they should start using their cash once they receive it, if they do want this loan to be forgiven. Now, remember, these are loans of up to $10 million based on 2.5 times average monthly payroll. They have 1% interest rates and max terms of 2 years. They are meant to be used on payroll, mortgage interest, utilities, and rent, even while the business is closed, in order to be forgiven. The funds must be used over an 8-week period that begins at the time of disbursement. Treasury advises that 75% of the forgiven amount should be used for payroll. Now, a senior administration official tells us the covered 8-week period does begin at the time of loan disbursement. Rehiring must happen within that period in order to have the loan forgiven. The purpose of the funds is to make payroll and benefits even if employees are not able to work. The whole idea here really is to keep people off of unemployment during this time. But many small business owners do have questions that remain about what happens after that 8-week period. If stay-at-home orders, for example, remain in effect, what winds up happening to their business? Now, one thing is for sure, the money is going quickly. As of this afternoon, more than 1.3 million loans have been assigned SBA E-Tran numbers for a total value of $296 billion. The program, as we all know, is funded for about $350 billion. Lawmakers and advocacy groups have been warning that the funding could run out as soon as this week. A source familiar with the program did confirm with me that funding could run out by end of day today, based on current lending projections. Back over to you.
Well, that's fascinating. The money is going fast. There's such demand for it. So one question I have, Kate, is just how rigorously will the SBA, Treasury, IRS, anybody be tracking the disbursements of these monies and how the money is being put to use?
So that is a great question. Per guidance, it is actually on the bank to determine if the loan was appropriately used and how much should be forgiven. You submit, things like payroll and other items that the money was used for. The bank would have 60 days to determine whether or not it should be forgiven and at what level it should wind up being forgiven. But the banks are also lacking guidance. For example, the Consumer Bankers Association just yesterday asked both Treasury and SBA for more guidance
on forgiveness provisions here because they have questions too. So I think that's going to be the next wave of questions that we're going to need to get answers. But, you know, I think the owner of juniors does have a great question here and a big problem. What happens if stay-at-home orders are in place? What happens when the business opens back up and you potentially run out of money? It's a real conundrum for small business owners.
Or doesn't open back up, which is certainly one of Alan Rosen's concerns. Kate, thanks very much. And I want to welcome back Junior's Cheesecake CEO, Alan Rosen, who was with us yesterday. And I want to have him explain a little bit more what he's doing with his PPP money. And also with us, Small Business and Entrepreneurship Council CEO Karen Carrigan. Welcome to both of you. Alan, I'm going to start with you. So, Alan, it's clear that this money was intended both to do two things, either to keep people on payroll or to bring them back afterwards. You also heard Kate say there that one of the intended uses of this money was to keep workers from having to file and go on unemployment. But that is exactly what, by furloughing your workers, they are doing. They're going on unemployment. So by conserving the cash now and saving it thus for the moment when you bring them back, do you feel that you're really in line with the spirit of this program, and if so, why?
Well, I'm going to tell you why. So first of all, I want to clear something up from yesterday, because I think you, Tyler, no offense, and some of your viewers misunderstood. So we are clearly going to use these funds as it is intended for payroll, for utilities, and for rent. We also are clear that we have 8 weeks to use it from the time we get funded. The problem is, as you just recognized in your previous report recognized, we have a stay-at-home order issue here in New York. We have restaurants in New York City in the center of Manhattan and Brooklyn, and it's unsafe for people to go to work right now. Our intentions are to employ 650 people for the balance of their lives, not for 8 weeks and then put them back on unemployment, but as our company has existed for 70 years, we now have to make a decision. Do we pay people to stay at home for 8 weeks and then potentially never get open again, which is counter to what this Small Business Administration wants? They want small businesses like mine and millions of others. And by the way, there was a lot of positive reach out yesterday. People said, now people are starting to understand the dilemma we have as small business. When do we reopen? How do we use the funds? And you know what? If we don't use it within the guidelines, it becomes a loan. And that's a risk we all take. Okay, but I also believe that as this virus hopefully lessens, and depending on the time frame, some of these rules may actually have to, these timetables may have to get pushed back a bit.
So you're quite correct. I was, let's say, a little bit confused by how you were using the monies, because as I understood it, and I think a lot of people understood it, the idea was that this money was intended to keep people on payroll or to bring them back immediately, so that they didn't have to go on unemployment and were tided over to the point at which the business would reopen. So let me come back to something. In effect, is your move here the idea that workers can go on unemployment now, or if the business doesn't reopen, they're going to be back on unemployment later?
You're right. Listen, we have employed
and so you can take your pick as to when.
Listen, we have employed people gainfully for 70 years, okay, offering medical benefits, et cetera, et cetera. If we take this money and don't treat it like the precious capital that it is, and we waste it over 8 weeks because that's the only part that has deductibility, and then we have to unemploy people in 8 weeks because our businesses are operating or not even operating yet, depending on how this virus plays out, then we've done a disservice to everyone. The people who loaned us the money, to our employees. And listen, more so than anything, Tyler, I think you get this from talking to me over the last 24 hours, my employees and their well-being is paramount and on top of my mind. That's part of the reason.
I totally believe that. I totally believe that. And I just think it's a question of when you're going to deploy the capital, which seems like if you do it within the 8-week window, then the deployment of that capital, if it goes to the stipulated expenses, is then forgiven if you don't deploy it. Let's say you bring workers back in a trickle and some of those workers don't come back during the 8-week period, you still will have the loan
it will convert to a loan at a very favorable interest rate of 1%, and you can use that as part of to defray part of the payroll expense. Am I understanding?
Right. You're 100% correct. It'll convert to a note, a 2-year note that will have to be paid back. But keep in mind, that's a lot of money to have to pay back on a business that we don't even know clearly how it's going to be performing over the next 2 years. You know, if dining out goes to seating every third table and people wearing gloves and masks, I don't know everyone in New York's tolerance for that just yet. And it remains to be seen. So as the steward of our business and our employees, I'm looking to take care of them. I got to make sure we have the most, success possible, not for 8 weeks, but for another 70 years. And I take that job very seriously.
And as I said a moment ago, I totally appreciate your sincerity in saying that. You don't last for 70 years if you don't take good care of your employees. I want to come back to how quickly you might bring those employees back on in a trickle or a torrent, and we'll get to that in a moment. But first, let me bring in Karen Kerrigan of the Entrepreneurship Council to get her reaction to not just what Alan is doing and his tactical approach here of how he's using the PPP money, but what you're hearing from other business owners. Do you have any problem with what Alan is doing?
No, I don't. In fact, businesses of all sizes and kinds across industries, from 2 employees to 10 to 100, are grappling with these same issues. When the legislation was drafted and when it passed, the economic conditions, the impact, cascading effect of the coronavirus has really been very severe, obviously, for the economy and for small businesses. So, what they want and what we're arguing as a small business group is that there does need to be more flexibility in the rules. And like Alan said, this is not a grant. This is a loan. And in order for those monies to be forgiven, it does have to be used precisely the way the law and the rules are written in terms of payroll expenses during that 8-week window. So it just doesn't make sense if there's no demand. If you're going to disrupt employees' lives who maybe are already been laid off 2 or 3 or 4 weeks ago, to not have that certainty, coming back to the business and then having to lay them off again.
So,
and I do
so
agree.
Karen, are you hearing? Go ahead, finish. I'm sorry, I beg your pardon.
That in terms of this is the best use for the taxpayer because that 8-week window started for him, and if you're going to bring people back just for it to be forgiven, as opposed to if it's not used for those purposes, you do have to pay that money back.
Okay, I'm going to switch back to Alan, and you heard what Karen just said. She said she has no problem with your approach here. But let me come at you, and I don't mean to say come at you, but let me just frame a question this way. Can you? That's all right. We're going to have some good cheesecake after this anyway. But
you're not kidding.
Can you understand why some people who were in contact with us overnight, and I think probably with you, would feel that you're sort of double dipping? In other words, your company and your workers are benefiting from, on the front end here right now, federal and state unemployment benefits, which, by the way, you as a taxpayer and employer are paying into. So let's just stipulate that. And then you would benefit at the other end. Then you would benefit at the other end from the PPP loans. Can you see why people would think, well, that's kind of a double dip?
But there's a misconception out there. So and I'll say it again, and I think Karen alluded to it, if we take people off unemployment today and use up all that grant money, and in 8 weeks we're not operating efficiently because of this virus, and no fault of our own. We don't want to be in this spot. Nobody does. My employees want to be at work today. Waiters don't want to be working in empty restaurants. Okay, Tyler? It's just not the way we operate. So if we're operating at a third capacity, we've used up the money, we then have to put people on unemployment. We haven't only singularly dipped, we've now put them back on unemployment and we got a free loan. I think I'm actually taking the honorable approach and saying I'll use the money either before the 8 weeks or after, depending on how business allows. And if it's after, then I have to pay back the loan, I pay back the loan. I think this is the honorable way to handle it.
We've had a fascinating conversation here this afternoon and yesterday and offline over the past couple of days. Let me just turn very quickly with a final question, if I might, Alan. If you get some sort of green light from the state, from the governor or the mayor to reopen your locations, how quickly do you think you will be bringing workers on? In what kind of trickle or flurry or flood do you anticipate doing that?
I think the business is going to dictate how many people we need based on how comfortable people are in dining out again. I mean, as I sit here today, it looks like a pretty scary environment for restaurants in general. And I think that the next 12 months, unless there's a vaccine, are going to be very horrifying for small businesses in this country. And the SBA loans were intended to save those businesses. And that's the way we are trying to use it.
I
and again, I just want to reiterate
more on the idea that it's going to be right. And so my final question is the money that you've already received, the $1+ million, and you have other loans pending totaling something above $5 million. That money that you have received, you have put into a segregated account that you're not touching. Am I right on that?
Correct. I recommended this to everyone who's trying to get a small business loan. You set up a separate checking account. So when the bank has to come see how you use the funds in 2 years, you can show them you used it for payroll and the associated taxes. You used it for utilities, which is allowed, and you used it for rent. And you show them those 3 items, and you show the use of the proceeds, and you show the timing of it, and it's either a grant or it's a loan. Simple as that. And as I said, the only other wild card is how this changes over the next several weeks and months.
Alan, thank you for your involvement these past couple of days, and good luck to you and your workers. Karen Kerrigan, thank you as well. Kelly?
All right. Moving on to Airbnb, the company has now raised $2 billion in debt in just a week as the coronavirus pandemic continues to ravage its business. The former unicorn was on track to go public this year, remember. Now it's a very different story. Deirdre Bosa is here with those details. Deirdre? Kelly, quite the turnaround, that's right, raising $1 billion in each of those fundraisers, 2 over the last week alone. Now, the equity portion of last week's raise, that slashed the company's valuation by nearly half. The most recent debt offering carries a very steep interest rate of about 9%. Now, it tells us that Airbnb, once the most anticipated IPO of this year, has seen its business just pummeled by the global pandemic and now trying to pad its balance sheet to get ready for what is likely to be more pain to come. Now, other companies are, of course, affected by the outbreak and raising debt at similarly steep terms. So we want to show you a few of them. There's Nordstrom and Wynn earlier this month. Slack, on the other hand, though, is at the other end of that spectrum. Its debt offering, while this isn't apples to apples, carried a coupon of 0.5%. So you can see the very different positions that companies are in the current situation. Of course, Airbnb being right in the middle of the global travel industry that is getting absolutely killed. Now, also interesting is who is buying into Airbnb at this moment amid so much uncertainty. Listen to some of these names. They're some of the biggest institutional private equity and hedge funds: Fidelity, T. Rowe Price, BlackRock, Silver Lake, Sixth Street Partners. Those 2 put money in the deal prior, and Apollo and Oaktree Capital. So, Kelly, they're essentially betting that Airbnb will eventually get through this and could emerge even stronger. Yeah. Deirdre, thanks. Deirdre Bosa with the latest for us. Tyler.
All right, Cal, shares of Tesla up 34% over the past month. Wow. And climbing again today after its factories were shut down because of the coronavirus. Goldman Sachs saying the stock is a buy, and we'll talk about whether there's even more room to run. That's next.
Look at SPY. All that Fed money. All of that Fed money. Super pump. Super pump. Crazy.
Welcome back. Stocks are selling off on the back of bleak corporate and economic data today, illustrating the extent of the coronavirus damage and that it might be worse than investors expected. Dow's moderating its losses down about 363 points right now. We were down more than 700 at the lows. Look at the Nasdaq, though, only down 0.8% and coming off its best winning streak since December. Tech stocks have held steady in the face of this volatility lately. Steve Grasso is here. He's Director of Institutional Sales at Stuart Frankel and a CNBC contributor. Steve, it's good to check back in with you. Would you be betting on the Nasdaq?
Yeah, I think you have to look at these large cap tech companies, Kelly. Those are the ones that have ran this market in the last couple of years. Those are the ones that, if you have to look at this, what are investors going to put the most confidence in and validity in going forward? Which of the companies that are guaranteed or as close to a guarantee to last when we get out of this coronavirus environment? It's the large cap tech that people are putting that credibility in.
Do you buy that there's going to be a lot of divergence? You know, right now it's the Nasdaq that's outperforming, but ultimately are all of these indices going to rise and fall together?
Yeah, you know, it's funny. If you would have asked me that a week ago, I would have said yes. But when you start to look at the energy complex and the small cap complex, they've sort of uncorrelated themselves literally in a matter of days to hours. So if you look at your screens, yesterday you had oil fall and you saw the market rise. Today everything falls together. So I think ultimately, if there's a blanket, if we're going to survive or fail, yes, we'll do that all as one. But if you're going to start to see this inversely or uncorrelated market, I think there's room for there to be winners and losers. But if you look at what the Fed's doing, the government's doing, Kelly, they're not allowing anyone to fail. So back in the financial crisis, it was too big to fail. And I've said it before, it looks like no one will fail this time around. There are going to be companies dragged over the finish line. So I think we will survive all together, if that makes sense.
In a word, and sort of as an aside, what do you make of the Tesla rebound lately?
So Tesla has defied all laws of probability. Everyone knew about its short interest, and everyone was betting against it. I think the fact that they opened that Shanghai plant, that was the first surge higher in Tesla. If the shorts have been run over so many times, but when you look at the stock chart now, it's really defying the laws of probability yet again. So if I had to tell you in a word, I would say sell it at these levels. You have the 735 level, which we're right around. But remember where they raised money. That raise of money was 767. So if you think about where resistance is going to be on the charts, it's between now and then. So the risk reward definitely stacked in the bear's hands right now as far as Tesla goes.
All right. Steve, thanks. Good to check in with you again, Steve Grasso. Tyler.
You know, Kelly, there aren't many stocks that are up 75% year to date like Tesla, I would have to say.
Maybe Zoom.
Maybe Zoom. But we'll see you back here tomorrow in the kitchen, Kelly, all right?
Sounds good. Great stuff. We appreciate it.
2 o'clock. Our breaking news coverage continues now with the last hour of the trading day, and it begins with closing bell right now.
Thank you, Tyler and Kelly, and welcome everyone. I'm Sarah Eisen along with Wilfred Frost. Market sinking today, although major averages are staging a late day comeback. 59 minutes left of trading. Let's take a look at what's driving the action at this hour. Shocking new data painting a dire picture of economic activity in this country. Retail sales, manufacturing activity, both plummeting. Corporate earnings also weighing on investor sentiment today, with banks saying they are bracing for large losses ahead. And another ugly day for the energy market. Brent crude plunging, WTI now trading below $20 a barrel.
Yeah, but we've halved the losses, Sarah. The Dow is down 700 at the lows, is down 330 as we stand. Lots of guests coming up, as always, on today's show. Ariel Investments co-CEO Melody Hobson will join us for a rare interview. We'll ask her whether today's pullback is the start of another downturn or a buying opportunity, and where Ariel is finding opportunities. Plus, the CEO of Iceland-based Decode Genetics will join us just a few minutes away for that one, as Iceland takes measures to test large portions of its population. He'll tell us what the company has learned about how the virus spreads. It's an interesting study.
Yeah, a lot of Wall Street folks watching that test case. Let's focus in on the big stories we are watching in this final hour of trade. Bob Pisani tracking today's market sell-off. Courtney Reagan with some details on plunging retail sales numbers. And Wilfred, of course, covering today's bank earnings. Bob, though, let's start off with the market and this little bit of a recovery we've seen.
That's right, and let's take a look at the S&P, Sarah. Let's call this one Cuomo versus the horrible economic data, because the markets, once again, Cuomo moves markets. At 12:30, started talking about lower hospitalization rates. The market lifted at that time. You can still continuing to lift, but it can't really compete against those horrible economic data that Sarah was just talking about. So it's the same thing. The energy, the banks, the small caps, the industrials, when you have bad data, bad economic news, those are the ones that suffer. We see this today in these energy stocks all getting pounded, many of them down double digits. Some of them are recovering off the lows, though, like Apache and Hess. We had this terrible news about retail generally, and still in a lot of trouble. The mall REITs are all getting clobbered. These stocks rallied briefly into the close on Friday, and they've been down the last couple of days in a row, down big again today. The home builders, another group that rallied into the close on Friday, had a nice run. They have also been weak in the last couple of days. You see move to the downside here in the mid-single digits. But the stay-at-home stocks, well, they're just doing great here. Netflix got a new high. Amazon's got a new high. Walmart's had a new high. Even Eli Lilly, new high as well. Guys, back to you.
Bob Pisani, thanks so much for that. Now, the coronavirus pandemic having a major impact on retail sales, as Bob mentioned, in fact, with new data showing a record drop in March. And Courtney Reagan has the details for us. Hey, Court.
Hi, Wilf. So the government data today for retail sales really confirms what we all thought. March was a terrible month for retail. Actually, it was the worst month ever, and that's despite even all of the buying on essentials like food and healthcare. So for the month of March, from February, retail sales fell 8.7%. They actually were down 6.2% even from last March, if you want to look at the year-over-year comparison. Excluding autos and gasoline, though, so just that core retail sales number, still down 6% from the month of February. Now, effectively, all non-essential physical retail locations, as you know, were closed for much of the month, if not, maybe if we're generous, the second half of the month. So that's a lot of effective retail sales that were just closed to the public in general. Let's drill down on some of the sectors. Clothing and accessory sales down almost 51%. Department store sales down 20%. Restaurants down more than 26%. You can't go out. You can't sit in a restaurant or sit near close to anyone for much of the month of March. Grocery store sales, those were up 27% in March from February as consumers, of course, stocked up their kitchens. Health and personal care stores, so that's largely your drugstore group, up over 4%. I found this interesting, though. Non-store retail, that's mainly online. It was up, but just 3.1% in March from February. So you're not seeing a big shift online, at least in many categories when you're looking at this in aggregate. Department stores, specialty clothing, those are some of the stocks that got particularly hard hit in today's session as a result of some of this reality check from the retail sales numbers. Look at Nordstrom down 9%, Macy's off almost 7%, Dillard's down more than that. And we're just getting news here from JCPenney as a retailer that has been in trouble for some time, They are not going to make a $12 million interest payment that was due today. The company says as a part of this agreement, there is a 30-day grace period, and they are electing to tap into this grace period as they look into other strategic alternatives. We'll see what that means, but we know that JCPenney is a name just even last hour we were talking about as one that might be ready to file for bankruptcy. Back over to you guys.
Courtney, I'm wondering who else is in trouble and how many weeks or months the retail industry can survive and deal with 50% sales declines in just a matter of a few weeks. I mean, that's pretty brutal. We've already seen furloughs at these companies. So what are the cash positions like, and are they getting any help in loans?
That's such a great point, Sarah. We're going to actually drill into this a little bit more tomorrow, but there are a number of retailers that are not far from JCPenney's financial conditions. They were already strained going into this COVID crisis. So they may have been in trouble already, and this may be the straw that is breaking their back. Names like Neiman Marcus and J. Jill, Party City, Rite Aid, 99-cent stores. There are a number of these companies that were already in financial straits, and their debt has been rated so low that they're not eligible for any of these programs. And then you brought up timing. I think that's what every retailer is trying to figure out. How long can we afford to stay closed, truly, until some big decisions will have to be made? And I think that date is going to be different for every retailer.
Yeah, Courtney, thank you. The financial sector taking a big hit today as more earnings reports reveal the impact of the pandemic on the banks. Wilfred, what are the big takeaways from the bank names today?
Yeah, so the key focus throughout this earnings season has been what portion of their loans they fear could fail due to the worsening economic outlook. And here are the key numbers for the big four lenders. Absolute dollar amount, not really comparable between them, but you will see Citi has the biggest increase in reserves relative to total loans, that number at the bottom there, followed by JP Morgan, then Bank of America, then Wells Fargo. The key features being exposure to credit cards within the consumer and to sectors like energy within commercial. Goldman Sachs percentage, by the way, around 2.4%, though it's a less relevant metric for them. Importantly today, Bank of America's CFO struck a slightly more optimistic tone in terms of whether or not provisions will get worse from here compared to JP Morgan's CFO yesterday.
Bills could be meaningfully higher in aggregate over the next several quarters relative to what we took in the first quarter.
In terms of your question about, hey, what's the likely reserve build in the future? If we thought we were going to have to add more reserve build in the future, we would have put it into this quarter.
Goldman Sachs also struck a slightly more constructive tone on their call today, and it's the best of today's earnings reporters. Bank of America, the worst, but that was because of poor net interest income guidance for the second quarter. If we look at all of them year to date, the big six banks year to date, Sarah, the investment banks, Goldman Sachs and Morgan Stanley, who report tomorrow, are the outperformers, which kind of makes sense. They have less lending that could therefore potentially go bad. And within the four commercial banks, still quite a lot of share price performance differentiation. And that in large part comes back to what we touched on at the top, and it's investors' gauge of the strength of their asset base, of their loan book, and therefore their balance sheet. But the banks having another significant underperformance day, Sarah, relative to the rest of the market.
Which is why Goldman stands out a lot, Wilfred. I think it's the only bank stock that's higher right now. I read some research suggesting that Goldman's been dinged for so many quarters because of its outsized exposure to trading and capital markets, which right now is actually proving an edge.
Yeah, significant exposure to that. And within their trading, they have more exposure to fixed income, to equities. And if you had to pick between the two, the fixed income's even stronger than equity trading. So that's helped. I mean, interestingly for Goldman, across their four business lines, three of them actually saw 20% revenue growth year over year. Clearly, one segment didn't. But the bottom line for them really was that they are less of a lender and they're more of a trader, more of an investment bank. And so their business mix was better than perhaps some of the big lenders. And they were fairly cheap as well at the start of the year. So again, relative to where they could bounce, that they had a bit of room to improve. Morgan Stanley come tomorrow, and again they've got more exposure to things like trading and wealth management than pure lending. So we have to wait to see whether they could buck the trend too. But you have to go back to the main points there. 1% of gains today for Goldman Sachs, significant outperformance versus the rest of the sector, but 1% isn't much relative to the declines year to date.
Absolutely. After the break, Iceland-based Decode Genetics just publishing the results of a new study looking at the spread of coronavirus in that country's population. We're going to ask Decode CEO what the rest of the world can learn from this. Next.
Welcome back. We've got about 47 minutes left of the session. We're lower, but 400 points or so on the Dow is well off the lows, which was down 716, 2% lower on the S&P 500. And have a look at yields in Europe. Spiking today, those markets coming under increasing pressure as investors worry about the enormous debt load Italy and other Eurozone members are taking out without a clear burden-sharing program. Initial optimism when that agreement was reached late last week, and then some issues coming out since then, Sarah, and the Italian yield really the one to focus on, rising to about 1.9%. The spread for 2020 has been between 0.85 and 3%, but just since the start of this month, it's up from 1.5%. So to that 1.9% gives a gauge of the risk that people are seeing on some of those periphery countries like Italy.
I don't know why they don't just do EU-wide corona bonds. I think that seems to be the fight.
Well, I think that's been the solution on the table for the last 12 years, but they didn't get to it in 2010 to 12. So you know the hurdles are significant when it comes to the politics.
All right, let's focus on Iceland. That's an interesting example. With the help of Decode Genetics, this country's been able to test more than 10% of its population for coronavirus. In a new study, Decode found that roughly 0.8% of those tested showed strains of the virus. What's significant about it is that about half of those who actually tested positive said they were asymptomatic. Our own Meg Terrell joins us now along with Kari Stephenson, CEO of Decode Genetics. Meg, take it away.
Sarah, thank you so much. And Dr. Stephenson, it's great to see you again. Thanks for joining us. You guys wrote in the New England Journal of Medicine in the study just published that the 13% positive of the people in the high-risk group who you screened, but also the less than 1% in the general population screening provides grist for both assurance and alarm. Tell us about those findings.
What is different about Iceland's response to the epidemic from most other countries, at least in Europe, is that we started screening very early. The healthcare system had actually screened for a whole month before we found the first patient. And also we have screened the general population, not just the ones with signs and symptoms and those in high risk, but also the general population. And over the total period since the 13th of March and until today, about 0.8% of the population has been infected. But that has been on the decline. So today it is probably about 0.4% of the population that is infected. And the approach that authorities in Iceland took, in addition to accepting this broad-based screening that we did, is to have an extraordinarily vigorous tracking of contacts of infected, putting the infected in isolation and the contacts of the infected in quarantine. And by doing this, we seem to have brought this epidemic under some sort of a control.
What are the takeaways that countries the size of the United States, for example, can take from the Icelandic experience? Is what you have accomplished even possible in a country our size?
It ought to be even easier in a country of your size with your resources, with this incredible amount of talent that you have, with this incredible resources you have. If you would bring this all to bear, you would easily be able to do the same thing as we. You have all of these talents, all of this equipment in your universities that could simply be drafted to apply to this epidemic. You could have the universities do the testing, you could have the universities do the analysis of the data and help with planning how to deal with it. So yes, we have 1,000 times, the population of Iceland is 1,000 times smaller than the population of the United States, but you have probably 5,000 times more resources than we do. So this is all a question of the will, the desire, the determination to do this properly. And my guess is that to do that, there needs to be some sort of a central control.
What do you make of the finding in your study that about 43% of those who tested positive in the population screening didn't initially show symptoms? What does that tell you about the potential asymptomatic spread of this disease?
It is difficult to extract that out of the data we published today, because even though 43% of these people were asymptomatic when we took the samples, and actually that number has been going down, it is very likely that many of them develop signs and symptoms later. But on the previous point, I want to emphasize that the methods that we have used in Iceland to test widely, to sequence the virus from everyone infected, to bring about this kind of a control, these are all methods that we learned from the Americans. You taught us how to do this, but you haven't been doing it yourself. And that is pretty sad.
That is pretty sad. Dr. Stephenson, on this question of reopening, I know that you guys are also in Iceland working on reopening schools and salons and restaurants. If only 0.6% of the population is tested positive, how do the other 90% feel safe going out in the public and back to normal life?
This is the big thing. We have just recently started to do antibody screening, to screen for antibodies against the virus. This is going to give us the true exposure. What we did before was to use a PCR method to look for the presence of the virus. And your ability to find the virus depends on doing the testing at the right time. If there is indeed a large part of the population that remains asymptomatic, the only way to determine the true spread of the virus in the population is to look at the immune response against the virus, to look for the antibody that the body has made to fight off the virus. And we started that a couple of days ago. And indeed, in a week or two, we will have what I believe is going to be the true distribution of the virus in the population.
Carrie, we always try and assess why some countries have had better performances with this virus than others. We did it with Germany earlier this week. I wonder how important you think that population density has been as it relates to the situation in Iceland. I think I'm right in saying that your population per square mile is one of the lowest in the world. It's the lowest in Europe. And has that had a big impact on how the virus has spread in Iceland?
No, I think what draws the line of distinction between the countries that have done well and the countries that have done less well is how early people responded. You know, the entire world knew that there was an epidemic mounting in China in January. And basically the authorities in Iceland prepared for it. They started to test before the virus had arrived. And I think that there is nothing else that matters here. The population density in the capital of Iceland, which has about half of the population, 60% of the population, is fairly high. The rest of the island is fairly large. So when you calculate out the population density of the whole country, it's rather small. But I think that our challenge in Reykjavik is fairly similar to any, small town in America. So I don't think it is the population density. It is the vigilance with which people responded to the news about the epidemic in China.
Yeah, I mean, I was sort of wondering how you explain the discrepancy between, the 0.6% of the population you found that tested positive. I mean, we don't have any real mass testing, I guess, in this country, but there are small studies like in New York City that showed 13% of expectant mothers coming into the hospital tested positive, many of which were asymptomatic. So why are those numbers so different?
I honestly cannot, I think that comparing these numbers is like comparing apples and oranges. We did a study of true population distribution. These were just a spot test in a city that was being ravaged by the infection. So I think it is very difficult to compare these two approaches.
Carrie Stephenson, thank you so much for joining us. We appreciate it, and our thanks to Meg Terrell, as always, also. On a programming note, don't miss Healthy Returns, our interactive virtual event. It'll be on May 12th. CNBC will be speaking with top healthcare leaders at the center of the fight against coronavirus. You don't want to miss that one.
Timely discussion for sure. The Dow's down about 375 points. We've got about 38 minutes left till the close. Don't miss our rare interview with Melody Hobson from Ariel Investments. We'll get her take on today's sell-off and whether it's a sign of more downside to come. Remember, Ariel has been pretty bullish on this market since we saw those lows in March. We'll be right back. $35 minutes left of trading. Dow's down about 400 off the lows. Welcome back. Shares of FedEx falling today as the company says it will furlough a number of its workers. Frank Holland with the details. Frank.
Hey there, Sarah. FedEx shares falling 4% after announcing those temporary furloughs of workers in its freight segment, where it gets about 10% of overall business. The company says it's a, quote, small number of workers in a 45,000 employee unit, and they will continue to get their health benefits for 4 months while also qualifying for unemployment. During earnings on March 17th, FedEx said it expected freight to be impacted by the COVID-19 crisis, but just about a week later, CEO Fred Smith said layoffs and government assistance would likely not be necessary. Since then, FedEx slashed Smith's pay by 91% and drew on a $1.5 billion loan facility. The furloughs follow the March Cash Freight report that showed freight shipments dropped 9% year over year. XPO also trading below the broader market on those freight concerns. Back over to you.
Frank, thanks so much for that. We, by the way, just touched session highs about 15 minutes ago, which is only down 300 on the Dow. We're now back down 421. The low of the session, though, was 716, so still well off that. Now, still ahead, sales at motor vehicle and parts dealer fell 25% in March. We'll speak with the CEO of Hyundai North America about how his company is managing the slowdown. As we hit a break, here's a check on bonds yields taking a significant leg lower today, which is something to consider, by the way, when you look at the banks' stocks trading down. It's not just the earnings, it's yields as well. 0.63% currently on the 10-year. We'll be back in a couple minutes.
.com.
Welcome back. We've got 31 minutes left of the session. The S&P 500 currently down just over 2%. All 11 sectors in the red. Energy, the worst performer, as oil has hovered around that $20 a barrel mark for WTI. Materials, real estate, financials also down 4% or more. Healthcare the best, but it's also in the red, as I mentioned. The Dow's down about 2% itself. The Russell lags the major indices, down 3.9%. Here are the key things driving the action. New data painting a dire picture of economic activity as retail sales and manufacturing activity plummets. Corporate earnings also weighing on investor sentiment, with banks saying they're bracing for large losses. And another ugly day for the energy market. Brent crude plunging, WTI now around $20 a barrel.
Time now for a coronavirus news update with Seema Modi. Hi, Seema. Hey, Sarah, and let's start with politics. The Wall Street Journal reports business leaders told President Trump during a phone call today that the U.S. needs to dramatically increase virus testing before people will feel confident enough to return to work, eat in restaurants, or shop in stores. New York Governor Andrew Cuomo says businesses will reopen gradually as the virus creates a new normal. For now, Cuomo is ordering residents to wear face coverings in public where social distancing is not possible.
Wear the mask. What's the big deal? It can be a mask, it can be a cloth, it can be a bandana, you can make it colorful, you can have a design, make it advertising. What's the big deal, right? Risk reward is life.
And protesters and cars converged on the streets outside Michigan State Capitol to show their opposition to Governor Gretchen Whitmer's stay-at-home order. Some picketers also gathered outside the building. Now, they say the rules violate their rights, and they want the governor to look at safe ways to open more businesses now. For more coronavirus coverage, head to CNBC.com. Sarah and Will? Seema, thank you. Just want to show you what's happening with the markets. About 29 minutes left of trading. And as Wilfred's been noting, we were down 700 at one point on the Dow. We are well off of those lows, down 435 points. S&P is down 2%, which basically, Wilfred, leaves us flat for the week. The Nasdaq's up 3%. You know, if you look at what is being blamed for the sell-off today, a record decline in U.S. retail sales, a record low on New York's manufacturing number, the worst, housing confidence data and industrial production data in years, the soft sentiment off bank earnings and oil plunging below critical levels, 18-year lows. It's a wonder the market isn't down even further. You could call this resilient.
Well, exactly. But all of those factors, Sarah, that you pointed to, they all allude to the kind of key talking point I'd put it as this week, which is even if we are seeing encouraging signs in terms of the data from the virus itself, some flattening of those all-important curves, the question and debate now focuses on when the economy can open up and can open up effectively. And to that point, on the week-to-date data, you are seeing quite clear differentiation in terms of the performance. So energy, materials, banks, some of the worst performing sectors for the week as a whole, down close to 10%, where others like tech, like consumer staples, like healthcare, are up week to date. And again, it's that sort of stay at home, work from home basket versus the ones that are more linked cyclically to needing the whole economy to be doing well or not.
And Mike Santoli, if you were here, would say that that's healthier, right, than the sell everything mentality that we were in the throes of this crisis. Coming up, Josh Brown joins us with his last chance trade ahead of the close. And then after the bell, we'll discuss the bailout of airlines and which names are best positioned to ride out this shutdown. 27 minutes left of trading.
I got a couple trades to place. Hang on, rush against the clock. Hey, Rush. Hey, Russian. All right.
right, guys. Thank you guys for holding it down. I have to go on hot seat mute for a second. You know, some of you guys are still hanging around, holding it down. Appreciate you. Then you got to go to work. All right, gotta handle a business. Clean up a few of them. Take a couple little moments and be right back. 1 second. Oh, Chris will be back. Okay, what's going on, family? I'll be right back. 1 second.
Oh, can you hear me?
Amazon was at a new high as well. Even Walmart, only stock in the Dow Jones Industrial Average, eking out a new high. Walmart there. There you go. Just barely into new high territory. Guys, back to you.
Well, Pisani, thank you very much for that. Now, Google CEO, former Google CEO, excuse me, Eric Schmidt, speaking at the Economic Club of New York yesterday about the role big tech is playing during the coronavirus pandemic.
Think about what your life would be like in America without Amazon, for example. The benefit of these corporations, which we love to malign, right, in terms of the ability to communicate, the ability to deal with health, the ability to get information, is profound. And I hope people will remember that when this thing.
Well, we wouldn't be here today, for example.
That's right. And so let's be a little bit grateful that these companies got the capital, did the investment, built the tools that we're using now, and have really helped us out. Imagine having the same reality of this pandemic without those tools.
I mean, he absolutely has a point, not least being able to do these TV shows, Sarah, whilst we're remote from various times, and not least some of the banks that all mentioned today, 90% plus of their workforce working from home. That said, typically these companies are maligned for a reason, just as much as they are often celebrated for many good reasons on this channel. So I don't think it changes that fact that if and when they do something wrong, they deserve still to be maligned. And of course, in terms of the celebration these companies receive, Sarah, it's the bottom line for people like Eric Schmidt. They've made an awful lot of money and therefore deserve to be held to account when certain things go wrong.
Absolutely, and I think we should applaud the fact that they're using their resources and know-how to help fight this pandemic with the rest of us, like contact tracing and what other solutions we'll have. I'm wondering, I guess from an investor, Steve, I'll ask you whether the investment thesis changes around these companies where for the last, few years, there's been so much risk of regulation and privacy concerns, almost like the pharmaceuticals, where now we need these companies to help get us out of this. It doesn't seem like there's going to be much political appetite in an election year during a health crisis and a recession to go after these kind of companies.
I guess they're too big to malign. Right now, though, I mean, there is a certain amount of book talking by Eric Schmidt, but the thesis behind Amazon for so many years was Amazon can sell all this stuff, not make any money, but the reason you'd want to invest in a company that barely made any money, was unprofitable, was one day they will basically wipe out all the other retailers who can't afford to compete and have the field to themselves. Guess what? That's the scenario right now. So is it a case of careful what you wish for? I don't know, but so you do have, but right now markets really like playing the winners, which is why NDX is outperforming SPX, or why the Nasdaq Composite is near an all-time high. People are riding these winners, and right now, and you've taken Elizabeth Warren out of the equation to a certain extent, they have the field to themselves. What are they going to do with it going forward, though?
Josh, what's your take on this?
Well, I'm a shareholder in Google. I almost feel as though we should be thinking about Google, Microsoft, Amazon, maybe to a lesser extent Facebook, as what you would call a supranational company. So we've always had multinationals. These are supranationals. They're almost like governments unto themselves. I guarantee you Google knew a lot more about what was going on with the virus as it moved into Europe than the WHO did. You know, maybe the right answer is to start asking for these companies to start acting like international agencies. We talked about the IMF before, but you think about companies that have the resources to keep us all up and running on the internet. If this were happening in the 1980s, I don't know what we would be doing. How would you keep people at home for 8 weeks, 10 weeks? You probably couldn't. So I think they are very important. I called Amazon a utility yesterday, not just because they're bringing food to people's homes, but because of the internet and keeping us connected. That's not going to change coming out of this crisis. It'll be more of that. So I continue to hold Amazon. I continue to hold Google. Most people, if they have a 401k, they have exposure to all these stocks. Amazon is 10% of the Qs, and Google is not far behind it. So I do feel these companies have shown how important they are to our lives. You don't have to love it, but that's the case.
Yeah, and also for bringing food and diapers and whatever else people are like me are ordering. Josh Brown, Steve Sosnick, and Mileti, thanks to all of you. Great discussion. Up next, we will ask Ariel Investments co-CEO Melody Hobson about where she's finding opportunities in this market and the life-changing quarantine advice she got from her husband, who is legendary filmmaker George Lucas. We're back in just 90 seconds.
Welcome back. Despite market volatility and coronavirus uncertainty, our next guest says it's time to look for opportunities. Joining us is Ariel Investments co-CEO Melody Hobson. A very good afternoon to you, Melody. Great to see you.
Thank you. Thanks for having me.
Wanted to ask and kick things off about markets and of course your view on the outlook there. In the midst of big sell-offs, this kind of volatility, how concerned have clients been, and what's your key advice to them?
I have to tell you, clients have been remarkably calm, and we work for some of the biggest institutions around the country, around the world. We also work for small investors who invest in our mutual funds, and we've been really, really pleasantly surprised by the calm.
Have you been surprised to see this big snapback in the market? I mean, I know you guys a few weeks ago were pretty optimistic and saying that there were some great opportunities out there. Are you surprised at how fast you've seen this recovery so far?
I think I would say nothing is surprising me right now. I think you have to be prepared for anything when it comes to this market. What we would say is a few weeks ago, we thought there was indiscriminate selling going on. Things were just being thrown away, hand over fist. And we looked at some of the valuations and said, even our worst case scenarios, severe adverse circumstances, we don't get to these numbers. And so we saw opportunities. And we think, again, our lens is always from a long-term perspective. We're looking out 3 to 5 years, and we kept saying to ourselves, this will end. It's not a question of if, it's just a question of when. And then with that perspective, we said, everything we own, we need to make sure it can make it to the other side. And if it can, we will be okay.
And Melody, clearly you mentioned the word indiscriminate there in terms of some of the selling we saw. Clearly over the last 5 to 10 years, we've seen huge floods of money move into ETFs, into automated products. Do you think this is going to see a shift back in terms of the industry benefiting active investments once again?
Well, I'm hoping people will see the benefit of active investing. We've insulated on the downside here. We've been able to outperform our benchmarks. And we have seen some of our other friends who are out there who are well-known active investors who have as well. And so hopefully there will be this sense that passive is great in a bull market, but when things get choppier, having an active manager can be worth a lot.
And you said part of the strategy is finding good companies that can survive and come out on top on the other side of this, which sounds simple, but can often be tricky. How do you do that? What's the best advice for investors on how to pick those stocks?
Well, first of all, everyone can't do that. So one, I think that if it's something that makes you nervous or you're going to be up at night, go to a professional. That's the great thing about mutual funds or an ETF, what have you. I think that for us, we started by looking at what do we currently own. And we said to ourselves, again, we stress tested. Some of the things that held up really well, we actually opportunistically sold for things that had been completely thrown away. Then we looked at our watch list, things that we've been dying to own, and we repriced them for this new world and said, are these still a good value? And then last but not least, we looked at things and have continued to look at things that are just falling out of the sky. There are so many new ideas that are coming on a daily basis because of the blood that we've seen in the market. And as a result of that, being able to take advantage of some of those new ideas that we never thought we could ever own.
Melody, you were interviewed in the Wall Street Journal a couple of days ago and talking about what the sort of work from home lifestyle has been like and I guess the challenges of it. But the conclusion I thought was very optimistic. You've been trying to draw a more positive perspective from this whole experience.
Well, first of all, I would say, you know, we've been in the foxhole before. The global financial crisis feels like it was 5 minutes ago, even though it was over a decade ago. And so we've been in this mode of understanding when you have a crisis, not anything ever like this, but all of this has led up to this muscle memory that we have around what to do in these bad moments. But what I talked about in the journal was this idea you're working from home. I felt like I had cabin fever. I'm used to moving around, being in a couple cities every week. And at one point, my husband looked at me and he says, it's been a few days. And he said to me, you know, Melody, the Europeans lived in bunkers during World War II for more than 5 years. Rations, no school, bombs falling all around you. Get some perspective. People are really suffering around the world, and you have everything you need. And that was just really one of those moments of truth for me. And I really thought that that was not only very, very wise advice, but led me to understand how much gratitude I should have for the life that I have, and the life, literally, when you have people dying in this health crisis, that those of us who have not had it have. So, you know, there was a lot of perspective that I think is very, very important that I gained from that moment. And it also gives me the optimism going forward. But my optimism also comes from the long-term patient approach that Ariel has. If I look out 3 to 5 years, I am very confident it will be better than it is today.
Melody, you sit on the boards of JP Morgan, Starbucks, Quibi. What is the mood like at the corporate board level right now? How concerned would you say that these companies and these boards are about the recession that we are facing?
Well, I never talk about the boardroom or the boards that I'm on, but what I would say is they're run by extraordinary leaders, and I have a lot of confidence in them and their ability to deal with what may come.
Melody, there was one line in the Wall Street Journal that I think must have been a typo. I wonder if you could clarify for us, because it said, I typically have CNBC running in the background, but now I have CNN. That was an error, right?
I said right now I was trying to get my arms around the coronavirus, so I was watching some of the coronavirus information on CNN, but I've always had CNBC running in my office from morning till night. Most recently, just for a moment, in watching the coronavirus numbers and things like that, I was getting some of that information, but I toggled back and forth.
Our promo team can cleverly edit that answer, and we'll just take the bits we like from it. Melody, as always, thanks so much for joining us.
Thanks for having me.
Bed Bath & Beyond results are out. Courtney Reagan with the numbers. Courtney.
Hi, Sarah. So this is Bed Bath & Beyond results for the fourth quarter, the fiscal fourth quarter, which was the quarter ended February 29th. So you're not capturing any of March with these numbers, but the earnings per share did beat analyst expectations, 38 cents versus 20 cents estimated. Revenues of $3.11 billion, also slightly outperforming consensus estimates of revenues of $3.07 billion. Comp sales, those were down 5.6%. The breakdown between stores and digital, as you might expect, stores were lower, but to the tune of 10% for comps, while digital sales were up 16%. And again, that equals a comp decrease of 5.6%. Bed Bath & Beyond is refraining from issuing any full year guidance. It did note, just to sort of put all this in context, that Cyber Monday week ended up benefiting the fiscal fourth quarter because it was in the third quarter of the year prior, which just goes to show you how long ago that really feels now with everything that we've gone through. The company has given several updates with regarding its performance or rather its operations during the COVID crisis. And it is still looking at May 2nd as a potential reopening for the stores that are closed right now. But of course, it remains wait and see. Shares of Bed Bath & Beyond after hours are jumping higher by 12%, but we should note they were under significant pressure in the session intraday ahead of these results. Back over to you.
Really quick question, Courtney. For a company like Bed Bath & Beyond that's only doing online now and has all their stores closed, are they able to fulfill online orders at the normal speed? Are they able to get the inventories and the supply that they need when they don't have their stores up and running?
So that's a good question, and we should just add as a footnote, about 175 stores are open because Bed Bath & Beyond, remember, also owns Bye Bye Baby and Harmon. So those are sort of essential stores under what is allowed to be open. So some of those locations are open, but the mainline Bed Bath & Beyond, most of those stores are closed. Now, with regards to the online operations, I mean, truly, it just depends. I mean, the company is doing its best, as are many others, to fulfill those orders, but they also have to undergo some of these new safety measures at the distribution centers when it comes to things like social distancing. And so you may have work that's a little less efficient. You may not have the amount of employees able to come to work at any one time. And then, of course, who knows what happens once the packages are actually out the door en route to delivery with the backlog of the delivery carriers that we're experiencing. So it's a long way of saying they're doing their best. Of course, they're not able to use stores for fulfillment with the buy online, pick up in store if those are closed. So that's sort of another rub to the system.
All right, Courtney, thank you. Up next, we will ask the CEO of Hyundai North America about how the coronavirus is impacting auto sales and the company's move to make payments for some drivers who have lost their jobs during the outbreak. We'll be right back. Welcome back. Retail sales in the U.S. suffering a record blow in March, plunging 8.7%, biggest decline since 1992 when the government began keeping track. Motor vehicle and parts sales were hit particularly hard, down more than 25% from February to March. Joining us to discuss is Jose Munoz, Hyundai Motor North America CEO. Jose, thanks for joining us. You know, that 25% number could have been worse, except for first few weeks maybe of March, where people were maybe still buying autos. What is that number going to look like in April?
Well, good afternoon, and thank you for having me. Well, indeed, you're right. So after very strong January and February, March started also strong the first 2 weeks, but then the last two were really, really very, very tough. So it looks like the month of April is going to be somewhere between minus 60 or minus 80%. The beginning, we thought it would be minus 80%. The latest news we get from J.D. Power is that maybe it would be down to minus 60. Very, very tough environment.
Jose, of course, we all understand the typical relationship between price and demand, but in this extraordinary economic environment for what is a big ticket item, of course, as a
All right, guys, what's going on? What's going on? All right, so I had to finish my little late lunch.
You back over?
Yeah. So got me back temporarily to finish my little lunch and discuss some business with the IBA. Game planning for the evening here. For the most part, I guess, what little bit we got left. But as I saw a very interesting close, as we know it was going to do that. People are like, well, what do you mean how you knew it was going to do that? Well, we know the market. Right? Anytime you have a run up like that, that was strictly a bank move to bank off that liquidity. And they did just that. They ran it up off that liquidity from the Fed, then they sold it off. So as y'all was hearing the CNBC commentator speaking about how institutions like Goldman Sachs, how they make a lot of their money, do it through what? Fixed income and equities, equity assets, kind of like what I talked about earlier. And lo and behold, again, ran up, they sold into it, bada bing, bada doing. So they're taking advantage of the opportunity to, again, eat off all this new liquidity and free money that's coming into the market with a straight face. So again, that's how this game works. It's no, however you look at it, it's no moral aptitude that you have to follow. It's about people who are trying to, take advantage of the system. All right. I mean, you guys literally heard the gentleman from the Cheesecake Factory owner, right? Or cheesecake business owner, I should say, speak as if, hey, this is how I'm trying to, basically, get over on the system. Right. I'm gonna take this small business loan, and I'm gonna furlough my workers, right? So they can get unemployment, and he gonna sit on that money, right? When he's supposed to be obviously following, the rules in terms of how they have that set up, where you're supposed to, do it a certain way. All right. So again, people doing what they got to do. All right. Whether you say, well, man, that's messed up. Well, again, use them the same way they're trying to use you. Now, if those employees are coming out on the back end of that taken care of, then okay, yeah. If not, then yeah, he'll snake, obviously, because again, he's setting a false precedent, even in terms of how they're being able to accept it, right? And or look at it and be like, well, yeah, hey, you got our back, right? So I'm pretty sure he sat down. I'm thinking he did and discussed it with his employees exactly what he was going to do, and then he executed, based upon that, right? So very interesting. Again, watching all that unfold and seeing how these people again do business. All right. So again, that's a part of what we say every day. No one has any particular moral strings attached to it. They just see some clauses. They get lawyers to get on top of that from a legalese perspective and see if they're going to be taken care of, and people can't come at them, fall to government, even though the government will still try to come at you if they could, even when you follow their so-called rules that they did not necessarily write thoroughly. Right? They try to penalize you after the fact. But ordinarily, if you're, again, doing it as they discussed it, they got to let you roll. They got to let you roll, right? They got to let you live, as we would say, right? So whatever the case is, we'll see how it all unfolds here, based on, again, a lot of people being able to get those small business loans and then, be able to work them, right? To be able to use them, thoroughly and work them in their favor, as we would say. So, yeah, so that's just how that's, again, they say that's how the game goes, right? That's how the game goes. Right? Everybody is playing, playing to win, so to speak, and taking no favors, right? In between, they're just trying to survive, as they see it, dealing with this whole coronavirus situation. And again, it's funny when you listen to people like Josh Brown, which I'm always, sometimes I'm like, yeah, you're on point. Then other time I'm like, man, what this joker talking about? This little greedy joker. All right. Again, they have clients, they have people they have to answer to on the Wall Street side of things. So they're always going to take a bullish disposition, even against the contrary aspect of what the overall macroeconomics may look like. But again, they do also get a lot of inside information a lot of us don't. Right, so they know how to play until, just like we was talking about, like when the banks obviously know how to essentially get some of that federal injection money properly in a way where they can set their positions up, knowing that those swaths of cash are coming in, and then they move on it, right? Again, no, hey, whatever they like, but you don't have that luxury. Again, you don't get a chance to get that inside information, so you're kind of stuck trying to, for the most part, again, trying to time this market, and nobody can right now. I don't care how you are as a trader, being professional, whatever, you're stuck like everybody else in a lot of ways. In some cases, unless you really do have those people you can rely on to give you forward-thinking information or forward-looking data that others are not privy to. And that's who's winning in the market right now. Again, this is where again, when we watch that capitalism documented, where those type people end up benefiting more so than the average retail trader, me and you, right? They wait for these moments. They can't, they live for these moments, so to speak, because they know it's a bag gonna be sitting there waiting. Again, if they just follow suit, shut up, and just listen and place their bets, so to speak, quote unquote, place their bets, right? And here you are. I mean, you up, you're studying, you're checking levels, you're drawing lines, you're crossing numbers, you're doing all this stuff, and yet it's all pretty much up in the air. Even though those numbers may check out, even though the charting may checks out, you still cannot compete against people who have, again, a incendiary motive to cheat the financial markets in a way where it's legal, right? Where it is legal, right? They can get away with it and benefit, greatly off the backs again of those who are, the taxpayers or whatever the case like that. So again, it's just part of why I see it as a moment to really sharpen in on your peripheral skills, the dexterity in your fingers, how to think on a dime, use those greater, what they call those natural talents to your benefit, right? And being able to execute in moments, just like an athlete. Again, you have seconds, to make a decision. Sometimes you have seconds to make decisions, right? You're that kind of athlete, right? And again, from there you benefit, right? Or you do what you need to do. Again, the markets are kind of set up in that same fashion. If you are, again, day trading it, when there's a lot of liquidity in play, right? A lot of price action, as we call it, and opportunity, laid before you. So you need not feel any kind of way about it. You just say, well, hey, where can I find some alpha, some yield? If it's too, shaky for you, too risky, do not invest in it. So we always say what? Never risk more than you're willing to lose, right? Never invest in something that you can't necessarily quantify through the what, why, where, and when reality, right? What you're trading, why you're trading it, where to trade it, and when to pull the trigger, right? 3 of those questions have to get answered before you take that position. If you can't, you can't square that algorithm or that equation, don't take it, right? Don't chase it. Don't try to prove a point that you think you could be right, even though it's still a form of speculative value. However, it's better to feel confident about a trade as opposed to, you just basically guessing, right? Throwing all caution to the wind. And sometimes, again, like I always say, you can't strike lightning, right? Sometimes you can strike lightning and, you come out on top, right? But that's just not a thorough game plan, day over day, in essence, to how you should consider trading the markets, right? Especially investing, obviously, but trading it, definitely, you have to be a little bit more thorough in your research, right? Because again, I mean, as you can see, this is my after hour scanner popping up here. And so this was that big run on the day that put up over what? Well over, it ended up being, I think, over what, 25, around about 23, 25, 20, 2,300%, somewhere around there, 2,300% on the day, up here at the very high. So you're talking about, again, roughly about 2,300% in one day. Stock went from, again, $4, $3 or $4, all the way up to 134. From $3 or $4 all the way up to 134 in one day. Matter of fact, in a matter of, let's see, 1 o'clock. See, we're talking about roughly about what? 10:30, 11:30, 12:30, 1 o'clock, what, about 4 hours? Somewhere around there, close to about 4 hours. 3 hours and 45 minutes, somewhere around there to be exact. in that little bit of time, you put up $134 a share. Again, on 2,300% move, something like that. So basically $10 buys you 2 shares. So 10%, excuse me, $10 times 2,300%, that's $230 times 2, right? Times 2. So roughly close to that of $500. $10 brought you close to about $500. Right? Let that marinate. Let that marinate. $10 brought you close to $500. All right, that's your extra stimulus money, right? Your extra stimulus check, as they say. Right? And I'm looking at here after hours, or it's actually to the close, it pulled all the way back to the teens. Right? Showed you it was gonna pump it. I told you those who get shorted down are gonna really eat off of it. In case of point, look at this big red candle here. Look at that big red dragon right there. It dropped from 112 all the way down to $31. Imagine those people that was late to the party getting out, that bought in up there above $100. Doof, pump and dump. What it is, doof, pump and dump. This why you don't chase things that you have no understanding or clue about what you're chasing. This is why, again, Wall Street has no chill. I keep reiterating all that in a way where it's it's like, man, it kind of seems scary. Well, that's the whole mentality. I'm trying to save a lot of people mentality that maybe come in, with smiling and everything, and again, think they could just beat the market just because of this and that. No, it don't work that way. I'm always going to give you that point of saying it's like that kind of very, a strict parent. Like, no, don't do this, don't do that. No, don't do this, don't, but obviously in a loving way. But I'm always going to put that energy out there first, so you can be always cautious, right? Because when you're cautious, you make better decisions. When you're not cautious, you throw caution to the wind and you think you can beat the market just because your dollars are magical and everybody else's dollars are not. That is the wrong perspective. That's how you get beat up, right? That's how you get beat up in this market. And again, I refuse to be irresponsible. It's not like y'all paying me anything, right? Besides those who buy my mentoring scenario, but out of that, I have a responsibility if I'm going to be online speaking this stuff to make sure I lay it all the way out, right? The good, the bad, the ugly, right? Because again, there are going to be people who will come into this industry or this craft, and they're listening to some of the advice or the opinions. Obviously, in this case, my opinion, because again, I'm not an accredited broker. So everything I'm offering to you guys right now is obviously my opinion and my opinion only, right? As down in my description box, I have my disclaimer down there, right? But for the most part, I am trying to be, again, forward thinking and forward looking and trying to get people not to fall into diverse temptation, right? Because again, this was that scenario today, and we talked about it when it broke, when it broke out and the stash stepped all the way up from $4 up to $134. Right? From $4 all the way up to $130. Right? That alone, again, gives you the kind of mindset to say, well, man, if it's popping like that, man, every day could possibly be that way. Well, it don't necessarily work that way. It does not necessarily work that way. Right? It comes with understanding, again, what, where, why, why, where, and when, what, why, where, and when. What you're trading, why are you thinking about trading, what makes it, why you find that, why you think you can find some value in it, whatever the case, where you should be looking to position, and then when you pull the trigger on it. All right. So just putting things in perspective. Again, a small little criteria, right, that you hold yourself to when you go in and out of these different, assets. Be it long term or short term, does not matter, right? Either of those are just as important in terms of how you should perform a natural due diligence properly, to protect your capital. So this was the pump and dump on today. Stock didn't even put up 1 million shares. Matter of fact, hold up, excuse me, is that you, Rona? Nose hair. Watch out, Rona. I knew I just had to go out and get something to eat now, but I was covered up. Face, mask, everything. Arm. Don't play with me, Rona. Don't you do it. That's just the dust. Nose hair. But anyway, No, but seriously. So again, you have to be cognizant of that. So when you see these moves like that happen again, you know, like I'm talking about this stock in particular, you have to be able to check off those boxes. If you see it to be just what it is in terms of somebody coming in the building. 1 second, guys. Hold up. Okay, Chris coming back in. All right.
My bad. Elva.
No, you good. You good. All right. So when you see these kind of moves happening again, hold up, wrong. When you see these kind of moves happening, you'll know exactly how to position yourself. Because if you are going to run it, when we say run it, because these are what they call runners, right? So if it's a relay and it's all about who can get in and get the baton, right? Get this guy get out, this other guy pick up the baton, his share, he run it up a little higher, take his little profit, he pass the baton to the next guy, right? Then that guy run up a little higher, right? He passed the baton to the other guy, and the guy that gets the baton right here at this point, right? And it's extended the way it is, right? What you see here, the RSI at this point was well up over near 100. The 97 on the RSI, crazy overbought. He know he's on thin ice, right? He know he has to take that last leg to the house, right, and cross that finish line properly. Because if not, he gonna trip down, fall down. Somebody gonna run over him, whatever the case, and he can get stuck with the paddy wagon, right? Right, big red ambulance coming through to pick him up, right? All that what they call training and all that he did to get to this point of the performance day. And he ended up faltering, right? He fell down or something happened, tripped on himself, whatever. Shoes came on loose, whatever. Right. So you don't want to be this guy that was buying in up here and it went up and hit 130, right? And then he didn't take profit. Right? He didn't take profit. And then again, the stock got halted on the way down. And now he's stuck. He's stuck here. So he had to have a market order ready to rock soon, as it got unhalted. And when it did, what did it do? It went from 113, right? 113 all the way down to $31. Look at there. Look at that. That's the part of this, where you gotta understand what you're dealing with. So you don't come in here thinking you can just, do whatever and it's just gonna be okay. And so these are the moments where I always tell people, you see stuff like this here and you don't know how to understand it, leave it alone, right? It's better to watch it and observe, eating your popcorn, even though somebody making a lot of money, that's probably it. Again, those are risk takers though. Let them throw that dice, right? Let them throw them sevens out there, right? Let them get out there and do what they got to do, right? But again, the lesson learned is more so that you preserve your capital and you got your nice little lesson how pumping notes work. And you know exactly how to deal with a scenario like this when you see it happening in real time in the future, right? So again, that's why this stuff is important. So, but yeah, so you got some after hour runners here. You got this RCUS. Let's pull that up a little bit. All right, I don't know the news on that. I haven't even got a chance to check. Typically, when I see it run after hours, I instantly go jump into research mode, right? I go pull up, if there's an earning. If those are kind of news that came out, I go check what does status look like in terms of the technicals on FinViz, float, shares outstanding, institutional holding, market cap, debt. I try to do a quick scalp of news on it. And if it's, everything seems to be pretty decent, if it's worth a position, I will. But if it's overextended at this point, I leave it alone. Right? If it's just not enough meat left on the bone, I just leave it alone at that point. But again, you got this one here running after hours. So if anybody got the news on RCUS, Arcus Biosciences, obviously it's a stock they're having to deal with biotech, right? It could be either a coronavirus play, it could be an earnings play, it could be a cancer play. Again, anything that has to deal with biotech, right? It could be any one of those, right? Corrective surgery to some degree, whatever. But it's running here after hours nicely. Again, up here roughly about $6 a share. Up around about near 40% after hours, which is a banger in terms of a nice little profit bang for those who got in. Right. Again, we just talked about we slightly talked about DYNT, right? Dynatronics, right? CP, right? It's banging after hour. I mean, look at this pattern. It's just establishing itself, it's trying to get get some feet underneath it. Right. So we got a nice little gap up here again from 76 cents a share up to 99, well, basically up to $99, excuse me, $99, 99 cents. Man, my mouth been all over the place. I'm tongue-tied like a mug. Just finished E, I guess. All right, but anyway, it pulled back, pulled back to about 87 cents a share. As you can see here, the red volume detailing, people obviously kind of wrote that first initial move. They're taking profit, which you should. Again, that's a quick little pop, right? You're talking about near 25% on that little pop alone from 76 cents up here near $1, right? Took that profit, right? Probably got bought back in again. Again, that's why you say wash, rinse, repeat, right? Bought again around this 86, 87 cents mark, right? Establishing nut. This build up in the volume coming in, because look at the volume here. All that right there was new money coming in, or a little bit of the old and the new mixing. Went up and printed a new high. Went up and printed a new high, right? Round about what? 102, right? Couple cents higher than what the previous 99 cent candle off this one here. Pull back again, right? Presented actually a higher low, because this is the low, the higher low off this move, right? There's your low, right? Let me see if I can okay, let me see if it'll work. Okay, here's your low right here, or I would say your higher low. All right, come on, man. Oh, come on now. Come on, buddy. Oh, no wonder, because that's up. Okay. Come on now. No, I didn't. Anyway, this thing is retarded today. All right, no worries. No worries. Let me see. So I'm just trying to draw a line there so you can see it, but it's acting silly today. All right, no worries. Or you might just be me, who knows. But anyway, again, establish a higher low there. All right, let me pull it back over here. Went up a little higher from that point, because now it's sitting at around about 88, 89, right? Which is obviously higher than this, what, 86, 87. Even if it's a penny, it doesn't matter, it's still a higher low. And now it's ramping up again, basically in essence to try to see if it can take out the old highs, right? Which is this point here. Or not, it'll just continue to bull flag, because it's still in a bull flag pattern. Any way you look at it, it's still in a bull flag type of pattern here, right? Because it's setting up, you can see here, or a bull pennant, however you want to look at it. But it's not, from that point, obviously not from the point of high up here. Now it's from this point. So you'll draw your angle down from there, from that little top of that little wick, down to this point here, the top of that little green candle there. And you'll draw the other one, obviously coming off the bottom of the higher low pivot point, right? And that'll be a kind of a base point of a wedge to see how it breaks from that point. If it breaks and push higher, or if it just fails, runs out of gas and kind of do it back down, back down towards the 85 cent level. And then from there, if it doesn't hold there, then easily it can trend back down to roughly around about 78, 80 cents. All right. So again, just, but right now it's moving pretty decently. It's moving pretty decently. All right. So whoever got the news on that, definitely post that in the back chat, right? So everybody can kind of see the value of how you do a quick little due diligence and research on it. All you do is just type in DYNT, right? And then from there you go start looking for what news, reels, anything that just came out like just after hours, right? Go to Twitter. Twitter is another good place to check these stocks, because again, obviously I use Twitter for investment stuff. I don't use Twitter for all the other stuff, but that's just me. I'm always going to drop some news on my little Twitter page, or surrounding some stocks or some economic information, or just some information that we need to be paying attention to anyway. So, but yeah, Twitter, you can always go on there Twitter and look up these stocks, put in your $ in front of that ticker symbol, and then look for the most latest news on it. All right, look for the latest news. As a matter of fact, let's see if we can do something to just show you exactly what I'm talking about there. 1 second. Let's run over to I got a Twitter page open over here. All right. And this is funny how I was going to speak on that this evening at some point, but we already kind of passed the move on that. So let's go put in DYNT, right? Twitter, right? Look here, 26 minutes, sweet above $1. A's, tweeted this afternoon. The pattern remains me. Right. Sun, it was the one that ran yesterday. Remember we talked about that one basically. And guess what? Bang, let's see, friend. Okay, he talking about a whole lot. We all over the place with it. So hit the latest tab, right? The latest tab, and here you go, right? $1, huge move on news and update. Could see $2 aftermarket or pre-market, right? Dynatronics, Bird, and Crown manufacturing team in Minnesota is proud to produce double and triple layer non-surgical masks. Here we go. Coronavirus. What was that song that little ratchet singer she made? Everybody was singing that trash.
Coronavirus.
Yeah, you know what? How she said? How I go over? Y'all know the power.
Get real. You better get real.
Coronavirus. I remember I heard that mess on Facebook. The 1,000 miles from my past. I said, "What is this?"
Cardi B.
Yeah, you know how they call you gotta put like some drums behind it. That's all it takes. The song could be ignorant as all outdoors, right? But if that beat on point, you in there.
Yeah.
That's all you hear in there. That beat that got you in that rhythm, that frequency got you. Coronavirus. And look at that. They little stop pumping that thousand because they did what? They producing the Donald Trump again, Bird and Cronin manufacturing team in Minnesota is proud to produce double and triple layer non-surgical masks. Because y'all know even more than the N95 mask, what's the most second used thing right now in terms of what these nurses and doctors and people out there, first responders need? They need those surgical masks, right? That's the second biggest inventory item on the books that are very, very readily needed. Because again, the average American are buying them too, right? Because they can't get their hands on N95 masks easily. They have to resort back to using what? The surgical mask. When I was out today, when I was running my errands, I had to stop by the post office and go, before I left there and get my food, right? I go in the post office again, ground zero number one. That first time it scared me up out of there. And as soon as I get in there today, again, it looks a lot better. They got the big plexiglass at the counter tables, at the front of the reception desk, and then everybody had on the surgical mask, right? You had the patrons in there. Some of them guys had on N95 masks and all that stuff too. But again, these surgical masks are easier to get than the N95 is what I'm saying, right? So this company is going to produce a double and triple layer non-surgical mask to support our healthcare professionals and facilities in these difficult times. So they're making them strictly for what? That government grant money, right? That government grant money. They didn't say commercial. They said what? Professionals and facilities.
Yes, sir.
They're going strictly to what? Those states that need those surgical masks. And hey, we got boatloads of how much, right? It's government money anyway. Buy it. If you don't even care what the price is, buy it. So you can see it right there as this picture here. That's what a triple layer surgical mask look like. Again, it has those ventilated looking little layers there to kind of protect against when a person sneezes and spew all those little water droplets or vapors out there. It helps a little bit. Right? Again, it's not an N95 mask, but it helps when you don't necessarily have a whole lot of something. Right? As you can see here, this is actually the company now. This is the company themselves that put out this press release. So this is not even a third party. This is the company putting out a press release. Right, as you can see here, what time? 4:15 p.m. 4:15 p.m. They dropped that news and the stock took off from 76 cents all the way up to over $1. Right, so again, this one you might want to keep your eye on tomorrow if you ain't thinking about touching this afternoon for whatever reason. Say you should put out a press release to the public tomorrow morning regarding this info because they know if that come out, right? Because a lot of people ain't seeing this right now. A lot of people have yet to see this news. That's how the market works. A lot of people have not seen this news. It's not like they posted it all over everywhere. They posted on Twitter off their business page, which is the first place they probably went to. Their business page probably here and probably on their Facebook page. And they probably have not done what they call an official press release, where people like MarketWatch, Ben Singer, all these other little new insider buying, investors.com, all of them pick up on that publication too, CNN, whatever, because they probably got to pay to get on them slots there. But either way, it's probably just now starting to circulate. Right, and so that's why again you're going to see a few people even commented on it, right? So this is kind of fresh off the press, even though we're about near an hour after it dropped. The stock has responded, but again, a lot of the investors who may think about seeing this as a good opportunity to get in Well, they've yet to kind of probably discover the news, right? Because you see, congrats to who called it at 70 cents. You know, get ready, bulls. Well, possibly get ready. You'll see, because it still might sell off. Right? Nothing is guaranteed, no matter if it's, you know, this kind of news or whatever. You know, you still have to be, you know, pretty much, you know, safe and understand what you're doing. Right. So again, just while we are over here, see, there's LTRPB. Let's see what they've been talking about over here, because you know this been a pump it down. So this, when I say, you know, people out here getting it in, look at this joker right here. Right. I guess he traded the he was in, I guess apparently he was in at roughly around about near $4 and some change. This is what I was talking about. Right? He said this morning it could have had I don't know if he said I could have, but roughly had you at roughly 24,000 right now. I don't know. Whatever. So either he was watching it or he didn't buy it. That's what it was. He was watching it, I think, because I don't see where it shows his count if he had position on. So he was watching it, saw it gapping up and then trade. I guess what he's saying. Because if you would have put your stimulus check into it this morning, you could have made 24,000. That's what he's saying. So I get what he's saying. So some people traded, some didn't. Again, that's how this stuff works, right? You know, whatever. You know. And then I guess he showed the before and after picture when it was up here, like I was showing y'all earlier too, when it went up over 104 from $4 and change. All right. So let's see if anybody caught it and posted any of their, you know, their gains off of it. Again, it was a banger. It was a banger. All right. Time to sell. Somebody just posting how the chart moving up, whatever. All right. So not necessarily, but somebody caught it, right? Somebody was brave enough and got in it, right? He got here like, wait, what just happened? That guy like, man, what? Again, just showing the movement here. What caused it? See, people trying to figure out where it came from, what's going on. But it's always going to be one or two people that actually caught, and it was probably part of the pump and dump, right? Right. They probably was a part of the pump and dump. Nonetheless, again, somebody benefited from it. Right, somebody benefited from it. Right, somebody trying to figure out that tomorrow might be interesting. Right, so they think about taking a position here after the fact. Now, thing already made his move. Probably gonna sell out tomorrow. Right, probably gonna go all the way back down to $4 tomorrow. Who knows? Right, it's a pump and dump. Right, just kind of checking real quick, see if anybody caught it. Right, because you know it's always one or two of them out there to catch it. Right. Yes, look at that. All the way to 134, all the way back down to 18. And now here it is again after hours, a little bit up here near $40 a share. Right, but it started at around $4.57. Imagine that. Again, some of you guys had $4.57 sitting around in your couch or your cushion, or out there in your change pouch inside your console in your car. You could have bought you one share of that baby, right, and then rolled out. Right, got you a nice little stimulus check. Right. So again, I don't know if the news on. Let's say, okay. Let me see. Copyright. Yeah. So they're not recent. So they're saying correction. Limited investment was from March 16, not recent. Oh, so I guess somebody was trying to verify some news on it. Right. So I don't know what that's all about, but either way, again, this is the kind of stuff that these are the treats. These are the little nuggets of opportunity that happen in the stock market. Like, man, see, this is what it's all about. Just being in a position where you could have taken advantage of it, right? That's a part about it that gets exciting. Right? Somebody here might be in the game. I don't know if they're lying or not. You know, they say swinging from 1650, aiming for 50 first. Right? So if they did get in and take it, then again, kudos to them. Right? From 16 to 50, if they didn't sell out then, if they did sell out, that thing went up another what? $50 and change. $80 to be exact, and they probably would missed that opportunity. So, yeah. So, them lesson. Okay, yeah. So a lot of people just looking. A lot of people just looking. Right, up 9,000. Playing. Yeah. Pump my blood today. In 100 shares at 75 and out of 95. So somebody bought in late in the day at 75 and got it at 95. So they picked up, quick little what, $25? Excuse me, $20, and they were out of there. Right, 100 shares at $20. You can do the math on that, right? And as you can see, he's showing you here on this P&L, his statement where, again, he picked up, again, a couple $1,000, right here. You see, he got this, he's posting this, his receipts. I just picked up a quick little $1,000 right here. I ended up the day up $9,000 here on the day. Commission fees.
Trump check.
Say again, fam.
Trump check right there.
Yeah, that's a nice little Trump check there. Well, I'm telling you, again, go back to Pops on Friday. Yeah, maybe that's a little substrain for a little piece of change right there. That's a nice.
Right.
That's a nice bag. Again, you can make. I show people that. Yeah, a lot of people still learning this, but it ain't hard to make 10 grand a day. It's hard, but it ain't that hard to the point where if you have the right, mindset, the right account, leverage account, the right schematics, the right study habits, the right opportunities when they present themselves. This ain't far-fetched, because I always tell people, and Chris can back me up on it, he's still getting to the point where he's mastering this stuff in his own way too. Right? There's no cap on the amount of money you can make. There is no ceiling on this. It can be infinite.
Facts.
Right? That's what this stuff is all. Look at this AMD trade. His AMD trade, he picked up near $6 grand on that one. Right? Using what? Again, margin. Right? He on a margin account. So, getting that 2 for 1, whatever. Right? CHK was another one, right? Short selling it, right? We already knew that was going to dump. I missed this one too. I was going to short CHK. They did reverse split today. And that thing was up over $20 reverse split. And I was like, God, dog, this one ain't going to be. And I got busy and got to doing other stuff. And I missed. Again, you can't catch everything. But the ones I did trade out, again, I profited off of them. I was an APA oil play. I bought puts in that, and shorted into it. All right, took a little bit off, left a little bit in, ran back up, middle close of the bed because, you know how Wall Street is. They don't have no chill. But that was a great short today, right? That was a great short today, right? So he shorted it down basically from the area I was talking about, maybe the 20s and whatever, all the way down to the 16s, I'm guessing, no matter how many shares he had short. But he picked up near $6 grand on that trade, right? So he had two big bangers, $6 grand trades today. Again, he gave some money back, but that's a part of the game. It don't matter what you give back. It's about what you lock in. And if what you locked in is more than what you gave back throughout the day, that's that's what matters at the end of the day. That's your talent, right? But that's the ultimate understanding of what day traders do. We're looking for opportunity out there every day. And so what? Yeah, you give a little bit back. No one likes to do that, but in the midst of that, you still walked away with about a 10 grand bag. You ain't arguing whether or not that's a bad day.
Thanks.
Oh man, I gave back like 4,000, man. I gave back about 6,000, man. Man, dang it, nah, bro. But you cleared dang near, almost 10. Right. That's one of them American Airlines pilots, half of their salary right there.
Right. Right. Exactly.
Right. Them jokers in the shit.
They donate plasma.
Right, giving up blood, selling food, probably on the stroll at night, all that, whatever, sell everything.
Right.
You know what I'm saying? But that's just the reality, man. Y'all know how this stuff is. Y'all know what kind of world we live in. And people had a big misconception about thinking airline pilots, getting it in. Only those season ones are making somewhat kind of money. All the other ones, man, you might well come out better. Now you probably get a better pay working at Waste Management. You talking about some flying a plane and put yourself in hazard and jeopardy, all that. And they talking about gonna pay you, $20,000 a year. Man, you must be out your man. Look.
Crazy, right, right.
So then that's just a part of how part of the game, guys. So, but yeah, just kind of looking at this one again. So just kind of showing how this thing just ratchets up there. You got a person here looking at it. Right, everybody's kind of checking it out here. These little plays like this right here. These type little plays. But yeah, but Twitter is a really, really good instrument if you are going to keep up with stocks and stuff like that. Okay, I know some people use it for other stuff, entertainment. I use it for this kind of stuff. So you can put in any ticket up here and get information on it. Again, you can this one that just running right now, RCU, right? I think it's what RCUS. That's what it is. Okay. All right. So let's see. Yeah. So this one running right here now after hours, right? Arcus Bioscience, right? So you hit the latest tab, you see Market Committee. I'm actually an affiliate of that company, Market Committee. I forget to keep posting my affiliate link, but anyway, really good options platform, app that they have over there at Market Committee, right? And the guys over there. But let's see, Arcus, right? Gilead, Arcus, 29 minutes. Let's see what the news is. Hidden wave of tight interest. No. Okay. Open phase still because okay, so Arcus is now trading at 1.1 billion market cap on Bloomberg rumors of a potential Gilead deal. There you go. So obviously Gilead being a bigger company, Gilead is obviously in the mix of trying to find this new so-called quote unquote corona therapeutic or virus vaccine. They're thinking about what? Acquiring this company right here, Arcus. So obviously Arcus has something that Gilead can benefit from within their portfolio, right? And because of that, again, it's up well over 51% here after hours. This news is probably already forewarned to a degree. Some people already knew about it. That's how you got to study the game. If you learn how to study the game before thinking, you find new plays like this. All you need to do is hear some rumor about it. That somebody's thinking about buying this, that, third, because they'll leak some of that information. Before you know it, you start building your position. As soon as the news become a little bit more relevant, it drops and the stock does what? Up 50%. Right, and you done front loaded that thing with hundreds of shares. So that's what this is all about. It's a forward thinking process. I used to be big on biotech stocks when I first started. I still mess with them here and there, but that's just the game. You have to be really read up. You have to be studied up. So phase 2 open to evaluate 2 combinations of this A1, excuse me, AB 154 plus Zim is whatever you see it there versus Zim mono. So it's some kind of I don't know if I guess it's dealing with the coronavirus. It's either therapeutic or obviously it's a therapeutic. I'm pretty sure this probably is a therapeutic over it being necessarily a vaccine, right? So this is just something like a mitigator, right? Keep people from getting sicker and try to give them a little bit better health, right? So you can look this up, though. Look up this drug and see what it is and what it does. So Zimberelimab, whatever, right? Zimberelimab or Zimberelimab. Let me say it what it really is, right? So I don't want to be butcher people words and they look company. The drugs, it's monotherapy. But yeah, so that's how you look these things up. Okay, so Twitter is your friend now. Twitter is really your friend now, right? Start your investment page, start your even new Twitter account, and keep it strictly for what? Investing purposes, right?
Right.
That's how you separate your business from personal. All my stuff that I have when it comes to investing on my business page stuff is separated from the business. That way I can always keep up with it and keep it categorized so I can always be on top of what information when it drops and comes out. Right. Yeah. But that's it. So
I'm
guys,
on Twitter now more than Facebook.
Right. You know what I'm saying? Because Joe could be working over there on Twitter. Facebook, you got to surf through all that, people posting all kind of everything, right? So it makes it for a better working environment because again, you can come on here and look up any ticker, any stock, you get a lot of good real-time news when it drops too, a lot faster than you'll get on Facebook or even stock twists, any like that stuff because it's dropping it again in minute time frames, and you own it, seconds and stuff like that. Excuse me, you just you get a chance to get on it, you own it. So that's what it's all about. So again, DYNT running after hours. RCUS running after hours. Let's go back and check them out, see what they're doing. Yep, see, there we go. So like I said, see, it went up and made a new high. We just talked about it. Look what it did. Right? Higher low, higher low. Kissed the 50-day moving average. Volume came in. As you can see, very spotty here, but that's volume. Got above the 20-day moving average, which is this blue line. And what? Went up there and made a new high at 107. And right now, again, it's hitting some resistance here. Look at that resistance there. Straight line resistance too. Because right here, look at that point down that wick right there. 103, right? That's why it's kind of tapping up against it here, right? It's putting pressure on the bull, or excuse me, the bears that's sitting there trying to short it at what? 103. That probably got short up here at 103 and got around about 102, 103. And they're sitting there holding, right? Trying to hold the line and short it. And they about almost close to getting ran through here. The way it's looking like, they probably gonna get ran through. It already made a new high at 107, 108. It can easily get back up there and run, some more from there. Again, up 32% here after hours. ARCA still holding its gains up here near 49%. And then again, this LTRPB, right there we go. That joker still ain't dying. Well, that joker here don't want to die. That's like one of them type of bulls. You got to hit it about 80 times for it to actually die. You can hit it with a shoe or broomstick or brick, and it still ain't died. Right? That's exactly what this stock doing. It is not trying to die. So apparently somebody's scalping here after hours, or they're trying to do what they call a bull trap. Right? Get some new money to come in, run up just a little bit to get them excited, thinking it's going to go back over 100, or those who got caught up there above 100 or $70 a share and then take profit, got caught in that downtrend, dump. They averaging down right now, right? Some of them probably averaging down. That's what's probably happening too, bringing the stock price up. So it may run again. Again, it may very well run again, right? And if it does, again, well, you say, well, what's the use case in terms of where it can go? Well, we know, it could easily, and let's say just kind of use the chart here. First major point of resistance it has to clear. Let me see. Is right here around about $48. It had to clear that resistance first. And then you have some resistance here around about 52. Then after that, you got some major resistance sitting up here near 59, 39, 59, or $60 basically, right? Because look at that flat top breakdown right there, flat top breakdown. You got flat top breakouts, and you also have flat top breakdowns. This is more of a flat top breakdown, obviously in this case, but so that's major resistance to the upside. So if it clears, those levels I was showing you here, and gets above that, then it might be money. They might can juice it up and run it. You know what I'm saying? Run it on up a little higher. Right. So as of now, again, it's fighting here around this little channel here. You see it's in a little channel here, about 39, 38, and to about around there 44, 45. All right, just trading inside this little channel here, just kind of tick-tacking back and forth. All right. Now you can look at that and say, okay, that's still bullish off the lows. Yeah, of course, from $15, yeah, it is. $15, $16 off the lows. That's a nice little $30 move off the lows, just like that. But again, the volume is still weak and spotted, but it was like that all day. But either way, if these people who are still in it that was trapped up here, or the people who coming in after the fact thinking they can, get a chance to do the same thing they did yesterday or today, obviously run it up. Well, that's the gamble that they're gonna have to deal with, because it's obviously a gamble. Because I didn't see any definitive news on this company going through it. I have to go back and double check, but no definitive news why it's running. There's probably some news out there on it though. It probably is, but I don't know. But again, looking at that move there, bruh, that's a bag there. I mean, I've been in plays like this before. It ain't like it's nothing new to me, but again, just being able to explain it to you guys and be responsible about it. Right? Because if I was just like, oh man, this is awesome, look, and then you get all excited, right? You get all amped up and you go out there and try to, get in it. And this thing, it's down to $11 tomorrow. You're like, man, you told me the thing. No, I ain't tell you nothing. Right? No, you can right? No, you can mention yourself that you want to get in. I didn't say nothing. So, you gotta be over, because you all been there when jokers, you been in some of the rooms, them big corp rooms. I was excited, man. You need to buy this stock, right? You need to buy this stock, right? You need to take this here. I will buy this stock. That's why you'll never hear me. Y'all will never hear me ever tell y'all to buy a stock ever. Right? I'm always gonna give my opinion on it, and I'll leave it at that, because that's not responsible for me to tell you just to buy a stock. Again, especially if you don't really understand what you're doing and how you're looking at it, and you just buy it up the stream because I'm discussing it. And if it don't perform, you be like, well, see, look at that. It's your fault. No, it's not my fault. Right. All these are just observation. Again, just talking about the stock load it went right to what? $45, like I said, and then it did what? They count right there at $45. All right, so it's trading right in this little channel right here, back and forth. And if it don't break out of here, again, it has to break out of this $45 channel and then go up here and test this 48, like I said, after that. And then it has a chance to get up here and test this 52, right? Right around the 52 level handle, right at this point where the 20-day moving average crossed below the what? The 20 moving average. If it does that, then again, you can start, finding yourself back up to this flat top breakdown, at what, near $60. All right, so as you can see, look what it's doing, pinging back and forth. 45, back to 43. Right? And over here on the other side of town, right, this one here still holding up a little bit. All right, but look at this one here now. Look at DYNT. Now you made a new high. Another new high. Went up here and kissed what? 111, 112, or 111, somewhere around there. Off again, just printing what? Higher lows. Look at that chart. That's beautiful. This is what you want to see right here. This is beautiful. So when you see this here, you don't get nervous. Right? You got to learn how to understand. When you see that there, you don't get nervous if you feel confident in the way that the chart pattern is showing you the strength. Right? Right? You see there? Kissed the 50-day moving average. Went up here. Came back. What? Kissed it again right here. And went up there, made a what? New high. And going higher, actually, right here. So going to take out this 111 potentially and make a new high. Right? Now here's where you got to do your, what do you call it, your backtracking. Look where this stock came from. Look where this stock came from. It was trading roughly up here around $3.64 back on what? February the 28th. It sold off, right? After all that, sold off, came all the way back down to like 71 cents a share. Look at that. At that point, it was trading at around that same point. Last year, December, it was trading at around that same price, 70 cents a share, somewhere around there. Right? And then a little further back, look where it came from. Look where it came from. Right? So it was highly, highly what? Oversold, even though it might have ran on the first initial news of this coronavirus, because this company obviously has something to do with that kind of, schematic to help, in something, in this case, again, the surgical mask. Not only if that's a staple product or it's not, but either way, when they first got wind, because I remember seeing this stock, obviously gapping up before, again, around, into February, right? All these little stocks, you've seen it once or twice, you're like, okay. So it gapped up before, went from like 80, 90 cents a share, all the way up to $3.67. Big bang of a move, over 300%. Right? Pull back, solid, pull back, fill the gap. Remember I talk about how things have to fill the gap? From that point there to that point there, it kind of slightly filled it here, right? Went up again a little bit more, came back and filled it all the way to this point here. It filled the gap, and now it's right back knocking at the top of that gap of the door, right? At this point of the stock, in terms of looking at the 50-day moving average at this point, look where it's sitting at. Right at the tip of it. How about that? So again, if it gets above the 50-day moving average on this chart here, right, on this chart here, then what? It has a good run up to like about 127, 130. And after that, it can get the moving, right? It can get the moving from that point. Now you can go and practice, take out all these little points right here, right? So very, very interesting. I'm gonna put my headphones on because about to get a little loud in here. But that's basically how you perform or you look for, those opportunities when they present themselves, right? But you're just trying to find what?
Right. You try to find those opportunities, right, to get you some, put you in the game, right? So easily to be able to watch it, easily to be able to kind of monitor it. As of now, again, it's banging up against that against the 50-day moving average at this point right here. Breaks that again, you got some good air and opportunity again up to that level. 164, 170, from around there, right? 160, 195, obviously $2, and then from there, 262, 250 area around there, right? But again, it was at a major oversold territory. So now this is the point where I say, when you just starting out and you knew, if you did want to speculate, these are pennies on the dollar, right? This thing was literally 70 something cents, right? 71 cents a share. This is where you speculate, right? Let's say you got $5, right? Or $10, even $10, $5, $10. You throw $10 at it, right? Speculate. Let me see what this brother talking about. Let me do some research on it though. Again, don't just come in trying to think you're gonna buy. Do some research on it, right? See what's going on. What do they do, right? Go back, look at the previous chart history, see where it came from, right? See where it came from, and say, okay, man, that thing was left for dead. Obviously, you would say that out the gate, it's left for dead. Oversold down here, And now it's catching the bid again because it just dropped that news, considering that they're gonna what? Push those double and triple layer what? Surgical masks out there into the what? The healthcare professional facility. So major news. Right? Major news there. Right? And before you know it, it's starting to what? It's starting to get some new life now. So obviously it's a former runner. So anytime you see what they call a former runner, that means that's a lot of air and opportunity for the people who might have been bag holding that still probably still sitting in this thing up here that ain't sell their position yet because they want to take that loss, right? They waiting on new money to come in and what get it back up there so they can what, close out their bag. And if the volume keeps up, if it just runs like that, then guess what? They run out and take out, possibly take out and make a new high, potentially. But that's one. If you say, okay, I do the quick research on it, I see they just they dropped news tonight. I speculate on this one here. $5, okay. That'll give me around about what? 6 shares, somewhere around there. Right? You buy 6 shares, all right? You get up about what, 30, 40 cents a share, right? Potentially what? Potentially $1 a share, right? Up here above what, 150, right? On them little 6 little shares, now you got $6, right? You paid 10, you walked away with $6, right? Now you walk away with 16 altogether, right? Run a little harder, right? Get up there near that 180, right? 180 $2, right? Now you're talking about, right up there near, $10, $12, pretty much over 100% of your investment at that point, right? So you pretty much doubled that $10. Now you got 20, right? Take 10, put it in the shoebox, and go back to work with that 10 again, right? True story. Right. So that's how you, gauge this stuff and how we work. Right. What's going on, family? I'm just not seeing the back chat. Y'all know I'm over here grinding, so I can't see the back chat because I have opened up my phone or my other screen over here to the side. But what's going on over Brandon? What's going on, family? What's going on, family? And Lady Neek, what's going on, sis? Right. Peace, power, profit to you. Right. Peace to you as well, sis. What's going on? Again, over to you. Yep. Hey, what's going on? What's going on? Oh, that over Chris. I'm sorry. That's my was on. I'm sorry. Yeah, power and profit, y'all. What's going on over Marcel in my hotel? I see you in the house, family. That's what I'm talking about. Getting this information in, right? Love it. I said 10% of my first decent bag and being donated to over 80. That's how I roll. Hey, man, I'm here just to do the will of the people. And I say the people because I know one thing. We don't have people beating down our door to show us this information, right? Again, I do offer a mentor and service where, people do pay for my time basically in that point. But I'm always going to be a cheerful giver. I use that's about the only thing I take out the little book, right, and put it out there because when you do offer it in that perspective, it comes back, right? It comes back, right? It comes back because you get better, in what you do too, right? Because this is a scenario where I don't own it. I don't get to set the terms. See what I'm saying? I can't make the prices be what they're not. I don't get the chance to do anything with that reality, right? So it's just like the same like I was telling you before. When I wake up in the morning, cut my computer on, I see the same charts that Warren Buffett sees, right? I see the same stuff that he sees, right? Right? Or Paul Tudor Jones, right? One of my so-called mental mentors, right? Right. These guys, again, they get it in, especially Paul Tudor Jones, right? So I just see this as one of those scenarios because again, people charging for this. People got chat rooms that they charge for this. I'm not lying. And I'm not saying that to kind of make you feel some kind of way because I don't do that. But people do charge for this. They charge you to be in these rooms and they'll just do this kind of stuff all day. Break down chart, show you the stuff, how to look at this, how to look at that, this, that, the third. No. Right. See what I'm saying? So, we do this on the house because I want more people to get excited about wanting to learn how to go get that bag. Because if everybody got a nice little bag and learn how to get a bag, they ain't got to depend on Mr. Charlie. Well, that makes your environment a little bit better, right? Everybody ain't running around stressed and pressed, right? It alleviates a lot of the stress that people dealing with anyway. And then you can make more positive moves together in a group setting, even individually, doesn't matter. But people are less stressed when they got a little bit more extra money in their pocket, right? And it's just one of the ways to cut out the middleman and go straight to what? Straight to the source, right? As they say, when they go straight to the plug, they bypass the middleman, go straight to the plug. Where the plug at, right? Little right, what they call little Raphael, somebody he round the corner, didn't even know it, right? little average joker. Then you got all the goods. Yeah. So that's it, guys. But just another way to again another way to look at it. Again, another way to look at it. All right. So again, this little start banging up here after hours, and like we say, we're looking at these here because these are the top top three after hours. You got one kind of pulling up here in the back end, which is a PULM. I've traded this stock here plenty of times. Pullman something, I forgot the name. Pullman. What is it called? Palmatrix. Sorry. Right. It's a little biotech company too. It's up roughly about 20% here after hours. This stock here has a bad habit of not holding its gains though. I've traded it plenty of times. Right. So as you can see, it went from 160 up to 213, 214, 215. All right. It's a nice little move there though. Nice little move there. Again, roughly around about what? Closer 20-30%, somewhere around there, give or take. Right. So again, we'll see what this is all about because you can again do your research on it the same way we just kind of showed you how to do the research on it. Go see if there's any news on this company here, Palmatrix Incorporated, and then there you go. Then you have to go back and check all the schematics, the fundamentals, right? Run over the FinViz and see what that's about, right? And then you kind of go from there, right? Because yeah, FinViz is a stock. Matter of fact, I don't know if I showed that one. I think I have. Let's see. Well, I mean, I've given away so many things. Sometimes I get sidetracked. Like, did I ever show that one? But FinViz, this here, man, this site here, it's that money right here. Right? This that money site, as they call it. Right now, they got a paid service where you can get all the other stuff, but FinViz is very, very useful. I mean, I started out in the game using FinViz, years ago, and it's still what it is today. As you can see, a very technical lading instrument, right? The stuff it gives you data values, right? Rolling information that comes out in terms of global industrial numbers or whatever the case in that nature, right? It breaks down again a lot of different things, certain companies and aspects, in terms of people buying shares and selling shares, CEOs and companies, insider trading. It breaks down the futures numbers, crude oil, natural gas, stuff like that. Again, very, very, very useful instrument. So let me go and post in the back chat for some guys. But I've posted it before, but some of you guys, like I say, are brand new, right? And you learning. So let me drop some of that beautiful bean footage on y'all real quick there. There you go. Hold that right there. Here, hold this right here. I'll come back for it later when you took it into the next level, right? You take it and take it to the next level. There you go. That's what it's all about. Right? Go out there and be better than anybody that that's out there. But this here, kind of gives you a breakdown on exactly how to really get some good technical and fundamentals off some of these stocks. So as you can see right here, just putting it in context a little bit, it's showing you what, up, down channels, channel up, channel down, double top, multiple top, right? Some of these stocks hitting those certain points. Those might be what stocks of interest. You say, oh, it's at a double bottom. So typically you get a double bottom. What happens when you get a double bottom in the stock? Chances are it'll bounce, right? It'll bounce to the upside, right? More than it's typically bounce to the downside, but that's not necessarily always the case. But it just says, hey, look at this, because now it's at a double bottom pattern. Multiple bottom, head and shoulders. You know what a head and shoulder mean. Show with that song back in the shoulder lean. You get that head and shoulder lean, that ain't good. I'm gonna tell you right, head and shoulder pattern, that ain't something you want to be in. To going to the upside in. All right, you don't want to be getting all excited about that one. Because head and shoulder mean obviously what? Dump time. That means it hit certain points of resistance, couldn't push above it at the highest peak of the head, came back down, had another shoulder point where it kind of trended around that same level, couldn't break that resistance, old resistance that became support, now resistance, right? And from there, if the volume died off the last big major move from the head, that means it's gonna obviously people getting ready to start to sell it. And that when it just goes down, right? So head and shoulders is never a good thing, right? But again, trend line support, trend line resistance, horizontal, right? Strength, support, resistance, right? That's kind of like a washout to a degree. Wedge down, right? Y'all know about those wedges, right? Wedge down. So really, even you can click on them, right? You can even click on them. It'll just kind of show you exactly what it's talking about what a wedge is. So when you see a wedge like this, what do you see right here? Right? You see some massive, higher lows off the massive, top point. It came back, somewhat filled the gap. Well, it didn't really fill a gap. It had a gap down in this case, after a big major move up, because it was a strong move up, it didn't really do a lot of gapping. So that's solid. You see that, but it still has to kind of pull back a little bit and reconsolidate. And that's basically what it's doing. What it's doing. It pulled back and had a nasty gap down, probably on some bad news, right? These little biotech stock. QGen, that's a biotech stock. Seen it many times. It hit a trend line point, and guess what? Look at that. Tap. Let me get this mess out of here. Tap, 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 right? Held it, right? Again, higher low. Well, in this case, again, off the top, off the bottom, obviously, but higher low, higher low, higher low, higher low, right? And now it's consolidating at a point where it's trying to get ready to try to break out again and run and take out this previous high, if it possibly can kind of pull it up, pull it off, right? So again, you're talking about roughly about $43, and it's now sitting at 40. Right? And so again, obviously this was the coronavirus, or not necessarily. That's not even coronavirus, because right here, this is back in December. Take that back. So that's not even back in December. So coronavirus hit around this point here, right? And it didn't even sell off a lot. It really didn't. See, from here to here, and it actually gapped up, and then came back and filled the gap. Came right back down, and now it's marching here to kind of potentially go out there and take a new high. So a wedge pattern in this case can definitely be bullish with all the other key fundamental signals behind it to say this is a buying opportunity. All right, so just like that, it just gave you a breakdown on what this is, and basically what to look out for when you see a wedge pattern. Triangle descending pattern, right? When it's kind of breaking down like that, right? Triangle, and it's going to be like a downward move. See right here, right? Nasty little move up here, spike up, came back, right? And now it's kind of spotty down here, testing this level of support around about this $7 or somewhere around there, right near support actually. And potentially get ready to try to break out eventually again. Triangle wedge to the downside, that's potential breakout pattern to the upside. If the volume in the news kind of holds this level of support, it'll come right in and make what they call like a U-shaped bottom, 5-10 bottom, cup and handle, and raise back up and go up. But it has to have some other things in place before that to happen. It's not a guarantee. News, abnormal volume coming back in, right? Left for dead a little bit, so oversold, right? Obviously coming from a point like this, you can see it. Eventually it's sold off. Came back down to earth, filled the gaps all the way through from this point here. Bounced, went up and hit some resistance a little bit over $10, right? As you can see there, that wedge from that point to here, that level of support or resistance from that point there, right? Cross level of a divergence here, right? To the downside, obviously gapped and came back down. Right? Got below its moving averages here, as you can see here, the 200-day moving average, or the 50-day moving average, excuse me, and then the 200 moving average down here. And now it's just sitting here waiting to kind of get some more new volume, new energy, new news, whatever. If it comes, it can easily get back up to $10. So that's how you can start planning for a $10 potential move. At this point, $7.25, you pick up near $3 a share. You have to sit in it for a minute, but you still have to make sure that everything else about that company checks out. If not, don't touch it. But that's just showing you that's a particular triangle or falling wedge pattern. Falling wedges also mean potential rounded bottom. The support holds, if it holds, and then it rounds back up and goes back up. Right, quick little lesson on that. Right, triangle wedges, descending wedges, head and shoulders, support resistance trend lines. Again, we talk about supply and demand all day. Trend line resistance, trend line supports. Again, you can just come in this stuff and come in here and just play with this stuff. Over here, but you got top losers, new low, right? New low meaning they haven't been this low in a long time. Well, obviously JCPenney, because JCPenney getting ready to do what? Roll on up out of here. Right, about to play the Kenny Rogers song. Got know when to hold him and know when to fold him.
Yeah, it's a wrap.
Yeah, JCPenney, ain't no coming back. And they were trying to come back. True be told, they had did some restructuring, pulled a late minute deal, the CEO. And they were trying to come back. The series they got JCPenney got all the way over $1. They were banging a little bit, and then coronavirus hit. It's out of there. Because they've already bought a lot of money. They already was in heavy debt, right? They was on their last little wild card. They used it, it was working, but they didn't have enough time for it to unfold because the coronavirus came in and daggered all that.
Yep.
And that's a part of the game. So guess what? They don't get a bailout. Let that marinate. They don't get a bailout from the government. And if they are going to get it, we'll see how that works out. But they already got so much structured debt I don't know what the terms will be, right? If they see there's any level of solvency left in the company to get equity out of, because it's already what? Heavily in debt, right? If you just throw it a grant like the airline industry, you'll say, okay, well, but they'll look at JCPenney as what? A non-essential, right? Because it's luxury item, it's it's clothing and stuff like that. It's not essential items, right? Even though clothing is essential, and whatever, but it's not like that essential. But they'll say again, a company like American Airlines, they're just reckless and greedy, which they were, buying back shares, doing all that kind of stuff. They had their first hand, had their hand out, and guess what? Trump instantly threw them a bone because he in bed with the airline industry CEOs and board of directors. Right. Those are people who supported his president campaign. That's why he kept talking about on the little press brief. We got to bail out the airline industry. We got to bail out the industry. I mean, he did dog whistling to the airline industry. We got you back. But then you heard the guy Scott Wapner say what? We got to bail out everybody. It ain't their fault. Did he not say that? Right? You heard Josh Brown today talk about or the other guy Steve DeGrasso. Oh, we got to bail out everybody. Right? It's not their fault. Well, it wasn't JCPenney's fault. Are they gonna get a bailout bag? Right? So I'm just saying, don't let these people, blow smoke. I'm always gonna keep saying, don't let them blow smoke up, right? So look at downgrades. AMC got a downgrade. This is the movie company, movie theater, right? AMC Entertainment Holding. They got downgraded today. It was already trading in the peanut level, so it sold off because of the coronavirus from around about $7, near $8. Came all the way down to about $2.41, bouncing around that point now, and it got downgraded, right? But today it's supposing it got lucky and picked up 10% on the day, but it's about left for dead at this point too, right? Again, we just saw what Bed Bath & Beyond. They had earnings tonight, right? Here we go, earnings after, meaning earnings after the bell. This was news that came out early, so it trended down around about 17% on the day. And then after hours, obviously, it's kind of trending up because they kind of barely beat, but necessarily didn't beat. It's one of them scenarios, right? And they're just trying to save it, right, from going any lower. So sometimes you have a stock that barely beats, right, or don't even beat, and the stock can still go up. You're like, well, how is that even possible? Well, because a lot of these big greedy institutional hedge funds are already underwater, and to keep it from going even lower underwater, they do what? They buy in it at that point. They do what they call dollar cost averaging in to get the stock up off the lows. Even when it had posted, raggedy earnings. That's how the game works. Again, you can't, that's how it works. All I can say. You're dealing with a dirty game. It's insider selling. Look at that. Take-Two Interactive. This is a video game maker. Take-Two Interactive software. Some of you guys know what Take-Two, some of the games they make. Matter of fact, I think that's the company that make they make like I think they own Grand Theft Auto. Those kind of video games. Take-Two Interactive, right? Because you got Activision, EA Sports, and you got Take-Two, right? And then also Tencent, that's the Asian side, but those are your video games. And then you got Nintendo. Nintendo is a publicly traded company too, right? So all my gamers out there, you got Nintendo is publicly traded. You got EA Sports, Electronic Arts. You got Activision, Blizzard, and then you got Take-Two, right? And then from the retail side, you got what? GameStop, right? GameStop out there, those kind of plays, right? And then you can say Microsoft, because again, Xbox, but Microsoft do so many other things, right? They got all kind of money, long money. But that's all your gaming plays right there. Right, quick little rundown on those. So guess what, guys? You love them video games. You're gonna keep buying games up, playing $40, $50 a pop. Might well invest in some of these stocks.
Right. Easy access.
Right. You know what I'm saying? So just real quick, just run over here to this stock we were just talking about. Again, since we on here, we're gonna break it down, then we're gonna get on up out of here. So that stock right here, Dynatronics, whatever it's called, right? Got that news tonight on them what? And, double and triple layer surgical mask. The stock was way down here, oversold. It was in oversold territory. Right? It was sitting down here in oversold territory. Right? So all this right here, this is stuff you need to learn. This is how you improve your fundamental skills and apply it to technical skills. Market cap, they got a market cap around about, and these numbers could be off a little bit because again, this is not, the most intricate. When I say intricate, but it's not the most self-related data point for this point, because it probably haven't factored in all the news from today, right? This is just what it was like today when it first opened up. Then tomorrow it'll change to kind of reflect, you know, everything that happened this evening, whatever, too possible, right? So, but as of this morning, it was at what, $8.10 million market cap. Income about a -170, so they was in the hole just a little bit. Sales to book, obviously, turns at that point, 61 million to $1.23 per share value. Cash per share value about 0.4 cents. Right. So again, you know, small little operation, obviously, when you see these little scenarios like this here. But again, 269 employees, so they're actually a real company, right? Because sometimes you see these companies like this right here, and they have like 2 or 3 employees. You're like 2 or 3 employees, and they got a market cap around about, you know, 10 billion, 11 trillion. Like what? Everybody in there making well over you know, $1 million salary. What y'all running over here? A racket over here? What this? Like movie How High, and but like, what about your employees? What about your employees? Man, this ain't no employees, man. We pimps over here. We don't have employees. So they got, at least they got 269, so they got some bodies to take care of, you know, so they solid. You know, in that perspective, not to mean that they're a good company because they got employees, but it just says that, you know, they're trying to run a real business. Right? So price per share again, 13 cents. Price to book, 61 cents. Right? Price to cost ratio, 2025. You know, future cash flow, right? Future cash flow. You see that LCF? That means that's future cash flow, right? Price to future cash flow, $4.76. Quick ratio, debt equity, late to debt. I mean, all this stuff here. This is good news. Good things that y'all can research. Cause all you have to do is plug it into Google and do you a quick little query on what these little terminologies mean. Current ratio, quick ratio, and you learn. That's literally how I learned. Not making this up. That's how I learned. I just went to Googling everything. Kept listening to CNBC. Kept listening to Bloomberg. Kept listening to all these little TD Ameritrade news reel. I mean, it's so many of them out there. That's how you learn. Again, you know, by following the news. Or following, again, these different target points, and then you go from there. Earning per share, next quarter, earning per year, earning per share next year, earning per share next 5 years. So yeah, forward thinking, forward outlook, right? Earning per share, forward looking aspect in terms of what they think the company going to be. Look at this here, -20 at this point, right? Negative point, -08 at this point here. Next year, next quarter, you know, only -0.05, but this year, earning per share this year, 60.6% to the upside, green. And 40% again for next year, particularly on that point. All right, it's coming off of what it was then to where they have a forward projection where it could be. Right, in terms of what the actual numbers are, I should say. Excuse me. All right, so again, I'm not gonna sit here and go through every single part, but that's a part of the game where you gotta do your research too. Then if you come back and ask a question, we'll break it down. Right, but just giving you some understanding what some of this stuff mean. Right, earnings, obviously simple. You see SMA, obviously these your moving averages, where the stock is at in relation to its what overall moving average. So the simple moving average at the 20-day moving average aspect is down 19% from it. The 50-day moving average is down 32% from it. The 200-day moving average is down what? 32.68%. So you got a 50 and the 200 that's already getting ready to cross. So typically when you have the 50-day cross over to what? The 200, that becomes a real aggressive signal. Right? Some people call it, you know, different crosses. You got golden cross, death cross, all kind of stuff like that. Hinting to that. I'm hinting to that. So now y'all can go research that. What's a golden cross? What's a death cross? Right? So research moment. All right. For some of you guys that's new, let me post that. You got to understand, figure out what's a what? Golden cross. Right? And you also got a what? Death cross. Right? That's some research for you. Hint, 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 hint. Wrote a song about like here it go. Right? One of them moments. Right? Y'all gonna get this work today. All right. So again, insider ownership, that's important, right? How many people that actually work for the company own their shares? Y'all remember we heard that sound bite when I played it last time with Scott Wapner. He was challenging Chamath Palihapitiya about, you know, well, what about the employee? They own some of the shares too. What you mean they deserve to get wiped out? And he's like, what? People that work at the company barely own what? 100, maybe 100 few shares, 1,000 shares. People that only come to the pretty much what? Institutional owners. So people that work there don't really own the shares of this company. How many, you know, the insider ownership is in this company? Only 16%. I mean, that's pretty decent. It ain't bad. It ain't a lot though. So that means a lot of people in the company don't even trust the stock to that degree, but they own more than most companies I've seen. Some companies that have insider ownership, they be down like 2%, 5%, 7%. At least they got 16%. So again, they believe in what they're doing. So guess what? If this thing ever take off, which it could, because you saw right here, there, from that, look at that move right there. If these people hold them share, guess what? It is at 71 cents a share. If you work this company, again, just understanding how to invest too, might have been buying a boatload. They probably get their share at par value, meaning they get voting rights probably and all that, or they get to come in at the par value if the company release it to them just because they're employees. Par value means basically they get to get in at the point where they became almost an IPO. So it may be like 0001, right? 001, $1. So, well, obviously a lot lower than that because the price down to 75 cents. So they probably coming in at the par value around, like I said, around about 0001, 001, so around there. All right, so that thing move up again, 50 cent, dollar, whatever, they finna eat all that up. And the stock can easily go back up to what, $3 in there, 60 some odd cent. Right, so again, insider transactions, right? If anybody's selling insider institution, now here's what the institution at. See, institutional ownership. So that means like your BlackRocks, your Vanguards, your JP Morgan, your TD Road, your Ken Fisher House, all the people. Institutional ownership only 6%. So that's not necessarily good. But guess what? That ain't necessarily a bad thing either, because they can't really manipulate and control the stock. Because that's who typically manipulate and control the stock. Stocks that have a real big institutional ownership, right? So now at least the retail owners, meaning you, I, anybody else that decide they want to get in it, if you see value in this company and want to hold it for a long term because you like what the product that they're producing, if it's a long-term growth particular play, you hold this stock and you obviously get to dictate how the stock moves. Now, what's interesting about this stock, I'm going to move into that area in a minute, but I'm going to talk about it. So insider, institutional transaction, so that means if they're buying and selling, right? Return on what? A, return on E, return on I. That's your research. That's why I'm not calling it. Go do your research and figure out what it is. I'm already scrolling up, so you know what it is at this point. All right. Anyway, return on asset, return on equity, and return on what? Investment. Right. There's a difference between all three of those, but that's a research moment if you want to learn how fundamentals work. When you need to understand what is the ROI as opposed to ROE as opposed to ROI. Your investment obviously is more natural to what you guys might already know just from being, smart wizard people when it comes to financing. That's the return on your investment, bar none. A block understanding, return on investment. Return on equity is another aspect, right? That's another aspect, and return on the asset is another aspect. Gross margin, right? Operating margin, profit margin, payout, simple whatever. We talk about that. Shares outstanding. Now we're gonna get good. Here's where, when we say the float, right? The float, right? Shares outstanding, outside of the float value, floating between the assets that institutions that probably had it before, stocks, stock offering, stuff like that. You have an outstanding cash of shares sitting out there. These are the type of shares that, again, and some companies that got it like that, when they say buy back shares, they'll go back and buy the outstanding shares that was obviously bought by institutions at some point through a public offering, whatever, and then went back to the to that outstanding value of shares that were allocated for those kind of offerings or whatever, as opposed to what the actual flow is. So that's a difference, right? That's a difference. That's understanding when you start understanding what shares outstanding is as opposed to shares float. All right, so that's a research moment for you guys. Research what shares outstanding is as opposed to shares of the float. But this float here is very low. Anytime you got a float, especially under at least under 10 million, I think that's really good. But we got floats out there that's in the hundreds of thousands. They mean that if the float so less, that means it's a what? It's a very potent potent combination of potentiality. If anybody buy the stock, it can easily shoot up. Right, so this one here is not bad for a stock that's sitting at around 70 cents. Typically stocks at 70 cents, 60 cents, they have a float around about 30 million, 50 million, 100 million, right? Because they did so much dilution, right? Inflation in their own company to the shares of the price are not worth a whole lot. In this case, they've been managing pretty well. With a float around about 7.39 million, might be give or take a little bit, because again, y'all know what I say about the data on this, but it could be off by point some odd thousand, whatever. But either way, that's still a decent float, right? It's still a decent float, right? So this baby here can move, basically what I'm saying. So if abnormal volume come in, which we're gonna get to that, if abnormal volume comes in, it ain't far-fetched, hard to say, especially after it being oversold, like you see right here. This thing could easily bounce, and what? Again, you saw what it did this day, right? Them couple days, it went from $1 up to $3 and some change, over 300%. it could easily do the same thing. $1.50, $20, you know, 80, $2, you know, whatever. On what? On some news. Float, short float, right? That's how much shares that's shorted by the short sellers, right? 1.38% of the float. So basically 1% of what? 7 million is what? Right? And that's how you look at it, right? From that perspective of particular float value, right? Meaning if everybody bought the entire float, that much percentage of it is owned by the what? The short sellers. So the short sellers pretty much had left it for dead because they what? They shorted it down already. That's why you don't see a lot of big short entries in it. They did all the shorting already. They shorted from here all the way down, all the way down, all the way down. You know, at some point you just cover it because ain't nothing else left, no meat left on the bone. You cover your short position and move on. Money made, money made. So the short interest is very low, right? So you got to go squeeze a ton of shorts left in it, but those who still hanging in it, they can still get squeezed too, right? And then what happened is they'll try to come back and short it again because it's moving again, and then that's when they get ran over because now you have all this abnormal volume coming in, and the stock just kind of what runs, beats on them, beats on them, beats on them. They can't hold the line. They can't hold the line like a tug of war. They let go of the rope. Guess what? Poof, you go higher. That's what the short squeeze is, right? So let's kind of get some understanding. So look at the target price. So the target price is at around about $2.88. So that's an analyst updated value of what they feel like the price of the share should be worth at this point. $2.88. That's way up here, right? Way up here around this point right here. Now it can easily run up there and get that, especially tomorrow, right? Some of these stocks that's running off the coronavirus news is up 500%, 300% in a day. It ain't far-fetched. Not saying it's gonna happen, but it could go up there and get that 288 tomorrow if they really want it, right? They're gonna have to really want it though, right? They're gonna have to want it, right? But that's just how this stuff works. 52-week range, right? 52-week range means exactly what it was. Where this stock was trading at within the 52-week range period. It had a low of 63 cents and a high of $3.70. That's a big move, right? You can do the math percentage on that in terms of, you know, if you bought in or around 63 cents or 70 cents up to that 3 cents in that first move, that's a nice little bag right there. Nice little bag right there. All right, so basically at this point, it's showing you what 52-week high is 79% or near 80% off its highs. Off the lows is up what 19%. So guess what? That's a good ratio. Meaning, if you understand this, what this means here, this is the type of ratio, right? This is the type of ratio that tells you that there's more what risk to the downside than it is what to the upside, right? So if you're still shorted at this point, again, ain't nothing, pretty much not any meat left on the bone. You really risking it at this point. So all the you know, the risk is not necessarily to the upside at this point, but to the downside because it's already at what near the bottom, right? That's a lot further from 79 cent down to 79% down to 19 than it is to try to move from 19% down to 0. If that makes sense, right? But the upside potential is what all the way up to that what 79% from 19, 20%, 10%, whatever where it came from, which we seen it tonight move well up on that news. Right, already up, you know, about 30-something% after hours. Case in point, right? Case in point. Yeah, still sitting up above $1 here, which is the hardest part for a stock to move when it breaks below $1 is to get back over $1 and hold, right? So if it holds above $1, that's a big psychological win. That's a psychological victory, right? We always short and buy at $half increments or whole dollar increments. You typically buy on the 50-cent hash or you buy on the whole dollar breakout hash, right? $1, $2, $50, $100, doesn't matter. That's a psychological barrier when people buy in at because that's how you count your money a little easier when you coming in with shares. Oh, it's at the 50-cent mark. Okay, I buy, you know, 200 shares, right? And whatever that price is at that 50-cent hash part, you can do the math a lot easier. So it's just psychologically easy how humans think, obviously in, you know, congruent with one another, and you know that's how things happen, patterns. Right. So RSI still looks pretty good here on the 14-day trailing aspect of the RSI relative to the sliding index strength index. Excuse me, it's sitting at around about 42.88 at 75 cents. Now it's up a little bit because of this move after hours, but still the RSI still means it has more good little room to the upside. Right. So if you think about where it's at 75 cents and it was at 42 cents, So in order for it to get up there into the overbought scenario around about 70 cents, a little bit over that, around 80, that means you have to at least double that price of what? 75 cents. So it could easily be up near about 144, right? 130, 144 before it really starts hitting some kind of real hard overbought scenario in a daily move that's real quick. So that means that's the kind of run rate you can look at in terms of a gauge to say if it runs to 140, 145, 150, then it just start hitting some resistance around that point, as you can see right here, right? 130, even 130, because you see around here about 120, 130, right? And then up towards 150. Then it might get a little stretch. You could take a little profit off the table at that point, keep some shares in it if you may have already got in a lot lower, and ride the rest up. If it breaks out and goes higher, you can add back to it again and ride it up even higher. Wash, rinse, repeat. Right? That's the game. Right? That's the game. Right? So again, 52-week low, we went over that RSI, real volume, relative volume, right? There's a difference between relative volume and what? Average volume, right? Right? So y'all need to look that up, right? That's homework, right? That's homework. Average volume, which ain't hard to figure out, to relative volume. That's why you only see what? 5.19. So there's something about that relative volume that you need to research. So average volume is around about what? 836,000 shares traded on a daily basis. Less than a million, right? I always tell people look for stocks at least a minimum around about 500,000. I used to say 250,000, but now for some of you guys, because it's hard for you to get out some of these trades because you might be kind of overly pressed in it or overly saturated, nothing less than 500,000. Right? You want, if it's trading less than 500,000, unless you like the stock for some other reason beyond just the volume and the price action, then again, hey, have at it. But outside of that, I wouldn't touch it. That's just me, my opinion. All right, look here, volume. Right, this is the volume from the other day. If the average volume is 836, and the average volume that came in obviously today or the last day or so is at 4 million, that means what's happening to the volume? It's starting to do what? It's starting to do what? It's starting to go what? Up or down? Which way is the volume going? If it went averagely, you do about 836,000, and today it put up around about over the last couple of days, maybe whatever, it put up about 4 million. What's happening to the volume? That means it's coming in, and if the volume is coming in, that means you what? You got new money coming in, right? That pretty much like if you open up a business and you might have been having like 10, 12 people come to your business on a day. Right, then you did some marketing advertisement. You got on your game and start Facebook spazzing marketing advertisement, right? And before you know it, guess what? You picked up about what? 60 clients now came through the door. 80 people start coming through the door. That's that kind of move. So if that kind of stuff is coming in the door, whether they buy some or not, a ratio understanding says that guess what? You're probably gonna end up making more money just for the fact that you had more foot traffic. Simple synopsis, not rocket science, not rocket science. That means the abnormal volume is starting to what? Pick up. And tonight with this news, well, what's happening to it? The volume definitely coming in, right? Because what? Now it has a what? A catalyst, right? What is that catalyst, right? What is that catalyst, right? Let's go look at it real quick. Where we said, look, it says $1.09, right? Look at the volume right here. What that volume say right there? Look at that volume there. And there's 6 million here already. And there's 6 million. After hours, it picked up near 2.3 million after hours alone. That's what? Over double the flow, double the average volume that it normally be trading at. Well over that, because 86,000 to 86,000, what, 1,000,006, right? 1,000,007, somewhere around there. And now you up near what? 23, so almost near triple. Right? Almost near triple the volume and average volume just in this one move alone. So that means what? Anybody that's sitting in there short, they finna get ready to get up out of there real quick. If they can't necessarily hold it down, they short position. They're gonna get ran through. That means more people getting attracted to the stock, or it's becoming attractive, and now it becomes a what? A potential breakout play, which we know the news that came behind it makes it more of a what? A new breakout play, obviously, from the point that it was oversold, which we saw back there, 63 cents, 70 cents, it broke out. And we kind of, charted some of those what? Those resistance levels to the upside, what they look like. And if it goes up there and touch those resistance levels and breaks through them, it potentially do what? Go what? Higher. Higher and higher. Y'all know it. All them type songs, that kind of stuff. Y'all get it. So guess what? It's trying to take out and make a new high after hours. Remember that the high is what? 111. It's sitting at what? 110. It's trying to make a new high. Right. So yeah, again, the way it's looking like and the way that the pattern look like, look at that pattern. Remember we talked about that? Look at that pattern there. That thing flagging real nicely to the upside. I mean, it's up there, but it's flagging. Right. So we'll see if it can, if it can go up there and what, make a new high, make a new baby, right? Make a baby. Look at LTRPB. It's up to $49 now. See, we're just in there talking about, I think around about what, 39, 38, pinging back and forth. And now it's up to $49. Remember I told you had to break above that 45? If it break above 45, then they might got something to play with right to the upside. It did just that. Look at that. It broke outside that channel. Look at that channel. Remember we looked at that? 45, 38. 45. Let me zoom in. 45, a 38. A 45, a 38. A do, right? Y'all remember that? All about the Benjamins. 750, right? It broke out above the 750 mark, right? Guess what? New volume came in. Look at the volume. The volume don't lie. Look at the volume. The volume is showing you right here. 454 shares came in there. 407 shares traded there. I mean, calculated trades come. Look at that. So yeah, let you know somebody trading this thing like with an algorithm almost. 407 shares right here. Somebody doing this purposely. Look at the volume. The volume ain't lying. 407 there. 454 here, and another 407 again right here. Stop. That's somebody doing this purposely. They pumping it. Obviously, it's a pump and dump, but they pumping it. It got up here and hit some resistance again. At that point, I was telling you around about what, 48. There you go. Spoke about that too. And now it's trying to take out another level of what? Resistance up here, right? It bypassed all that stuff around 48. Like I was showing y'all right here with this candle here. This is not rocket science. Showed you here. Now it's trying to take out what? This flat top area here, which is very small, but it's there. This point right here. If it takes out the $52 level here, right? If it takes that out, again, it could be free selling all the way up potentially, 55, 57, up to this point around about $60 a share. If it gets to the 59.28, and if it breaks that after hours, watch out. It can easily fill this gap and try to run and fill this gap back up to what? $74. Because right now, at that point, it's kind of seeing what? 55 or 59. Then right up here around about 66. After that, then you got about 73. Again, there's 74. So after hours is up. Again, up to $51 here, and it's marching. Got to ask somebody on the ask trying to buy something. Look at that. This guy right at the ask. $53. So somebody trying to get in, still up here at this price. They're trying to play this thing for potentially for tomorrow. Right? Unless they just riding it up after hours, then they're gonna sell all of it and dump it, right? And get out of there and leave everybody that's trying to play it tonight that came in late, holding the bag. So somebody calculative doing this. Somebody doing this with again, with an agenda in mind. Right? $52. Now you're at 52. Again, just marching up. It's just marching up here. Tick-tacking, 79 shares. Somebody just bought 79 shares, right? To push it up to $52 a share. RSI still looks pretty decent at 65. It can easily get up to around about 70 plus, 88 on the RSI before you even have some real turnaround, potentially. So there you go. So again, if you just scalping out the hours, you bought in at $38, look where you at now. You're almost up near what? 58, which, roughly about $6 away from 58. So roughly about, you can do the math on that, how much you're up about per share. Right? They go out a DYNT trade, still sitting up here at 110, banging up at 110, trying to bang out that resistance there, bang out the little short seller sitting up here trying to sit still on it like a tick. He dug in like a tick, right? They're trying to push through him. If they push through this guy here at 111, that short sellers there, those short sellers, it could easily get nice little squeeze and pop up to around about 115, 114, 115, probably even higher. All right, so right now it's like a chess game. Like they're sitting there kind of holding the gun line. Tell them about the gun line, boss. They're holding that gun line down. Right, that joker there, that's short selling right there at 111. He's sweating right now. Right, he's trying to come up with every excuse in the book why the stock should be selling off right now. Y'all know how they be. This stock ain't got no business being up. Why y'all buying it? Who buying in up here? Ha ha ha. They're gonna run right through that joker, run him up out of there. They're going to cover his short position. Get out of there. All right, look at that. There we go. They go LTRPB. Now it's at 53. All right. Let's see. Let's see if they want that action. If they want that smoke. because they tick-tack and buying it all the way up. But, again, it could easily turn around and dump. But, y'all know how the game goes. We just breaking it down, showing you how this stuff works. So now it's up 60% after hours. 60% after hours. 60% of a stock at this price, too. So obviously coming from that $15 handle, pulling back around about 38, 39. Again, right here, just think about it, when it closed up around about $33 a share. So now it's up sitting around about, again, roughly around about $53 a share. Roughly about, again, 60-something%. All right. So again, that's how this stuff works, guys. So let me go back to Dynatronics. So yeah, so that's it. So again, performance of the week. Look here. Now you're getting back to the performance, right? How well it's performing. Performance on the week, negative 2.17%. Performance on the month is down 21%. Performance on the quarter, 3 months, obviously in the quarter of the fiscal calendar, is down 31%. Performance on half of the year is down 21%. See, that's interesting because the quarter and the half a year mark, you see that the half a year mark is what? Is less than what? The quarter, right? Because that means they had a very, very rocket moment within the 3 month period, right? They had a rocket moment, which you see right here. Month of March, right here, it exploded. Right? On the 29th of February, March, somewhere around there, exploded up there. Right? So that's why that stat shows that performance on the year is down 61%. Obviously on the entire 52-week chart year aspect, right? From that point, when it kind of took off at the real peak point, right? And then you got performance year to date. Year to date obviously meaning the 52-week month. Excuse me, it's supposed to be a year. Year to date always means where is that, particularly from 220, right? 2020 year to date. That's what year YTD. Anytime you see YTD, that means the year to date. So the year is 2020. So from 2020 to where it's at right now is only down 9.65%. So basically looking at it right here, right when it was around about $1, and then down to 75% near the low 63%, it's down 9.65% off the 75% last London price that they picked up. Right, the beta, that's important, right? Now you're talking about the Greeks, right? That's a research moment. That's a research moment, right? Stocks with very low beta have very less volatility. Stocks with high betas, that means they have a lot of volatility. This one here don't really have a lot of volatility. It just kind of trades in a nice little channel. Know why? Because look at the volume. The volume is not even all over the place, right? So that's a sign, right? That's a sign. All right. So again, just learning how to, stay within the confinement of the data. ATR, that's very important. Average true Average true range or average trading range. That means it typically trades around about 22 cents on the day, up or down. That's how you can set your trade and knowing what you can capture out of a certain stock like this at any given moment if you get in at the right point. Support or resistance are roughly around about 22 cents. Not that it will do that every single day, but that's the average. Right? That's why I say it's average true range on a 14 trailing day standing metric. On a 14-day average standing metric, it can do about 22 cents a day up and down. Volatility obviously shows you the level of the volatility around about 10.72% to 19.96%. Not a ton, but that's still a pretty decent level, but it's a low beta, as you can see. Previous close, and now they're just talking about what it was yesterday to where it was today. So basically, all it did went from 73 cents to 75 cents. It picked up 2.74%. Remember, I told y'all when y'all first started really coming on and watching your brother. I said if you could just pull down around about 3% a day and do that consistency, what would that do to your P&L? You can grow it methodically and slowly. 3% a day. That's pretty good money if you come in with a decent. Let's say you can, again, $1,000, right? $1,000. If you can get 3% a day, right? That's $30. The first day. You go into the market the next day with what? $1,030. Get another 3%, and you can keep doing that, keep doing that, keep doing that, keep doing that, and do that time 252 days. That's allotted to you as a trader. What would that do for your bank account, right? Meaning your P&L. So small goals, small obtainable goals. Don't be trying to do 100% a day. Even though you see stocks run up 100% a day, you don't have to be trying to do 100% every day. You can catch them, but the goal is to learn how to crawl before you walk. And doing that consistently will show you how to be a better trader. So when those home run trades do come around, LTRPB, right? Look at that, up to $56 here. Look at this joker. Look at this foolishness. Look at that. It's up to 56 now. It's tick-tacking up. We just sitting there talking about it. 56, 54, it's pinging back and forth. Look at that. Squeezing shorts. And there we go on what? We just talked about it. There we go on what? On down one TV macho, if it break that 111, it can easily run up to about 115. I stand to be what? I stand to be what? There it is. There's my confirmation. I stand to be confirmed. It broke that 111 resistance. Them little shorts that was sitting there, a couple of them got up out of there. That's why you see the strength of that candle is what? It's beefy there. That green is beefy here. As opposed to this little small little slit here. It's beefy here because that was a major level of resistance. When that short covered, it squeezed up that additional what? It went from basically what? 108, 108, or I say the meter to the bottom of the candle. So 109 up to what? 112. That's a lot of money. Three pennies in a stock like this, that's a lot of money. Think about that. 3 pennies. 3 pennies. That means if you had 1,000 shares, what's 3 cents times 1,000 shares? 0.03 times 1,000. Right? Squeezed up there. That's a lot of money. So again, when you see stuff like that, that's exactly what's happening. So you have a nice little wick right here. So you got some undecided what? Undecided buyers here at this point, and undecided sellers. Right? Some of them probably taking a little profit. That's why I kind of pulled back and then kind of came back and made this little cross point here. Right? Which is a doji. Or more of a dragonfly doji actually. Right? Just like a dragonfly. Right? Tiny little head, wings at the top of the head, and the tail and the abdomen is long. That's basically what kind of candle that is. It's called a dragonfly doji. Homework moment. Right? Homework moment. Right? Some of you guys knew. Y'all working me, I'm gonna work y'all. All right. So research what dragonfly doji is, right? Y'all don't know what it is. Y'all gonna learn today. Right? Y'all gonna learn today. Yeah, you see my little dog? Yeah. Yeah, that's my little stock twist little mascot, right? Right. So dragonfly doji, that's your homework. All right. So let me come back over here. All right. Come back over here. Hold up, wrong. Yeah. So again, so it's pinging back and forth now at that point of resistance. Now old support becomes new resistance. So basically, it broke that level of resistance, and now that becomes the new support. Right? As you can see here, the stock is still staying above what? 110, 111. All right. Old resistance becomes new support. The meat of this candle here is up here, right? It's up here as opposed to what? Down here near 108. Now, it can easily come back down and feel that candle wick, right? But it's just saying as of now, they're holding, right? They're trying to take out this 115 level, right? Because you know some short sellers sitting at that 115 level too, right? So again, nice little case study moment here. Y'all watching this stuff happen in real time. Again, taking out some old resistance points. We kind of already modeled what it could do, can do. But again, you're talking about pennies on the dollar. Pennies on the dollar. Right? And you see it's moving here. So same way with our LTRPB. See how it's kind of keep banging up against the resistance here around $56 here. It's back up there again, trying to pierce through it. Somebody got $56 on the ask here. Right? So that means somebody trying to get taken out so they can what? Push it higher. That's a seller here, obviously, on the ask, and the bid is what? The buyers, right? You got a buyer sitting down here at $51. He's trying to get in a little late, right? He's trying to get it a little cheaper. He don't want to pay that extra $4, right? But he might end up having to pay it if that ask seller get taken out at 56, right? Especially with some volume behind it, it can easily squeeze and go higher and leave this guy trying to get in at 51 in the dust, and it'll force him to have to pay a little higher, right? So he got to make a decision, right? In his case, he got a feel, and now the bid dropped to 46, so now somebody want it even a little cheaper. That's how this stuff works. It's pinging back and forth, right? Now you got the person that's sitting on the ads. Now he got a decision to make, right? He got a decision to make, because if he try to sell and get out because he was already in, made a little profit, if he can't get that price to feel his ads, he might have to lower his price. Now he probably already in at around 38, whatever, because he might have got in early. right? He was just trying to sell it up there a little higher, right? Find somebody that want to pay a little higher. If they don't get it back up there, he have to lower his ask price down, what? A little lower, 52, 51, whatever the case. Right, and that's how this works. So it's just pinging back and forth here, as you can see here. People taking profit, running it up. RSI was kind of what not overbought, but it was getting close to it. So now it's back down to 49, 49.65. Right, and it's just pinging back and forth, as you can see right again, right back to $52. Right, crazy, right? That's how this stuff works. All right. So yeah, guys, just kind of again went through a nice little nice little breakdown there. Just kind of give me some understanding how this stuff works in tandem to being able to make it make sense, right? What these candles look like, what is this, what's this volume, what's these moving averages, right? What's this all about? What's the news like? How to apply it to a chart, how to apply it to the data, right? And from there you can take it to the next level. All right, from there you can take it to the next level. Matter of fact, I didn't even know that. I just looked at it and saw my sister live, right? My sister Monica, she live over there on the Dagger Squad channel. Let me run over there real quick. I don't know if she's still live or not. I just saw the little thing. God dog it. I just saw the notification from my sister. Again, if you haven't like, share, subscribe my little video. I rarely say it, but I want to get in the habit of trying to say it again because I think I'm working. Right, I'm working. I think I'm working for you guys. Right, it's up to y'all to say if I am or I'm not. But I'm trying to do what I can to help everybody out. Right, I'm trying to do my part, see if I can help. So I guess if you could donate a like, that's fine, right? Or if you haven't subscribed yet and think about subscribing to a brother, again, I'm a humble brother. I would definitely appreciate it if you did. Right, I would definitely appreciate it if you did. Yeah, my sister live. She's live over here on the channel. I'm gonna go over there and join her. I guess I'll stay live while I join her. I guess we'll do like a double whammy. Peace, power, and profit to the family over here. All right, let me type over there. Right, show some love and go over there. Be with my comrades, right? My financial warriors and financial warriors over there. All right. So again, I hope the information was kind of beneficial to you guys today. Again, kind of going through a little bit of breaking down what what to look for, what I look at, what you guys probably already look at too, right? And again, just making it make sense, right? Make it make sense. Again, what you can do on your own in terms of your self-research, your autodidact value will help you greatly benefit and learn this stuff a lot easier, right? Because you have to be willing to sacrifice, right? I had to sacrifice, trust me. My Eba will tell you, there's a lot of nights. I might have been down in the, in my office, whatever the case, all nighters. Like I'm back in college again, binge training and studying, literally all nighters. As you heard, Sister Camille talk about how, when even before I brought her in the game, how we used to get in, get it in terms of my old comrade. We'd be up all night, all day, wake up, with the chickens and been studying all night. But that was my level of the sacrifice, though, right? That was my level of the sacrifice, right? So again, just part of the game. Right? See, Sister Monica getting it in. You hear it getting it in.
Small business advantage, veteran-owned, veteran services and veteran-owned small business. I have three categories that I can qualify to go and become either a prime contractor or a subcontractor. So
I'm supposed to be working, man.
Now, I would go build my portfolio and go build my past performance on my capability statement and go after subcontracting opportunities. And I would take the 3% or the 5%, right? And then when I build at least 3 contracts and I take advantage of that subcontracting opportunity, then I have the opportunity to go after prime contracts because I have proved myself as a subcontractor and have the resources to do so. So what does that mean for you? If you're already established, you've been in business, and you wanna go after a contract, you wanna be strong, then you solicit a woman-owned small disadvantaged business, a service disabled veteran-owned small business, or HUBs-owned business who has these certifications, you put them on your bid as your key personnel or key subcontractors who will work with you, and it makes it much stronger for you to go after these contracts. And that's the source on the bottom. This is very important. This is where you can leverage. This is where you can leverage each other's business. This is where business teams make out. Because if you have a few businesses and all you guys together can make one strong argument to bid on a contract, then you want to make sure that each of you can carry this. So what do I mean by that? If I was affiliated with a construction company, and it's possibly maybe male or female, let's say it was a male, right? Then me being a service stable veteran on, or the woman on, I would approach him in that manner and say, hey, won't you allow me to do your payroll for you as a woman on business, right? 3% of that contract. I can cover all your administrative information for you, right? I can
What's going on, Sister Mo? Peace, power, and profit, everyone. Yeah. Can you hear me, Sister Mo? Mic check, mic check. Can you hear me, Sister Mo? Let me go here.